it does not look a pretty picture, where the indices are trading in the red as of now. The Hang Seng trading with cuts of around 0.7%, and the Taiwanese index also trading below the flat line. Losses also coming from both Japan as well as South Korea. The Japanese index, which is the Nikkei, is down almost 0.6%. The Kospi in South Korea too is trading with losses of well over 1% now, and it is the biggest underperformer across the Asia Pacific as of today's trade. And of course, seeing some profit booking from elevated levels, as Kospi has been an outperformer so far, gaining almost 35% on a year-to-date basis. Pull up the GIFT Nifty, and that will give you an idea of how our own markets are likely to start off. Well, no relief in sight as of now. The implied open suggesting a 42-point down tick after the 160 points that the Nifty lost in yesterday's trading session. Today, of course, happens to be the monthly expiry of all the Sensex related contracts, so we need to keep an eye out on that as well. But that's what we have on the global markets front, because the US markets were largely quiet all through yesterday's trade. And how would that affect our own markets? Well, our research team is joining in with the trade setup and of course the stocks that you need to keep an eye out for in today's trading session. But you know, it was yet another day of losses for our own markets, and the Nifty, after seeing a bit of a recovery at the earlier part of the session, it was a very volatile session, but eventually ending close to the lows of the day. Now, the last three sessions, the index has declined almost 550 points from the highs that it made last week, which was around the 25,250 mark. And the other worrisome factor is that we're making lower lows on the daily charts. And what would not please the bulls, of course, the fact that we were almost touching the 24,858, almost 900 levels yesterday, but we closed near the lows of the day. Every recovery is getting sold into, and the Nifty Bank fell almost 450 points yesterday, despite both HDFC Bank and ICICI Bank ending higher. Two of the biggest index constituents ended higher, yet the index fell 450 points. Now, some of the triggers for today's session, of course, will be reacting to the IIP data that came out yesterday. Of course, it's a backdated data, so you can't see a much significant reaction to that. And there are more earnings reporting today. Earnings reactions also will come in from last evening. You need to keep an eye out for that. As I mentioned, it's the monthly expiry today for the Sensex contracts, and of course, any further pressure on the IT stocks that are already entering oversold territory, you keep an eye out for that. Now, earnings reactions, IndusInd Bank came out with numbers yesterday. Mazagon Dock came out with numbers yesterday. Both these stocks ended at the lowest point of the day before the results were announced. Also keep an eye out for earnings reactions on Vari Energies and GAIL. Now, some of the important levels to watch. Now, we closed below the June 16 low of 24,703. Now, that brings in the 13th June low, which is 24,473, which is where we reversed during the Israel-Iran war. So, important levels to track for the index. The GIFT Nifty for now is indicating a negative start for our own markets. But over to Upasna now, who would be listing out the stocks that you need to keep an eye out for today. Upasna, good morning.
Good morning. First up, let me start with IndusInd Bank. Overall numbers were above pole, but weakness continues in the asset quality of the bank. NII down about 14%. GNPA stood at 3.6 versus 3.1% sequentially. Next up is GAIL. Overall, the numbers were below our pole. The net profit down 8% net on a sequential basis. Revenue also down about 1% sequentially. NTPC Green Energy, overall good set of numbers. Net profit up 59% on a YoY basis, and revenue up about 18% on a YoY basis. Next up is Mazagon Dock on our radar. Net profitability in Q1 was impacted due to higher expenses, which is why net profit was down about 35% on a YoY basis, and revenue saw an uptick of nearly about 11% on a YoY basis. Next one on our radar is KEC International. Net profit up 42% on a YoY basis. Revenue also up 11% on YoY basis. Torrent Pharma is the next up on our radar. Overall, if we look at the results, they are in line with estimates. Net profit up 20%, revenue up nearly about 11% on a YoY basis. Vari Energies is the next one on our counter. Overall, good set of numbers. Revenue up 30%. EBITDA margins expanded from 16.2% to 22.5% on a YoY basis. Adani Total Gas is the next one, with net profit down nearly about 4% on a YoY basis, while the revenue saw an uptick of nearly about 20% on a YoY basis. And lastly, PNC Infra also on our radar, as the company bags order worth 2,957 from Southeastern Coalfields Limited. So all in all, lot of results that we'll be watching out for today.
A lot of results and result reactions as well. Upasana, thank you for that. And lastly, Mangalam joins in with cues from the FNO space. Mangalam, good morning. Yet another lower close, but what's the FNO data indicating now?
Well, there is yet another lower close, and the interesting part is that during expiry week, it is usually the momentum takes over, and momentum is definitely firmly with the bears this time around. Recoveries were sold into yesterday. There was a sharp sell-off that we saw on the frontline indices, and alongside that, you had advanced decline ratios as well. We ended at the widest difference between the red and the green lines, with almost 2,200 stocks declining for about 490 stocks which were advancing. At one point that number was 1,400, and then thereafter we saw a wide gap up out there as well. Volatility has spiked. Remember, it was at very low levels, pricing in complacency. Now it's gone back to above 12 levels, which is interesting. So over the last two trading sessions, the VIX has spiked by about 20%, and that makes option writers' life easier, but they're writing a lot more calls. Let's talk about the cash market flows. The FI sold about 6,000 crores in cash yesterday. The DIs went ahead and bought 6,700 crores. But in index futures, they've been continuously selling lock, stock and barrel. Yesterday as well, nearly 1,200 crore worth selling. The net exposure now stands at a short 1.65 lakh contracts and longs just at 15%. And that's not all. We've been talking about how there's been a lot of call selling yesterday as well. That continued. 61,000 short calls initiated versus just 22,000 short puts initiated. Over the last two trading sessions, there have been nearly 2.5 lakh calls that the FIs have written lower to 0.64, telling you that at some point there is a bounce which is imminent, but immediate triggers are lacking. If you look at, the active options, 24,800 call writers, fairly active. What it's telling you is that the ceiling is coming down for the market. 24,700 call writers, equally active as well. But at the lower level, we are seeing put writers active at 24,600 and 24,500. What does all of this mean in terms of a range? You're looking at some support come by around that 24,550 to 24,650 mark. Congestion as we cross the 24,800 to 24,850 mark, very close to yesterday's high. The 50-day moving average on the Nifty bank is extremely crucial to track, because it broke below that yesterday despite some of the heavyweights doing well. Can it cross past that? Once it does, only then can one look at even the Nifty and the other indices.
The one important bit that Mangalam highlighted, lack of positive triggers. That is what is keeping the markets under pressure currently as well. Mangalam, thank you for that update. And some earnings now, and the big one from last evening was IndusInd Bank, and after the loss that it reported in the fourth quarter, all eyes were whether the lender reports profitability or not. Gaurav is joining in with a review of the numbers. Gaurav, good morning. How were the numbers for IndusInd Bank?
Well, as even for IndusInd Bank, we could say it was lacking some positive triggers. So let's take through the numbers first. Net interest income declined by 14%. When it comes to net interest margin, we saw a little bit of good number of around 3.46%, because Street was expecting around 3.2% net interest margins on a normalized basis. There was an impact of 11 basis points. It was positive impact, but that was a one-off impact. But even if we exclude that, NIMs were a little bit higher. When it comes to operating profit, that declined almost by 35%, a little better than what the street was expecting. And at the same time, when we look at the core fee income, now that has gone down almost by 35%. That is a bit of a concern. Credit cost, again, it was a little elevated, but at the same time, it has declined almost by 75 basis points. Slippages, they have remained elevated, and companies saying that MFI slippages specifically are elevated and they are likely to ease off in third and fourth quarter. Other than that, profit declined almost by 72% on a year-on-year basis, a little lower than what the street is expecting. Now, what bank is saying is that they have around 48,000 crores of surplus liquidity, and that is going to help the bank. Other than that, they are also saying that the OPEX is likely to grow at a slower pace. But what remains actually a negative is that there were no triggers for the ROAs going ahead. What is happening is that the entire the OPEX actually is likely to come down, but at the same time fee income is also likely to come down. Other than that, the management commentary did not suggest any kind of boost coming up in the profitability, although they are saying that they are going to remain profitable, but brokerages do not seem to be very much bullish about it. In fact, all the brokerages, they have not changed any kind of guidance or any kind of the target price. We have got JP Morgan, who has underway trading with a 550 rupees target. What they're saying is that PPOP is likely to remain subdued at least for the next 3 years. So definitely that is one of the concern that brokerages have right now. So in terms of number, we were expecting weak set of numbers and bank has delivered fairly well, but in terms of the outlook, we are still not sure how the bank is going to do in the next few quarters.
Keep an eye out on IndusInd Bank. Gaurav, thank you for that update. In fact, let's listen in to what the lender's chairman Sunil Mehta had to say during the analyst conference call last evening.
During Q1, the board and the management have spent considerable time and effort towards resolving the concerns relating to legacy, treasury and microfinance issues as identified in the previous quarter. The financial impact of the legacy issue is thus now behind us.
Keep an eye out on IndusInd Bank today. The stock, though, has recovered significantly from its 52-week low. Take a short break. Up next, we get you all the updates from all the overnight action that we saw on Wall Street. Stay tuned. We'll be right back. Welcome back. On to action from Wall Street then, and it was a subdued session on the US markets. The S&P 500 ended near the flat line, as did the Dow Jones and as did the Nasdaq as well. The Nasdaq, of course, gaining slightly, 0.3% higher, but the other two indices ending one at the flat line and one below the flat line, and that's because investor enthusiasm on that US-European Union deal was muted despite the futures suggesting otherwise. CNBC's Mackenzie Sigalos gets us a wrap of all the action on Wall Street.
U.S. markets were mixed across the major indexes in Monday trading after President Trump's weekend announcement that the U.S. and European Union had agreed to the framework of a new trade deal. The Dow was down 64, the S&P 500 was up 1, and the tech-heavy Nasdaq gained 70 points. President Trump said today the baseline tariff rate for countries that don't negotiate a deal with the U.S. will likely be between 15 and 20%. That figure represents an increase from the 10% baseline tariff the president announced back in April. The deadline for a deal is Friday, August 1st. Dozens of countries have still not reached an agreement with the U.S. The comments came after he announced a trade deal with the European Union that imposes a 15% duty on most European goods to the U.S., including cars. Tesla entered into a $16.5 billion contract with Samsung. The South Korean tech giant will supply semiconductors to the electric vehicle company, according to social media posts from Tesla CEO Elon Musk. Now, according to a regulatory filing, the effective start date of the contract was July 26th, and it will run through December 2033. Samsung earlier said that details of the deal, including the name of the counterparty, would not be disclosed until the end of 2033, citing a request from the second party to, quote, protect trade secrets. That's what's happening here in the U.S. Back to you in Mumbai.
Mackenzie, thank you for that update. Meanwhile, top US and Chinese economic officials met in Stockholm for more than 5 hours of talks aimed at resolving long-standing economic disputes at the center of a trade war between the two nations, seeking to extend a truce by 3 months. Donald Trump earlier previewed the talks with China, stating that US has quote-unquote a good relationship and hoped that China would open up amid tariff negotiations. CNBC's Eunice Yoon brings us the details on China's requirements from the ongoing negotiations.
China is reiterating the Commerce Minister's recent remarks that there is no reason to return to a trade war. The minister said practice has proven that through dialogue and consultation, we can properly manage contradictions. So the Foreign Ministry repeated that today, saying that the Sweden talks can reduce misjudgments and strengthen cooperation. And this comes after a weekend editorial with Xinhua, the state-run news agency, was playing up what it described as the mutual benefits of these talks, pointing to China processing export control applications. It didn't say specifically that that was about rare earths, but that's what it's about, and the rare earths were processed for U.S. industry. And then it's also mentioned that the U.S. lifted what it described as relevant restrictions on China. So that means that China, again, didn't explicitly say that this is about AI chips, but China does now have the ability to access H20 NVIDIA chips, which had been previously banned, at least the export to China. So in terms of the expected agenda items from a Chinese perspective, there's a lot of belief that we are going to see an extension of the August 12th deadline, possibly by 90 days. Also that China would push for a reduction in the so-called fentanyl tariffs. The Chinese believe that these tariffs that were put as sort of a punishment for their non-cooperation from the U.S. perspectives on fentanyl as unfair. And then the Chinese expectation is that the Russian oil purchases are going to come up just because the Treasury Secretary Scott Bessent had flagged that as a talking point. State media, though, has already been flagging that they will be pushing back on that last point, saying that if Bessent uses this issue to put pressure on China, it will likely cause the newly established trade consultation mechanism to collapse. This is in the Global Times, the Communist Party paper, saying that China would not just, quote, go along with Russian oil cuts. Guys?
Eunice Yoon, thank you for that update. Meanwhile, U.S. Trade Representative Jamieson Greer says that the U.S. is in an incredible position with regards to a deal with China, but does not expect any substantial outcome just yet. Listen to what he said.
The U.S. is in an incredible position. We've spent the past 3 months trying to reorder global trade to make sure we can get rid of these systemic imbalances that have persisted. We now have deals with the EU, Japan, and a number of partners. So we come into these negotiations with a strong hand. Our discussions with the Chinese are always cordial and constructive. This is the third round in the past 3 months. So just the fact that we're talking and we want to move forward in a positive way is its own good sign. I don't expect some kind of enormous breakthrough today. What I expect is continued monitoring and checking in on the implementation of our agreement thus far, making sure that key critical minerals are flowing between the parties and setting the groundwork for enhanced trade and balanced trade going forward.
Jamieson Greer also spoke on the US-India trade front, and here's what he had to say on that.
I think the thing to understand with India is their trade policy for a very long time has been premised on strongly protecting their domestic market. That's just how they do business over there. And the president is in a mode of wanting deals that substantially open other markets, that they open everything or near everything. So we continue to speak with our Indian counterparts. We've always had very constructive discussions with them. They have expressed strong interest in opening portions of their market. We, of course, are willing to continue talking to them. But I think that we need some more negotiations on that end with our Indian friends to see how ambitious they want to be.
The important update there on the US-India trade deal. Take a short break. Cues from the commodities market on the other side. Stay tuned. Welcome back, and Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. Some rise in oil prices, rise in the dollar. What are you picking up today?
Oh, well, absolutely. There have been big moves in many of these commodities in the overnight market. And I'll start with crude oil prices because we've seen gains of 2% overnight. And with that, we're trading at a one-week high. And $70 a barrel is back for the Brent crude prices. Well, the U.S. president has now cut the days for Russia. It has said that 10 to 12 days to agree on ceasefire or face sanctions. I mean, that is what is adding premium to prices. In the meanwhile, you also have seen the dollar index gain to a one-week highs. And that has kind of weighed on various commodities. Gold, for one, is trading at a three-week lows. You had the copper prices slipping quite sharply overnight. COMEX fell 3%. LME copper fell 1% as well. The markets now are awaiting details of tariffs, which is on from 1st of August in terms of products, countries, the metal in transit, what happens to that. So all of those details is something that the street is still awaiting. In the meanwhile, you also have the U.S. Fed meeting. The two-day meeting starts today. The announcement comes in tomorrow. But the tone, guidance, etc., and ahead of that, some profit taking in the commodities which had run up too much is exactly what we are seeing today.
Moving along expected lines. Manisha, thank you for that update. On to some tragic news now. A person opened fire inside a Manhattan skyscraper in New York, housing the NFL headquarters and offices of several major financial firms, including private equity giant Blackstone. The incident left several people injured before the suspect was neutralized, as per officials. The incident sees 6 casualties, including the gunman and an NYPD official, along with 4 civilians. The specific motives for the shooting remain under investigation. With that, we'd call time on this edition of Power Breakfast. From me and the team that put this show together, thank you so much for watching. Bazaar Morning Call on the other side to set you up for today's trade.
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Tuesday morning, we are coming to you live as always from the CNBC TV18 Motilal Oswal studios. I'm Prashant, with me, my colleagues Nigel and Surabhi. Guys, good morning.
Hi guys. It's only Tuesday. Feels like we've done longer in the week, right? But no, it's only the second day of the week. But it's been busy. I mean, lots of earnings, trade headlines, tariff headlines are back. And we have plenty to go over, Nigel.
Well, that's right. You know, the market action itself has been a little bit subdued. But I'll tell you what, at times like these, that's when you get stocks at the prices you want to. And it's been in a bit of a tizzy and no signs of any big rehearsal. But maybe a bit of a subdued market could be a blessing to some because the pace that we went up was very, very swift and many people missed out. So maybe, in fact, that chance is now being presented.
Well, many chances, right? I mean, but the point is you need some consolidation.
Yeah.
You need some slow is good. I mean, otherwise fast-paced rallies, rip-roaring rallies. That's essentially what we've had over the last few years, and it's not a very short-term kind of phenomenon. Let's just take it from the top in terms of what you need to know. So trade tariff headlines, of course, top of mind as the 1st of August deadline comes through. That's it. I mean, that's the big one, really. Will we see a deal, an interim deal before the 1st of August? If not, on the post the 31st of July, what happens? Will the rate reset to 15%, 20%, etc., etc.? So it's not just India, right? I mean, there's Korea, there's Taiwan. So 3 countries, Korea, Taiwan, and India. So that's about 10% of US imports, all essentially in line for some sort of a potential deal. Tariff uncertainty, of course, also regarding tariff rates on currently exempt sectors. And by the way, this is Section 232. This is separate. And Trump and his team have said that those investigations are also concluding. And around the 1st of August, we should be able to declare what our tariffs are on things like pharma and semiconductors and a host of other things as well. We'll see, even with regards to US-EU deal, I saw a few stories which kind of said, well, it looks like the US side agreed on something and the EU side agreed on, of course, I mean, some of the common things, but there were also kind of disagreements which were creeping up. So what exactly is going to be the deal which was agreed upon? That is still not entirely clear. To a large degree, yes, but not entirely. US equities, they were flat. S&P, nothing very much. NASDAQ was up about 1/3%. Big move in the US dollar, which is about 1% higher, about 99 or so is where the US dollar, almost 99 actually. Oil prices were up 3%. We are at about 70.4. And this is, of course, on the back of President Trump, who's sort of brought forward the deadline for Russia to reach a ceasefire agreement with Ukraine. I think he's now saying 10, 12 days, and he wants an agreement on the table. So we'll see where this one goes more later. Now, here in India, many, if you look at the Nifty Bank, broader market, small caps, for example, losing streak, many short-term market indicators are suggesting that we are in a oversold kind of a zone. But, oversold does not necessarily mean immediate kind of turnaround, but it does sort of warn you to be careful if you are trading on the negative side, if you're shorting, etc. A positive daily close is the first sort of, requirement before we start to say that whether this decline is complete or not. So on both the Nifty and the Nifty Bank. The next big support level, because, I mean, most levels are gone now, is 24,450 to 24,500. This is the next sort of major support zone that we'll work with. Bank Nifty broke the previous low, which it did not do last Friday, but yesterday it did. And here the support zone is 55,475 to 55,150 or so. Those levels should come up on your screen. 55,475 to 55,150. No real immediate near-term triggers. Nothing with regards to, a sector which is suddenly going to sort of take leadership, take charge and, guide this turnaround. But things emerge eventually, gradually, out of declines as well. So we'll just have to be patient for that. GIFT Nifty implying about a 50-odd point lower start once again this morning. Surabhi.
Absolutely. And, last couple of days, we had great global cues, global markets rallying, and still we kept falling, on our own weight or under our own weight. This is a slightly different morning because you don't have so much of tariff exuberance or trade deal cheer. A lot of markets are cooling off. That happened on Wall Street, and that's happening across Asia as well because many of the markets like Japan, even the Hong Kong Hang Seng, they're down 1%. So global markets in a bit of a sell-off, profit-taking mood this morning. So let's see how that plays out for us. Now, the trade headlines are actually not very encouraging for India. Of course, we're still, waiting to see if some kind of an interim deal will be arrived at before the August 1 deadline. But see what President Trump has said on a whole host of factors overnight. And none of it sounds very positive for India. Number one, he's talking about a baseline tariff of now anywhere between 15% to 20%. Which is going to be substantially higher than the 20%, than the 10% that was prevailing right now for all countries that don't make a deal by 1st of August. So that's caution number one. Number two, he's talking about imposing additional tariffs on Russia's trading partner. This 2-week window that he's given to Russia to arrive at a ceasefire with Ukraine, if the ceasefire doesn't happen, then what is his counter threat? He's saying anyone who's trading with Russia, buying Russian, inputs, and of course that would include Russian oil, will be slammed with 100% additional tariff. The next or the third negative headline on the trade front is coming in on Pharma. On Pharma, he's saying that we'll be announcing something on Pharma very soon. We have a big plan on pharmaceuticals. We want to bring pharmaceuticals back to America. So again, it's a lot of chatter, a lot of noise, but all the noise is not very conducive just in terms of sentiment for us. What's also not conducive is some of the macro numbers that we got yesterday, and I'm talking about IIP. IIP is at a 10-month low. The number for June is, 1.5%, slightly better than 1.2% month on month. But again, it's subdued. It's also the monsoon effect kicking in. So sectors like electricity, pretty weak, mining pretty weak. Manufacturing sequentially has seen some improvement. Manufacturing output slightly higher. But again, not perhaps enough to really light up the street with excitement. Let's talk about the flows. Now, Nifty has been continuing to drift lower. Again, yesterday, the boundaries have gone and we're constantly drifting lower. No real positive earnings spark, and there's constant FPI selling, which is why we ended at the day's low yesterday. So it doesn't inspire much confidence. Yesterday, the net numbers are very big in the cash market, actually. Look at this, 6,000 crores, 6,100 crores of FPI selling almost, countered with huge amount of DII buying, almost 6,770 crores of DII buying, but overall big numbers coming in. Stocks. Well, IndusInd Bank, the best thing is that there's no major negative, fresh headache at least. In fact, some of the numbers like the NII number, the profit number, they're above the pole. Though, of course, year on year, those numbers still will be very, very weak, as you can imagine. Slippages sequentially have come down. They're still very high slippages. 2,500 crores of slippages versus 5,000 crores when they did the whole cleanup. So we'll see how the market feels about it. The thing is, it's not anything immediately positive in the IndusInd Bank numbers either. Look at Mazagon Dock. Remember yesterday we were talking about negative numbers from defense companies. Add one more to the list. For Mazagon, it's been a challenging quarter. EBITDA is down 50+%. Margins have fallen quite a bit. Revenue is up about 10-11%. Adds to the list of Para's Defense, Zentek. These are lumpy businesses. Doesn't seem to be a very good quarter for Mazagon. Today's results diary, and we've got some big names coming in over here. There's L&T, there's NTPC, there's Asian Paints, and from the mid-cap space, lots of names, including some of the interesting ones like Amber, Varun Beverages. It's a full slate of earnings. Let's see if we'll get any earnings surprise, pleasant surprise, or earnings star. We've been missing one for a while. Nigel.
Well, precisely, Surbhi. That positive trigger actually has been missing with regard to earnings, with regard to fundamentals on ground as well, and various data points that are coming out. As you mentioned, IIP, various production numbers, demand in terms of electricity as well as power, they're a little bit softish, even taking into account that it's in a monsoon season if you compare it on a like-to-like basis. The last one, the price action has been disappointing, right? Because we've been down closer around 4% or thereabouts, and India has relatively underperformed. But keep in mind, this fall is coming on lower volumes because you just pull up the chart. Last couple of months, the average volumes for July itself has been quite subdued in comparison to what we have seen in June. So sharply lower out there. This is the NSE volume number that we're looking at in value terms. And yesterday's volume, in fact, was even lower than what we have seen on an average. So the short point is this fall is coming on subdued volumes. It's not coming on very, very large volumes, which could be some bit of a comforting factor. Moving to the other cues that we have, the rollovers. Well, the Nifty rollover is only around 45%. Normally on D-3, that is 3 days before expiry, it's normally in the vicinity of around 51%. So Nifty rollovers are yet to take place, while the Nifty bank, well, that's more or less in line at around 36%. What did the FIs do? No prizes for guessing. They added shorts yet again. 8,500 short contracts, 4 shorts added for every 1 long position, and now the short positioning is at around 85%. And, if you just look at the screen, you'll see that the short positioning has moved up. So we started the series at around 40,000 contracts from the FIs on the short side. That number has ballooned up now. That's moved to around 1.65 lakh contracts on the short side itself. And that's the highest we have seen since March 2025. The PCR as well has come down to around 0.64. Normally, the combination of both these two factors indicate that a short covering bounce is due, because the PCR is already below the lower end of the range or closer to the lower end of the range, while the FI net shorts as well at peak, they were closer to around 2 lakh contracts. So that as well is getting there. The only problem is we've got an expiry that's coming out. So maybe in fact that short covering bounce that's anticipated is not as swift as we would have liked. But we need to keep an eye out on that front. And the reason that the PCR has moved down because of call writers, well, they believe they've got this covered on the upside. 24,700 call, 24,800 call. Between them, they added close to around 1.1 lakh shares on the short side. So that's the aggressive call writing that we're seeing. And just going by these data points, the kind of call writing that we're seeing, in the near term, that ceiling for the market is gradually coming down. And the bears believe they will be able to defend this 24,850 odd mark, that in terms of a resistance level that we're looking at, while the crucial support, 24,850, 24,900. That's the resistance. But the crucial support is around 24,500, 24,550. And, I spoke to various traders, various people who read the FNO data very closely. They said this is the line in the sand. This is the important mark. And even the options data is indicating that if you need to see a short covering bounce, well, it needs to come before we get to those levels, and we cannot breach those levels. The problem is the Nifty bank that was holding one end up. Yesterday, it ended below the 20 as well as the 50 DMA. So that, in fact, needs to get back up towards those crucial technical levels. So a short covering bounce is due, going by the technical indicators. The markets are lacking that positive trigger. But maybe I think in the next couple of trading sessions, that relief rally should be due, though the structure is punctured for the time being.
Okay, well, many short-term indicators in the oversold zone. Nigel, thanks for that. Mark Matthews is with us of Bank Julius Baer and Company. Mark, great to have you with us here. Good morning. Thanks very much for your time. Just a quick word, Mark, on whether ahead of the tariff deadline, how should we see this? Because now this is the firm one. There's no extension. The US side has said again repeatedly. And he said, well, if for countries where we don't reach a deal, we're going to settle between 15 and 20%. I think all inclusive. I mean, that's not 10% base plus 15 or 20. I think 15 or 20 all inclusive. What's your sense, Mark?
My sense is that it's not material. The market's making a mountain out of a molehill. Exports to the US from India are 1% of India's GDP. If you include services, it's 5% of GDP. That's small. I mean, for Canada or Mexico, then this is a big concern because they're around 20 and 30% of their GDPs respectively. But clearly the market likes talking about it, and it's a big sentimental issue. And I think the more concerning thing, just eavesdropping on your conversation earlier, is the idea that President Trump is unhappy with what's going on in Ukraine. He wants a ceasefire. It's not happening. Doesn't look like it's going to happen. And so he's going to indirectly ratchet up sanctions on Russia through its intermediaries, of which India is a big one. And that threat of a 100% tariff on countries which do business with Russia is, I think, a more material concern.
Absolutely. So we have the next couple of tentative days, Mark, coming in. We need to see if we get a deal or not. And if that doesn't happen, does India's baseline tariff move up in the interim? And then this whole specter of the ceasefire window, a 2-week window that he's given. How should we interpret the potential implications? Because it's all up in the air that he's going to levy 100% tariffs on those who are trading with Russia. So what should one be prepared for, I mean, from an Indian perspective?
You know, on the one hand, I think India is an extremely critical ally to the United States for many obvious reasons, not the least of which is its importance in Asia as China becomes the paramount competitor to the United States, both militarily and economically. So the Americans should want to keep India in their good graces. But on the other hand, there is this situation with Ukraine, and frankly, I've become very fatigued at trying to predict what Donald Trump's going to do. I don't know what he's going to do. I think he could very well impose sanctions on Russia that would boomerang on India, and that could take the market down. I don't want to deny it's a potential, but on the other hand, as I said, India is an important ally of America, and so I don't know which one he'll do. I suppose I would err on the side of him being nice to India for the reasons that I just stated.
Hi, Mark. Good to see you. Ben, the Indian markets have gone through a bit of a lull period and a relative underperformance, but that sometimes gives you buying opportunities. Do you think, say, in the next 12 months from here on, as we discussed last time, the Indian markets could be higher, maybe a double-digit return from here? And also, since we're going through this sideways consolidation phase, what would you look to buy in India?
The sector that looks most interesting to me is the IT sector, because it's the sector that's performed worst this year. And normally it's not a good idea to catch a falling knife, but there are some valuations there which are just too cheap in my mind. And I don't know why the street didn't like the most recent results. I really didn't think they were bad. And I thought the commentary from management going forward was more positive than I'd been expecting. So I think that is the opportunity. Banks have been, of course, the best sector so far this year. Now they're taking a breather, but they're still not expensive despite this great run, because they're clocking very good numbers. And so those would be two, and maybe the consumption sector, just because 1 lakh crore of tax breaks will definitely help the consumer, as well as the 100 basis points of cuts we've had from the RBI over the last few months. So those are the three that we like.
Okay, interesting. So giving a thumbs up to Indian IT. Not too many people are doing that at this point in time. That's an interesting call. Thank you, Mark, very much for joining in. Always good chatting with you. You have a great day, and we look forward to connecting again soon. Well, that's a view coming in on the global setup. Let's tell you what are the other interactions lined up on the show today. At 8:35, we get chatting with the management of SAIL, talk about the company's Q1 performance and the outlook. At 9 o'clock, we'll have Vijay Agrawal of Aquarius joining in to talk about some of the key trends in the real estate sector. And to answer the question, is the IT sector slowdown, will that spill over in the real estate sector? Rana Gupta of Manu Life Investment Management is our market master of the day. He joins in at 9:20 a.m. At 9:30, we get chatting with KEC International, talk about the company's Q1 performance, which has been fairly steady. Mr. Vimal Kejriwal will join in. After that, we'll be in conversation with the management of TTK Prestige. It's been a rough quarter for TTK, rough start to the year. Will it get better in the second half? Let's find out. 9:40, that is when that conversation is coming up. And at about 9:50 a.m., Vinay Rustagi of Premier Energies joins in to talk about the company's Q1 earnings and the outlook going forward. Towards the end of the show, Lata will be in conversation with the management of Bank of Baroda and talk about some of the important trends, including asset quality and margin outlook for the rest of the year.
Time to slip into a quick break. We've got a lot of stock-specific action to track for you today. We get to that in just a bit in our special Top 10 segment. We're looking at Torrent Pharma, KEC, NTPC Green, Vari Energies. We've got Paradeep Phosphates. All of them will be reacting to positive news flow. And today we're split down the middle with 5 likely to react to positive news flow, while we have IndusInd Bank, GAIL, Piramal Pharma, Marscon Dock, and Realty that will be reacting to negative news flow. Slip into that break, come back, get into further detail on all of these names.
Welcome back. Let's get to a lot of the stocks that we have to look at. Remember, the cues, overall are a little negative, and the implied open is anyway indicating that we'll start another 50 points lower from where we are. Most of Asian markets are down between 0.5% to 1%. Okay, let's look at stocks then. Our team is standing by with the list of top stocks to watch this Tuesday morning. Guys, morning to all of you. Gaurav, let's start first with IndusInd Bank. What's your verdict?
Well, when it comes to IndusInd Bank, weak set of number is what we were expecting, and the bank has delivered weak set of numbers. Rather, we could say a better number than what the street was expecting, because net interest income that declined only by 14% versus the street's expectation of 22% decline. When it comes to net interest margins, there also we saw bank deliver 3.46% of net interest margins. Now there is an impact of 11 basis point of a one-off, but even if we exclude that, NIMs were better. When it comes to operating profit, that declined only by 35%, and profit now that has declined by 72% versus the expectation of around 75% fall. When it comes to the asset quality, now this quarter credit cost and slippages, they both have remained elevated, but they have declined on a sequential basis, which was a little bit of positive. But what remains a key trigger here is that there were no near-term commentary which could suggest that the ROAs are going to go above 1%, and that is the reason why we are seeing some kind of pessimistic view from brokerages here. So we have got JP Morgan, who believes that the operating profit is likely to stay subdued for the next 3 years. Other than that, Macquarie also believes that the ROA is likely to remain below 1%. And Bernstein, they also noted that with this set of results, there will be a reassessment of near-term ROAs, and that is something which is concerning. When it comes to commentary, we did not see any kind of positive commentary, because the lack of triggers is something which we are seeing in the result of IndusInd Bank right now, and as a result, we will be watching out of this stock today.
Okay, all right, Gaurav, thanks a lot for that. Well, let's hop across to Sonal. She's here to tell us about GAIL, who reported their numbers. Hey, Sonal, morning.
Good morning, Nigel. Well, GAIL reported numbers which were a mild miss to already muted expectations. So if we look at the standalone numbers, revenues down 3%. EBITDA came in flat at 3,200 crore rupees, which compares with a poll of 3,389 crore rupees. Profits were down 8% to come in at 1,886 crore rupees. The poll was closer to 2,000 crore rupees. In the EBITDA, there has been an adjustment for a one-time income of 133 crore rupees. Strip of that, the numbers look like this. If we talk about which are the segments which led to this fall, so it's the petchem business where losses widen, and also the LPG business where EBIT is lower than what the street was working with. Transmission did well, EBIT up 21%. Natural gas marketing in line with expectations where EBIT was down 11%. But as I said, petchem EBIT loss has only expanded on a quarter-on-quarter basis. And LPG as well, EBIT was down 29%. Also, the volumes were lower than what the street was working with. We have a conference call. The management has a conference call at 11 a.m. So we'll get more details on this one.
Okay, all right. GAIL in focus. Stock perhaps opens a little lower. Mazgaon is the next one we're going to focus on. Upasana has got details here. Upasana, morning.
Good morning. Well, overall, if we see, it's a weak result. Revenue saw an uptick of 11% on YoY basis, but sequentially, it's a decline of 17%. EBITDA saw a decline of 53% on a YoY basis, leading to EBITDA margins dipped almost 1,575 basis points at 27.2%. Now, net profit stood at 696 crore with a downtick of nearly about 35%. Now, this is because of the higher other expenses. Now, in terms of other expenses, the company's subcontracting expenses stood at 194 crore with an uptick of 9% on a YoY basis, leading to the overall miss on terms of net profitability. Other expenses have also impacted the profitability of the company, such as other projects which related expenses which jumped almost 13 times on a YoY basis, and company's provisions also inched up higher at 540 crore in Q1 FY26. Now, sequentially, subcontracting expenses is down 67%. Other project expenses and provisions all remain elevated. So, overall, if we see, all these factors have impacted the profitability of the company and overall performance.
Oh, yeah, absolutely. A huge rise in their expenses on various fronts. Thanks for that, Upasana. Like I was saying, that after Zen and Paras Defense, one more defense company that's disappointed just in terms of the P&L. Let's move on then. We've got a couple of pharma numbers to look at as well. And Ekta is joining in with the latest. Morning, Ekta.
Morning. I'll start with Torrent Pharma, which came out with what was an inline set of numbers. So the revenue was up around 11%, the margins at around 31%, and we had the profit, which was up around 9% year on year as well. Now, in terms of the geographies, what stood out was the double-digit growth that we saw in India, US, as well as Brazil. So India was up 11% year on year, US was up 16% to $36 million, and Brazil was up around 11% as well. Now, for Piramal, it was a disappointing set of numbers, you would have to say, this time. So the revenue growth was, just about flat this time. We had the margins, which came in at 5.5 versus 26.9% Q on Q and versus 10.5% year on year. And the profit, it was a loss of around 81.7 crores. The CDMO segment declined 6%. The complex hospital generics, which is basically inhalation anesthesia, was flat. Consumer healthcare did well. It was up around 15%. They're sticking with their FY30 aspirations of being a $2 billion company with 25% margins. But nonetheless, for today, I expect the stock to possibly be under pressure.
Got it. Okay, all right. This one under pressure. Piramal Pharma went dancing away to nearly 300, now back down to around 200 in the numbers. Fairly disappointing. Vivek joins in though to tell us about KEC International. Morning, Viv.
Good morning. Well, KEC International, all eyes will be on the entire infra space today. Also, Realty goes ahead and declares its results later today, and all eyes will be from the order inflow from the Middle East. So, KEC International, steady quarter. However, on a year-on-year basis, the order inflow has dipped. This is because the company comes off a very high base as far as order activity was concerned. Margins, the key figure to watch out for, EBITDA margins, while it has actually expanded on a year-on-year basis, it continues to remain below the management guided range. So let's have a look at the numbers. Revenues higher by 11%, coming in over 5,020 crore mark. However, if you're looking at the management guidance, 15% revenue uptake is what the company had guided for FY26. EBITDA up 19% at 350 crore. EBITDA margins at 7%, still below the guided range of 8 to 8.5%. Profitability on the back of the improved execution has gone higher by almost 42%. Order book plus L1 position of the company stands at 40,000 crore. The tenders under evaluation, or the tender pipeline as the company calls it, is at close to 1.8 lakh crore. YTD order intake, like we mentioned, off a higher base is down 28%, but still quite healthy at over 5,500 crore rupees. It will be important to watch what the management says in terms of margin trajectory, and also what are the prospects, especially as far as Middle East is concerned, and also what are the collections the company is seeing from the water vertical, which for the past few quarters was under pressure.
And we'll ask all of those questions, Vivek. Vimal Kejriwal is going to be with us at KEC. That's at 9:30. That's the conversation. First up after market opens. But Vivek, back to you. NTPC Green, Vari Energy, lots of numbers.
Well, that's right. If you're looking at the power vertical, so NTPC Green, the renewable energy arm of NTPC delivered its numbers. Good set of numbers. Revenues higher by 17.5% on a year-on-year basis. EBITDA, again, following the revenue trajectory, almost 18% higher. EBITDA margins flat, very healthy at over 88.5%. Net profit higher by 59%. Other income component aided the PAT, almost at 71.5 crore, versus just 30 crore last time around. What did the company do as far as Q1 was concerned? Almost 800 megawatt commissioning was seen. Total operational capacity for NTPC Green stands at almost 7 gigawatt. Remember, the company is targeting close to 7.2 gigawatt of commissioning in FY26, and the company has very lofty targets as far as FY30 is concerned. Now, coming to Vari Energy, in line with its peer, Premier Energy, very healthy set of numbers. Revenues higher by 30%, coming in at over 4,400 crore. EBITDA higher by 80%, coming close to the 1,000 crore mark. When you're talking about the EBITDA margins, very healthy over here again, 22.5% versus 16.2%. Profitability higher by 92.5%, again aided by healthy other income. Now, the company has given a very strong guidance for EBITDA as far as FY26 is concerned. They are guiding for EBITDA in the range of 5,500 to 6,000 crore rupees. Order book of almost 25 gigawatt at 49,000 crore rupees, of which exports are at over 41%. Now, that will be the key figure to watch out for, given the fact that there have been various negative commentary coming in from the US, especially in terms of solar panel installations. Also, the company has gone ahead and articulated its FY27 target in terms of capacity, cell target at over 15 gigawatt, module target at over 25.5 gigawatt, and ingot wafer target at around 10 gigawatt. Again, expect both of these stocks to open in the green today.
Yeah, absolutely. I mean, Vari and Premier both have done well, and not Vari, but Premier will speak to today for sure at around 9:50. That's a conversation coming up. Find out how some of these renewable players are looking at their businesses. So that's NTPC Green, which has also had a very good quarter, as Vivek just outlined. Let's quickly move on. Vinny is looking at some numbers for us as well. I think Realty Corp, Paradeep Phosphate, and I don't know what else. Vinny, good morning.
Only these two names will be good morning. So firstly, talking about Realty Corp numbers, when you're looking at it in terms of revenue, 33% growth, I beg your pardon. Now, that is obviously much better than what the street was expecting or analysts were expecting as well. So it's coming at around 745 crores. Profits, good growth in that terms as well, 36% there. Now, the miss comes in on the margin front. The margins, EBITDA margin have come in at 15.6% versus 18% last year, 18.5%. So a sharp contraction in terms of margins. What has led to this? When you're looking at it, your telecom service revenue, that's seen a growth of just 2%, which is a better margin business for the company, while projects business for the company, project work services is what they call it, that's seen a growth of 77%. So that suddenly become a growth driver, which is a lower margin business. So the change in terms of that mix is something that's impacting the margins of the company. So a bit of a red is what we could watch out for on the screens for Realty. Now, other than that, Paradeep Phosphate, in terms of numbers, good performance that's coming in from the company in terms of profits of the company, sharp growth there. Revenue seeing around a 60% uptick as well. And margins, that's also seen a sharp expansion there, 12.4% versus 6% just last year. So good performance there. We could see green coming in for this stock today.
Okay, all right. Thanks very much. I'm sure the street is going to be happy seeing some green. Vinny, thank you for that. Let's quickly recap our list of stocks to watch this morning. The ones that have positive news flow around them are Torrent Pharma, KEC International, NTPC Green, Wari Energies, and Paradeep Phosphates. Stocks with negative news flow would be IndusInd Bank, GAIL, Piramal Pharma, Mazgaon Dock Shipbuilders, and Railtel Corporation.
Okay, all right, let's turn our attention away then from the equity markets. Manisha Gupta joins us to tell us what's going on in the commodity space. Morning, Manisha.
Morning, Nigel, and thank you for that. Well, it is about the U.S. and European Union trade accord that has lifted risk sentiment. The U.S.-China trade talks will also resume. Dollar index, in the meanwhile, is trading at a one-week high. And the U.S. Fed two-day meeting starts today. While we're expecting the interest rates not to change, but it really is going to be about tone, guidance, and what the U.S. Fed chair says that is going to impact the market. So in light of all of that, there is a decline that we've seen in case of gold prices. That one is trading at a three-week low. Silver prices have declined 2% overnight. If you look at other metal prices, we've seen U.S. copper decline by 3%, and the LME copper also has seen a decline. That one is trading at a one-week lows as well. This is especially ahead of the August 1 tariff deadline, where the markets are awaiting more clarity on the tariffs. But copper is not the only one. Zinc is off its 4-month highs. Aluminum prices are off its 4-month highs. We also are looking at steel prices seeing a bit of a decline as well. So metals, after that very strong the month of July, have gone in for some profit taking. The only thing green that I see on the screen clearly is the crude oil prices. 2% of gains overnight. It's trading at a one-week highs. The Brent crude prices are back above $70 a barrel. Trump has now cut Russia's time and has given 10 to 12 days to agree to a ceasefire or face sanctions. That exactly is the premium that we are seeing in case of prices. Markets also will continue to watch out for the U.S. jobs data. That's going to be the next deciding factor for the interest rates and the way the dollar index will move.
Thanks a lot, Manisha, for joining in and filling us in with all of those cues. Also, an interesting point with regard to the coking coal prices in China. That's come down for the second day running, and there is pressure out there. The key reason is actually that we have steel production in China that's coming down. Normally, you will say that's a positive, right? Because steel production is coming down. But because of that, you have coking coal costs as well that are moving down, which for an Indian steel producer, actually, it's a positive. However, the problem is if Chinese production is coming down and the input cost is going down, that's what will put pressure on steel prices as well on the global front. And as we know, that in turn could reflect in lower prices here in India as well. Talking about the steel industry though, SAIL, that's the first management on the show. Remember, the company reported actually a softish set of numbers in the first quarter. They missed what the street was working with. I caught up with the company's CMD, Mr. Amrindu Prakash, and I quizzed him about the soft showing in the first quarter and also asked him, what's the way ahead? Let's listen in to what he had to tell me.
From the street expectations to the actual numbers, there is only one gap. The gap is in stock valuation impact. CPLY, we have had a stock valuation impact of 1,080 crores. Even if I say normal inventory of 500 to 600 crores, the 500 crores number which has gone out because of stock valuation is the only change. And this is just an accounting entry affecting us only for this quarter. So the year projections remain strong, remain positive. In fact, this stock valuation impact also indicates that we have brought down our cost. And because the inventory is valued at cost, so that's why this hit has come. But it gives us confidence that our cost reduction measures are working.
Got it. All right. Let's take it now piece by piece. We take forward your clarification on board. What is the volume growth you're looking at for this year? If you could quantify it.
Yes, we have planned a volume growth of 8% CPLY.
Okay, so you're confident, because the last time around you had mentioned about 8%, but now you're confident that you can achieve that. Now, since you're saying that this valuation impact is just for the past quarter and things will look up from here on, let's dissect it a little bit. What about realizations? In quarter two, ideally it should be softish because of the monsoon. How do you see realizations move for the coming quarter? And also, if you look at the cost of coal, what was the fluctuating between quarter 4 and quarter 1? And in quarter 2, how will it compare to quarter 1?
So, coking coal costs have been range bound. So, if we look at Q4 and Q1, there is not much to pick up on. It has remained stable. Going forward, also, we see the same trend continuing. There is no fundamental factor which should affect coal price going forward. So, profitability going forward will depend on two things. One thing is volume, and second thing will be the cost efficiencies that we accrue, which are sustainable. Both, as I said, we are planning a overall volume growth of 8%, which we are confident of achieving, as well as the cost reduction, which I said has worked. If I compare with previous year Q1, the costs are better now through efficiency. And this push we are going to continue. Another factor which is coming in is we have commissioned a program to improve our digital presence. The implementation of Industry 4.0 in our operations is ongoing. We have taken a target of adding 1,000 crore per annum to the bottom line purely with our digital initiatives. So this will go on accumulating as we go forward in this year.
1,000 crores to the PAT number because of digital initiatives.
PBT number because purely on account of this. In fact, the program we are working on, the payments are linked to actually achieving these numbers. If these numbers are not achieved, no payment will be there.
No, that'll be interesting, and we'll track you on that one, sir. But since you're focusing on the cost efficiencies and there's going to be volume growth as well, according to your calculations on an EBITDA per ton basis, what number are you satisfied at?
See, but we look at currently 10 point something number in this quarter. If I take out the valuation impact from next quarter onwards, it should automatically jump up by 2 to 3%, and a further 2 to 3%, I'm confident can come from the cost numbers.
All right. So instead of EBITDA per ton, you're giving me the margin number. Last quarter, it was in the vicinity of around 10%. In the coming quarter, it could improve by around 200 to 300 basis points, and post that another 200 to 300 basis points in the second half of the year. So ballpark, in margins, are going to be moving from around 10% to more than 15% by the time we wind up the year. Got that. One positive in the numbers actually was your net debt number. You know, in the last few quarters, it's gradually been coming down, which is encouraging. But you have a capex plan as well to satisfy. So could you tell us what was the capex you spent in quarter 1? For the year, what is the outlook? And where does your net debt end the year at?
Net debt, if you see, last year we were able to bring down our net debt in spite of the challenging times that we were facing. In quarter 1, further, net debt has gone down by 1,100 crores. By the end of this year, we will hope to get that number, overall number, to the tune of 4,000 to 5,000 crores. Last year, we did 5,900 capex, which was ordinary capex, not really going towards expansion. This year, the number is increased to 7,500. However, the real capex towards capacity expansion will start coming from FY27. It is not expected in FY26. Not much expenditure will be there. So reducing our debt further by 5,000 crores is the target in this year. And from next year onwards, we will start seeing debt will increase because our capex on the ground for the expansion programs will start hitting us.
And in terms of capacity, what does it mean? Where are you headed?
Going from 20 million ton today to 35 million ton by the end of the decade, that is by 2030. So overall, next 5 years, we'll be increasing our capex numbers.
And this will be at a capex of nearly around 1 lakh crore?
Approximately, yes.
All right, that's a tall ask. Then, if that is the case, this 20 to 30 million tons, sir, you can do it by a couple of other measures, right? You have a couple of PSU units. Maybe they get folded into it, which will get you closer to the target. NMDC steel is there. RINL is there. I can see you have something up your sleeve, sir. Is that a possibility?
These companies are by the government, so the government has to take a call. As a company, we are always happy to take up more responsibility and improve volume. We believe in the steel industry, mergers and acquisitions are a big part of steel industry's expanding. And we, if given an opportunity, will be willing and happy to do that.
Okay, interesting. But have the government hinted there could possibly be a merger between all these assets, SAIL, NMDC Steel and RINL?
You hear as much as I hear, so difficult for me to comment on that.
Well, sales numbers fairly disappointing, but the management guiding for better terms ahead. They're saying for the year, volume growth will be 8%, margins will improve by 200 basis points in the coming quarter, and post that another 200 basis points improvement, and net debt will reduce by around 5,000 crores because the capex for expansion starts only from the next year. Stock ended down 4% yesterday. We take that small break, come back. Amnish Agarwal of PL Capital will be joining in for some fundamental stock talk. Welcome back. Hope you're having a good morning. Well, let's get into some fundamental analysis on quite a few stocks that are going to be in focus today. Amnish Agarwal, the Director Institutional Research at PL Capital, joins us on the show. Hi, Amnish. Thanks a lot for joining in. Tell us what you think of IndusInd Bank's numbers. There's an equally bearish and bullish argument. One side of the story is that there's plenty of bad news ahead, where the other part says, well, we've already digested the bad news and now on a price to book valuation, but it's quite attractive. Which camp are you in?
IndusInd, I would say, is a difficult one because there are quite a bit of variation which comes in numbers. Sometimes in terms of this time around, I think the fee number has gone down drastically. Sometimes your GNPA goes up. Okay, so the numbers, these are like, you can say, topsy-turvy from the last.
So Amnish, you would say it's a buy, sell, or just an avoid for now?
See, it's better to be on the sidelines for the moment because till the time new management comes in and there is absolute clarity, so there could be wide fluctuations which can continue in this stock, and so for the investors it could be a very rocky ride in the near term.
Okay, all right. The other one I wanted to ask you about is Mazagon Dock. Those numbers looked weak. We had Zen Technologies over the weekend as well. Those numbers as well looked weak. Defense, there's a long runway, but the numbers are not really showing off in quarter one. Would you be a buyer on a dip?
You see, defense stocks, but we should not look at on a quarter-on-quarter basis because what happens is that, first of all, the execution in many of these companies, that is usually back-ended and it happens in the second half of the year. That is one. And secondly, it also depends on how the orders are progressing, how the execution has been in the previous quarter and in the current quarter. So these stocks need to be looked at with I would say, at least 2 to 3 year kind of a viewpoint. And on a quarter-on-quarter basis, I think I would avoid looking at these names. And I think on dips, some of these stocks, I think they continue to make sense to be looked at. But in the near term, one should not expect any fireworks from these stocks.
Would you say the same for Kotak Mahindra Bank? Amnish, hi, morning, Surbi here. I mean, would you give them the benefit of doubt? It was just one bad quarter. How did you view it?
You see, Kotak and IndusInd are on a very different plane because in IndusInd, for example, the management change will be there. There have been a lot more problems, whereas the Kotak is actually having the growth issues not now from quite some time because the Kotak actually lacks consistency in terms of, say, numbers. A couple of quarters you will see they're good numbers, and then for 1 or 2 quarters the numbers won't be, I would say, that great. But definitely, if you run through all the banks, excluding, say, an HDFC and ICICI, there seems to be some stress which is building up on the MSME side, on the unsecured side, and that is sooner or later reflected in the numbers of all the banks. So I think maybe another quarter or so, the numbers will start improving. But as of now, I would say the Kotak, one should not club with IndusInd Bank, but definitely ICICI and HDFC are the pick of the lot.
No, actually, I was asking more from the point of view, you said that don't look at defense stocks on a quarter-to-quarter basis, have a longer-term view. So that's why I was asking whether you will apply the same to a Kotak Mahindra Bank.
You see, the banks and defense we should not compare because defense companies, for example, they might be sitting on an order book of 3 to 4 years, whereas in case of financial, it's a very different ballgame. So I will not apply that yardstick, but yes, it's a good bank. The capital adequacy ratios are there. I would say it's a strong bank, but slightly inconsistent in terms of, say, the performance. So on dips, yes, Kotak Mahindra can be looked at from the longer term.
Okay, all right, but go with caution. That's the advice that Amnish is giving out this morning. We'll take a break. Amnish, stay on. We'll have more questions for you. Quick break. Back on the other side. We'll also discuss market technicals with Sudarshan Sukhani and Mitesh Thakkar. Welcome back. So we're dealing with cues which are not very, very supportive this morning, and the implied open has been telling us that we'll start lower, at least 50 points lower. Let's pull it up once again. We'll start getting our pre-opening rates as well. Yeah, still 40 to 50 points down. So what's the trading call for today and the setup? We have both Sudarshan and Mitesh joining in. Gentlemen, good morning. No respite for the bulls whatsoever. So let's start with the indices first. Mitesh, I know both of you have been sort of cautioning our investors and our viewers against taking any kind of big index positions. But anyway, for the day, Nifty, Bank Nifty, Mitesh, what would your advice be?
My belief is that, we've been kind of slowly getting downwards, slipping downwards, and, we've kind of, in the last 3 days, a bit of accelerating. But if you look at the charts in May, June, we had an important consolidation around this 24,500 mark, and that was the lower end of the consolidation. And then we have this big gap around 24,400 to about 24,300 zones. So I think another 100, 200 points down the line, one, the decline could be arrested. Two, then we should look for some reversal pattern. This is also helped by the fact that the put call ratio is now getting close to levels from where historically we have seen a rebound in the market. So maybe, a bit more of pain is left, maybe a day or two, some volatility, some choppiness could happen. But below 24,500, if we get there, then I would look at signs of reversals.
Absolutely. So that's the sort of next sort of zone, support zone that we put out as well. Gentlemen, morning. Sudarshan, what about you?
Yeah, good morning. Well, I've been suggesting 24,500 as a possible support level when the Nifty was much higher, and that's very close by. So that's not a worry. Most traders know that we are drifting towards that support. The worry is something else. The worry is what happens if that support does not hold. There is no guarantee that any support level will hold and then give us a buying opportunity. That is my worry now, given the fact that Asian markets are in some kind of a significant downtrend, and America is not responding anymore to higher good news. Traders should not rush into buying if we reach 24,500. Wait patiently for a couple of days and see whether this level holds or not. If it does, then cautious buying can begin. So today, there is a trade only, sell on rallies or do nothing.
Okay, so sell on rallies and be very, very cautious before initiating any kind of longs. Got that point, gentlemen. Let's come down to stocks as well. Sudarshan, what's your stock list looking like?
Well, it's a mix. Dabur is a buy with a stop under 512. Cipla is a buying opportunity. Pharma, as you know, Pharma does its own thing while the whole market does something else. Cipla is a buying opportunity with a stop under 1539. I have two intraday shorts. One I am not able to pronounce properly, UNO Minda, which is an intraday short with a stop above 1087. And the second is a warning. This is an intraday short. Blue chips should never be shorted for more than a few hours. Bharti Airtel suggests some minor distribution. Consider going short with a stop above 1927, but cover up as soon as possible.
Okay. Mitesh, what about you? What are your trades?
Yeah. I have a mix of buys and sell calls as well. On the buying side is ICICI Bank. After the numbers also, we were having some buy calls over there. The stock did well, has held down and made fresh highs in the falling market. Now it can be bought with a stop below 1470 for targets of 1520. Dabur gave some kind of a reversal on the intraday hourly and 2 hourly charts. So buy here with a stop at 516 for targets of 535. On the selling side is Manappuram with a stop at 264, 264.5. And here I would look for targets of around 248. And Angel One on a bounce back, I would want to sell. Let's around 2630 odd zones. Keep a stop at 2680 and look for targets of 2525.
Okay, all right, got it. Thanks very much for that, Sudarshan and Mitesh. We'll come back to you a little closer to market opening. Take a break right now. We'll be back. We will have the pre-opening rates with us and also the promised conversation on real estate. Vijay Agrawal of Aquarius is joining in to talk about the prospects for listed real estate companies in the near future. Welcome back. We are getting some interesting rates in the pre-open. I'm talking about stocks. The index obviously is all over the place right now. PNC Infratech has announced a large order. I think it's from Eastern Coalfields. The value of that order is over 2,000 crores. And you'll see it flashing on the ticker as well. We've been putting that out. That's why that stock in pre-open is up almost 6%. And you have some sharp earnings reactions as well. Paradeep Phosphates, where the margins have literally, jumped year on year. Good set of numbers. Paradeep Phosphates is up 12% right now. But on the flip side, look at a Mazagon Dock. Disappointment from companies and stocks, with a big rally. Mazagon in pre-open, very early in pre-open, but it's suggesting it's 10% on the lower side. So that's how you're getting some pretty, clear, diverse reactions on earnings. Amnish, leave us with the stock. I mean, anything which you really liked. We don't have too many great earnings this season so far, but your top pick, something that you're convinced about looking at the numbers?
You see, very difficult to give you, say, a single stock. As I said, for example, something like an ICICI Bank looks safe at this juncture. Or if I take, say, a 6 months view, ITC might be a stock which can give you, say, 15-20% returns also. But I think in the middle of the result season with not many numbers giving you a lot of comfort, I think it is very hard to pinpoint at this point of time. And maybe next few days will give you a better picture.
Sure. Okay. All right, Amnish. Thanks very much for that. Well, let's move on now to our promised conversation on real estate. It's been a good run for real estate companies for the last several months, several quarters. However, the question that's coming up now is that with this IT sector slowdown, is there a second-order effect, perhaps, that real estate stocks and investors need to be prepared for? Let's discuss this with Vijay Agrawal, Managing Director, Head of Infrastructure and Real Estate at Aquarius. Vijay, thank you very much for joining in. And that's the real question, right? These IT companies have been talking about low growth, slow growth, or no growth for a while. But now it seems they're talking job cuts. So now I don't know if you have a rough number to this. The segment that could be impacted maybe is the segment, which is 1 to 2 CR housing. On the listed universe, I don't know who has that kind of inventory, the maximum exposure. But are you expecting any ripples in the real estate market?
Surabhi, thanks. I think any news in the market always have a ripple effect. But if you see today, 40% of sales in Bangalore market are driven by IT employees. So definitely we may see an impact there from that perspective. But across the board, if you see general sales by the listed companies are about 2 crores. And yes, if there is a job loss, it will have an impact. Otherwise, impact will be minimal. But always market will be cautious from their approach and seeing the things, how it will pan out going forward in other companies. But if you see otherwise, the GCCs are increasing their headcount. So if any job cuts by TCS or other similar companies may be absorbed by the GCCs. So maybe we have to wait and watch for next 2 to 3 quarters how things are panning out and take a call on that basis.
Vijay, so from morning, let's talk about who has maximum exposure, if you can kind of put it that way, to GCCs. GCCs are where? Hyderabad, right?
Hyderabad and Bangalore.
Hyderabad
These
and
are
Bangalore.
The two,
but Hyderabad predominantly? And now some in Bangalore as well?
No, both the places. If I am not wrong, 50-50 you can say GCCs. See, Hyderabad has become an attractive market for GCC from the rental perspective and a housing cost perspective. So see, whenever a GCC is making a decision, they look from the cost of rentals as well as a housing cost for their employees. So that way, till 2 years back, Hyderabad was much better. Now, also, Hyderabad is still cheaper than Bangalore. So, and any GCCs don't want to rely on only one city. They would like to be a multi-city from the risk perspective. So, if you're opening a second center, you would like to open between Bangalore and Hyderabad. That's
And
the
the number
favored
of
destination.
GCC jobs, Vijay, are offsetting. I mean, of course, it'll take a long time. You just have to look at IT services. But I think that's a very macro, perhaps, way to look at it. Real estate is a very micro market, right? Each city is different in that sense. So, in your coverage universe, where do you still find, fairly long runway for growth, even if pricing does not go up very much from here on, but volume-wise, things look pretty healthy. Which of those companies?
So see, I think if you look at the listed universe, Loda, DLF, Oberoi, Prestige, these people have really reported much better numbers and a pre-sales number. So, and looks like if your new launches pipelines are good and you are continuing the launches, then your pre-sale number will improve and it will be there. And so that's the thing. Only I think the Q1, some markets had an impact because of we had a Operation Sindoor, Iran, Israel war, and this
Yeah.
thing. So people, all the buyers sit on fence in such type of uncertainties.
No, absolutely. And that's something that Lodha cited yesterday in our conversation. And I mean, that's what they've been saying in their calls as well, that there was this Operation Sindoor impact. But I have two quick questions, Vijay. First of all, simple question. Do you think that demand from GCCs will fully offset the weakness in demand that we may get from the IT sector for key markets like Bangalore and Hyderabad and Pune?
Yeah. So I think looks like GCCs will offset the demand for any losses from the IT retrenchment.
Okay.
Because if you see the space absorbed by the GCC is much higher. I don't have often the numbers, but generally if you see 20 to 30% of the leasings are absorbed by GCC. If that's a number, that means the GCC headcounts are increasing.
Talking about residential, Vijay, residential is what we're discussing, because obviously if there are job losses on one side, but then GCs are employing, and they're employing with decent salaries as well. So I was saying residential demand weakness because of weak demand from IT service employees, will that be fully offset by GCCs?
Yes, that's what I'm saying.
Okay, got that. My second question is that would you have a rough sense of, say, if we talk about that bracket of 1 to 2 CR, which are the listed developers which have maximum exposure to this segment? Because a lot of companies like DLF anyway, I mean, the bulk of their sales are in much higher ticket segments, or even in Oberoi for that matter. Who is biggest in the 1 to 2 CR bracket?
I think people who are focused on Bangalore, Chennai, and Hyderabad market will have a focus. So I would say Prestige will have that share. But yes, Prestige, Brigade, and like Casa, the other place, Shobha, they will have a larger share of 1 to 2 crores sales in their portfolio.
Okay. Yeah, no, absolutely. We've kind of asked all these companies.
Because the bomb.
Yeah. No, I mean, IT firm hirings have been going down for the last many years. It used to be in the tens of thousands, but I think last couple of years it's come down to a trickle. And we've asked that question to companies like Prestige. Vijay, you mentioned Prestige, whether IT hiring slowdown is going to affect your sales. And the answer we've consistently got is there is no there is enough demand. I mean, it's not just IT services. Other segments are doing well. The traditional IT services, which is CCS, Wipro, Infosys, etc., maybe they're hiring less, but it's getting made up by from other sources. Startups, for example, is one big segment, and so on and so forth. Thank you very much, Vijay. Good to have you with us here. Appreciate your time here on CNBC TV18. I think we just, at the end of the pre-open session, maybe just take a quick look at what's happening there. And then we'll move on. 70 points lower, 24,600 is where the Nifties now are at this point in time. Sudarshan and Mitesh are with us with what they want you to do. 9-10 calls. Sudarshan, back to you. What do you have?
Well, it's Cipla. Consider buying Cipla with a stop under 1539.
Mitesh, what about you?
Sell on Manappuram for targets of around 248.
Okay, Cipla and Manappuram. Got that. Let's welcome in. Okay, thanks very much, both of you. More later at 10 o'clock. IndusInd Bank is we want to focus on once again. reported numbers. Gaurav is here with what you need to know and what's the street made of the numbers. Gaurav, take it away.
Well, as IndusInd Bank, Street was expecting weak set of number, and Bank has delivered fairly inline numbers with what the Street was expecting. Net interest income declined almost by 14%. When it comes to net interest margins, there was a surprise because it came at around 3.46 versus the expectation of 3.2%. But on the other hand, now operating profit that declined almost by 35%, and one negative factor here is that the fee income that actually declined, and as a result, we saw some pressure in the operating profit. Other than that, credit cost, as we expected, it remained elevated, although it has declined on a sequential basis because last quarter's base was high. But again, that is something which is concerning, and as a result, profit declined almost by 72% on a year-on-year basis. Now, what is a key concern here is that limited triggers is what the market is seeing in IndusInd Bank going ahead. If you look at net interest margins, there is going to be some kind of pressure. When it comes to operating expenses, now management has said that it will grow likely in a single digit, so there may be some less stress there. But other than that, credit cost is also likely to remain high, and as a result, now Street is concerned about the ROA delivery. In fact, we've got a few brokerages. JP Morgan, they believe that the operating profit is likely to stay subdued in the next 3 years, and they also believe that there will be some pressure in ROAs. When it comes to Macquarie, they believe that ROA is likely to remain below 1% in the near term, and we also have Bernstein, who believes that this set of result actually forces reassessment of near-term ROAs. So definitely there is some concern raising about the ROAs if it will reach 1% even in FY27, and as a result, we are seeing some pessimistic view from brokerages, and also on the back of that, we will be watching out on this stock today.
Okay. All right, got it. Thanks very much for that, Gaurav. Let's quickly head to Ekta, revisit numbers that were put up by Torrent Pharma. Ekta?
Well, yes, largely an inline set of numbers for Torrent Pharma this quarter. So the revenue was up around 11% on a year-on-year basis. The EBITDA also was largely in line with estimates in terms of the margins. It came in at around 31.4%. The street was anticipating around 33%, and the profit at around 546 odd crores. What they did record was growth in all three of their key geographies. So India was up around 11 odd percent year on year. US was up around 16% to $36 million, and Brazil was up around 11 odd percent. So there was double-digit growth in three of their key geographies, and that's the reason why there was optimism around the Torrent Pharma numbers, largely in line.
Okay, all right. Thanks a lot for that, Ekta. Well, let's go back to Mitesh for a quick comment. Mitesh, any view on Torrent Pharma?
See, Torrent Pharma in the last few weeks, has done very well. But I actually don't have a very clear understanding of what the future movement could be. My sense is that if you get a decline, some pullback, then it will be a good entry point. Otherwise, at this point in time, it's run away so fast that the risk-reward equation for an entry is not good.
Okay, got that. By the way, just put up Premier Energy as well. We'll just take a look at what the stock is doing. Any thoughts on this one? If you've tracked it on charts, 1050. Yeah.
I do track it, Prashant. If you look at the last few weeks, the stock has been doing a range of about 1130 to roughly about 1000. I think the way the charts are shaping up, it will still be range between these two levels. Only a move above 1110, 1120, could suggest that we are preparing for a breakout. For the time being, doesn't look like. I will assume that it will be, within this range.
Okay, I think we're just hitting market open and we'll take it from there. Mitesh, thanks very much for that. 70 points lower on the Nifty, 270 lower on the Sensex. Just waiting for the first rates to start to appear up on our screens. IndusInd and Premier and KEC are, of course, some of the earnings-related reactions which we will watch out for. But there is other stuff as well. So what do we have? First rates coming up. We've been in a bit of a down drift. And will some of these supports that we put out hold is the question. 24,600 is on the Nifty, 24,620 or so. The Nifty Bank is starting about 0.25% down, 55,900 and actually 56,000. So kind of around that round number. Small cap index is down 0.25%, 18,023, and I think you've got the mid cap index which will come up about 100 points lower, 57,450 is where we are at. Advanced decline is negative, 950 stocks are lower and about 670 stocks are higher as things stand. So this is a bit of a lower start. Nifty heat map will give you a sense of how we are starting. Actually, it's a pretty quiet start. Maybe single stocks, broader market in a bit. but BEL is down. And Adani Ports is on the other side. So more down than up, certainly 30-odd names down and about 20 names which are starting in the green. Surabhi.
Absolutely. I mean, it's very, very soft. No clear trends. IT is still seeing some pressure. Infosys is down 1%. Wipro is down 1%. There's some more red on TCS, but I think Infosys is bucking the trend. No, actually, Infosys is also down now 1%. So most of IT is seeing some follow-through selling. Eternal is seeing some profit taking after its stupendous run last week. Eternal is down 1% this morning. Shriram Finance also seeing some profit taking. It was yesterday's big winner. The banks are not offering too much support. HDFC Bank and ICICI Bank both are subdued, losing about 0.5% each. Titan on the lower side. So, yeah, it's a little all over the place. On the upside, there's some sense of buying in consumer stocks, some perhaps defensive buying. So, Tata Consumer, Nestle, Lever. These are the stocks that are gaining a little bit. And some metals like JSW Steel are managing, again, 1% up on JSW Steel. Coal India is managing 0.5% as well. But that's about it. Reliance, for the time being, absolutely at the flat line. Very quiet. Hardly any movement on the Nifty.
Well, in this sort of a weakish market, a subdued market, you still have some big winners. Paradeep Phosphates, take a look at that stock, bucking the trend. That's up 12%. So the market is clearly distinguishing between numbers that they like and numbers that are very subdued. The stock from the mid-cap space is up more than 10% as we speak. Big up move is what we're seeing. Vare Energies as well, one would argue that, the global environment is going to be very, very subdued, and maybe, in fact, it has a limited number of years ahead of it in terms of good amount of demand. But some on the street believe, well, no, the runway is still massive. And that stock, in fact, I remember towards I think around 6 months or so ago, it went to around 2,100. From there, that one has given you 50%, and these numbers look good. They're reiterating their guidance out there. Another stock that's reacting positively is Acme Solar. We'll try to get the management, I think, in the next hour or so at around 10:30 a.m. on Chartbusters. That's reacting positively as well. NTPC Green Energy, that's the other one that's reacting positively. So all these stocks actually are reacting fairly favorably in today's trading session. Premier Energies, let's pull that one up as well. All these stocks, remember, came out with a set of numbers and they are reacting positively. On the flip side, the weak result reactions. You have Aeroflex Industries, that's down 7%, seeing a lot of profit taking out there. Piramal Pharma, that as well is getting slammed. So that's down, in fact, close to around 3%. However, from the frontline index, I think IndusInd Bank, after starting off in the red, has done a complete U-turn. That's moved well into the green. And Mazagon Dock as well, that was at lower circuit for some time in pre-open on low volumes. That's done a big turnaround as well. Now it's down only 3.5%.
Just one more stock adding Nigel to your list is 5-Star Business Finance. It's down 10.5%. Asset quality is stress and the market doesn't like it. So that's probably the earnings casualty this morning.
Okay, absolutely flat change on the Nifty, 24,680. And by the way, the market's turned into the green. Even as we had a largely negative start, we are back up again at this point in time. Just taking a look at what else is happening. Okay, we'll just put up more specific names in a bit. But while we do that, let's also bring in Rana Gupta, Senior Portfolio Manager, India Equity Specialist at Manulife Investment Management. Rana, great to have you with us here on the program. Thanks very much for your time. Let me actually take the conversation in a slightly. You have a global perspective as well, and you of course invest here in India. Are you? And I've been sort of reading at the margin about this that in China, across a range of industries, right, there is a push now to cut supplies, cut output. Basically lessen competition because there's just there's a glut of supply and there's basically deflation, right? Producer price numbers in China have been negative for a while now. Do you think there are any implications of that in specific industries here in India? Chemicals, for example, comes to mind, Rana. What else? I just wanted your sort of starting thoughts there.
Good morning. That's an important aspect and we should talk about it. There are two aspects to it. One broadly macro. After a long while, we see something macro coming out of China. This drive is called in English anti-involution drive, which basically means to cut supply. And we have seen this something like this 2016. Now, if you think about solar cells, steel, metals, electric vehicle, all this, China has huge overcapacity, and the overcapacity comes from the state-owned enterprises. So we do think some consolidation will take place there. Profits can improve at the margin, and global demand supply scenario at the margin can get better. At the first level, I think this makes overly sold and pretty cheap Chinese equities at the margin attractive. And we have seen some money flow into the China share markets, and I think that has done quite well. On an implication to India, at a flow level, I think this makes China more attractive. But coming to fundamentally, as far as the metal part is concerned, I think that can be benefited positively if the supply cuts really come through. However, I think in the solar and electric vehicle, the overcapacity is pretty massive, and there's not much inflow from China to India. So there, I think the impacts are more global in nature. Lastly, in China e-commerce also, there is a lot of competition, and that's mostly in the private sector. So I think much of supply consolidation may not happen, but there's just a read across. There's been nothing too much read through for Indian equities as such in that aspect.
So metals primarily, Rana?
Yeah, yes, that's correct.
And chemicals as well? No.
Chemicals, I think one has to, because chemicals is such a broad area, one has to be very specific. Certain chemicals will do well, but I think the issue is that chemicals, there is a lot of oversupply also. So chemicals really have to go bottom up, part by part, and see which chemicals benefit. Certain chemicals will benefit, but even in Indian chemical space, if you look at the larger companies, they are there are companies who make a lot of it. So at a company level, we are unable to identify that which company will really stand out and benefit. That said, I think at balance, you're right. I think chemical, there are some benefits in certain segments.
Okay, got that point. Rana, hi, morning. So we all know that in India, right now, we're dealing with a bit of an earnings issue. So in this environment where the market's sluggish, earnings are not really picking up quickly enough, just take us through your portfolio construct. Is it more defensive in nature? I mean, what are the changes that you've made over the last couple of weeks, if at all? What are you, where are you parking the cash, and what are you avoiding?
I think a best way to look at this will be, let's say, the last time I was in a channel, I mentioned a pretty positive view on the consumer, on the financials, as well as the infrastructure. So let's see how those have panned out. I think the consumer stocks, particularly in the food tech segment, particularly in some of the select retail stocks, has seen a significant rally. So as in the financial side, particularly the mid-cap banks and the non-banks, which are very levered to rate cuts. Now, these stocks had a good run-up, and the results have not kept up pace. Now, it has to be said, even on a standalone basis, results are a tad disappointing, even adjusting for the Q1 sluggishness that happens. So I think from here on, it's going to be a bit of a patience will be required, because the fundamentals will take some time to turn around. When the asset quality has worsened across the board, I think it will take about 1-2 quarters to stabilize and then come back. Because the stock price had run a bit ahead over last 3-4 months since the time the rate cut and the tax cut happened, I think a period of adjustment, we look at this quarter will be a period of adjustment for consumer as well as the financial stocks. The infrastructure side, we continue to be bullish. I think infrastructure side, particularly real estate and power, will continue to see good demand. I'm referring to top-end real estate and the renewable power plant here. And at the margin, because globally, I think the anxieties regarding trade, anxiety regarding China's oversupply, at the margin is diminishing a bit. That makes some of the global cyclicals that one has avoided, whether it's IT or metals, at the balance or even tactically, tactically a bit attractive than they were beginning of this year.
Hi, Rana. Good to see you in. Tech, I just want to clear that point on tech. TCS went ahead and they said they're going to be pulling back closer to 2% of the global workforce, not because of AI, but because of a talent mismatch. Yesterday, to be fair, actually, the stock didn't react very, very negatively. So that wasn't the reason to sell the stock. But do you think with a lot of this negative news that's coming in there, the IT stocks and the IT sector is slowly on that process of actually bottoming out, and then it becomes an investable idea? Or do you say there's too much of uncertainty, you'd rather stay away?
Look, I think on IT sector, the AI is going to be a structural headwind. That is not to say that from time to time we will not get tactical investment opportunities. Now, what TCS has done, basically, I think this skill mismatch. I think it has a lot to do with AI. And the way AI is increasing productivity of people, so many people record or not, that's a matter. I think we will continue debating for the next 1 or 2 years. And you will see more on this front. But the broader point is that the IT stocks have, the index is down about 15-16% this year, market up about 5%. So they have underperformed 20%. There is bad commentary. And also their clients, they have not closed deals as evident in commentaries of most of the IT companies. But now with trade deals getting signed and US tax cut coming through and all of those things, we do expect a bit of pick up in the deal momentum. All the pricing pressure will remain. I think that is, we have to just accept that fact. And because the valuations have corrected, they look a bit reasonable. There is room for a tactical trade in IT in our view.
Tactical trade in IT. All right. And from the pack, what would you prefer? The ER&D, the large cap names or the mid cap names?
I think because the large cap names and as I said, they remain tactical trades. But I think if someone were to look at somewhat more durable investment ideas, one has to look at companies which are not really mid cap companies, because these companies also by now grown, but where either the management is pretty aggressive in deal wins and going ahead with these deal wins. If you can go through earnings transcript, you will see there are 1 or 2 companies who have got very decent deal wins, even if this macro environment. So I think that is one bucket one should be, relatively speaking, bullish on. The second is the companies where they can do a lot with AI, because I think this AI is one theme which is only going to grow bigger and stronger going forward. There are 1 or 2 companies in Indian IT space where they facilitate AI and agentic implementation with their clients. And I think, and that accounts for a pretty chunky part of the business. I think those are the businesses on a bottom-up basis also we like. But top-down large ITs, I think large cap ITs, they are so big, they will take time to adjust to the realities. And this kind of job cut news that you have heard, I think this is not the end of it. There will be many more adjustments required. But that said, not stock picking is different. There could be room for a tactical trade after prolonged underperformance that IT companies have seen.
Okay. All right. So that's the sense on IT. Rana, what about infrastructure and industrials? I mean, again, here we'll be speaking to one company from that space, KEC International, in just the next couple of minutes. After being among the big leaders of the rally back in end 23, early 24, how are you positioned on these stocks? Because at least from a valuation perspective, some of the multiples have cooled off now.
So the infrastructure industrial side, what we like is somewhat, I would have to say, the rare in that industry, that visibility of cash flows. The construction companies, they hardly generate significant cash. And I'm talking about just operating cash flows. And that need not be like today. But we need to see visibility of cash few years down the line, because in our view, the cash should be reinvested for growth and not too much of debt and external funding and liquidation and capital raising perhaps not the best way in our view. With that construct, we prefer the asset owners, and the asset owners, particularly the renewable power segment. That is one area that we like. On a broader sense, at least here in regionally, we also consider other asset owners as infrastructure plays, and this will be something like a telecom, hospitals. They're also even airports. They're also infrastructure plays. So asset owners, steady cash flows, growing cash flows. Those are the kind of businesses that we like.
All right, interesting. Yep, interesting perspective on what sort of you can consider as infrastructure, and you're looking at some of those other related allied sectors as well. Got that point. Rana, thanks very much for joining in. Good conversation as always. Wish you a good rest of the day. Well, the market has stabilized for what it's worth. I mean, considering weak global cues this morning, there is a bit of a bounce. We've been saying that we've been at the lower end of the range, oversold levels, whether you're looking at the F&O market cues, etc. So maybe from those levels, at least there's a bounce. Let's see. Bulls will hope this really holds on. Let's focus on KEC International now. The company reported a steady set of numbers for the first quarter. Profit growth was healthy. The order inflow is something that analysts are watching very, very carefully. Of course, KEC has given a guidance of 15% revenue growth this year. Let's talk more about the outlook and what's happening on ground. We have Mr. Vimal Kejriwal, Managing Director and CEO of the company, joining in. Mr. Kejriwal, good morning. Great to have you back on. Always good to hear from you. So, sir, let's start with the order inflow guideline. I mean, otherwise your pipeline is very strong. I think your order book plus L1, you're at 40,000 crores. So that's a solid number. But I think analysts are looking at the granular details of how many orders you'll get this year. I think the intake was about 5,500 crores last year. Is there any concern of a slowdown, particularly in the West Asia markets, because oil prices are weak? Is there any decline or softness in tendering activity there? Is that a risk?
So let me give you the correct figures. Actually, we got 5,500 crores of orders this year, which is almost 28% lower than last year. But we are L1 in almost more than 6,000 crores, and largely in the T&D area. And surprisingly, most of them are in West Asia. So I don't think we are seeing any slowdown. I'll say any slowdown in that part of the world, whether it is Saudi, whether it is Oman, whether it is UAE. They are just continuing to, keep on releasing tenders. In fact, right now we have almost 25,000 crores of tenders to be quoted in Saudi itself. Okay, so I don't think people have to worry about whether West Asia will do well or not. I think we are very positive about it. I think what we need to also understand is most of these orders are on the back of renewables which are being set up. So most of them are for the transmission of power from renewable sector. So I don't see any risk right now from the oil prices in this market.
Okay. All right. That would be very reassuring for all your stakeholders to hear that the West Asia market is still booming and looking good with renewables specifically. You said 6,500 crores. Those are the orders for which you're L1.
Not 6,500, but yeah, I don't know the exact, but it's 6,000 plus. And I think almost 90 to 95% are in the T&D sector. And I think close to 4,500 or so are or maybe more than that, are in the T&D part of it.
In that. Okay. So you're sounding still very, very optimistic, at least on the T&D pipeline. Water will come to later. But just, hearing you out, you're confident of delivering 15% growth this year, top line?
100%. We are very clear.
Okay.
All
right. Kejriwal, 15% is top line growth as you see it. Should not be a problem. Good morning, sir. Just to complete that earlier point, where you said that most of the orders are renewable, and that is something we've heard from other companies as well, right? I mean, because the grid does not exist and it has to be built. If you've got to set up all these renewable projects and you've got to get the power from where it is being produced, generated to where it is needed. Is that is there a slightly longer kind of runway, some numbers you can share with us, because you are speaking with customers, you know what's happening there, especially in West Asia, Saudi, etc. Is it going to be a very large business over the next a few years?
Yeah, morning, Prashant. I think you are very right. There will be a very long business. I can see very clearly Saudi has just announced some more new tenders for renewables. Abu Dhabi is going. Oman is doing very well. I think all of them are very clear that they want to reduce their dependence on oil for power, and they want to use oil for other purposes, etc. So very clearly we can see in West Asia, India, you are very clearly aware that from 500 gigawatt now the government has upped the target to 600 gigawatt in 2032. So I personally do not see any risk happening on that part of it. The other piece is that all these renewable projects come at a place where you have ample land available, which is generally far away from the consumption center. So, they require large transmission lines. So, which is where I think we are very positive on those markets.
Can we estimate some sort of I know it's an unfair question, but a TAM, a total size of opportunity here, just based off this renewables, etc. being set up?
I don't think I have that number right now, to be very honest with you. But if you look at the T&D orders to be, tenders to be bid or which are under bidding and not been decided, is around 90,000 crores as of now. Okay. That's the size, and that's for next 3 months sort of thing. So there's a huge opportunity which we can see in this market.
So it's. I mean, you got to pick and choose the work you want to do. I mean, there is enough demand.
I'll say almost.
All right. Hi, Mr. Kejriwal. Good to see you in. And as you're indicating, in the past quarter as well, we did see T&D projects, higher margin projects got executed, which helped margins perk up a little bit. But you have guided that margins will improve from here on. So the top line growth we've got 15%. Margins, you continue to hold on to that 8.5% guidance. No risk over there?
No risk for that. 8 to 8.5 is what we have been guiding. First quarter we did 7%. So I think we are on track for that.
All right. So the margin trajectory continues to improve from year on. Give us a sense, even in terms of your debt reduction. You were told us last time around, I think as a percentage of sales, it was around 3%. That's likely to come down. It appears you have repaid some debt. So what is the updated debt number, and will this continue for the remaining of this year in terms of debt reduction? The absolute number is what I'm asking. And working capital days, you were guiding that it comes down to around 110 days by the end of this year. That as well holds on, right?
Yeah, that holds on. Although in Q1 we were slightly off.
Yeah, 120 plus.
128 instead of 122, what was there last year. But I think we are very clear on that target that we should be achieving that. Debt, we have been able to have a reduction of around 250 crores despite an increase in sales. So I think we are looking at that debt going down below 5,000 as an absolute number. And our interest to revenue has been 3%, come down from 3.4%. So we're trying to take it to around 2.5% is what we are looking for.
Mr. Kejriwal, now I'm coming to the water business, and you explained it really well to us last time around that it's an issue with payments being released by states, and then you have to be very careful and take state-by-state calls. So what is happening with that business right now? Also, just give us, so we understand its relevance in terms of, say, your total order book. What percentage is water, or maybe your total revenue pie? What percentage is water right now? And will you be getting, the 1,000 crores plus revenue, which you told us last time, that things are picking up, that it's beginning to move? What's happening here?
So let me come to the numbers first. So this quarter, I think we got, for Q1, we got around 257 or odd crores of cash flow from the business. Okay. And even now we have got some money. In fact, yesterday evening also we got some money from one of the states. So we are primarily in two states, MP and Orissa. MP has been relatively much better in terms of payment. Orissa is just opening up. There, I think they had some issues, so they were not making payment. But now the payments have started trickling in. I'll not say it started flowing in, but they started trickling in. The way we have been looking at it is that we are not planning to increase our exposure. So whatever cash we get from the business, that is plowed back into that business for completing of the projects. So I think when you look at the number, if I got 250 crores of cash in Q1, and if you multiply it by 4, I assume it will continue, then we should be reaching our 1,000 crores of revenue target for the year in water.
And what is water? What is it as a percentage of your order book? And will you now be, degrowing, as they say, degrowing or defocusing on this business?
I don't think we can defocus. It's a strategic business, and I think the government has to sort out the issues in the cash flow, because part of it gets funded by the central government, part of it gets funded by the state government. So I think there is some place where it's not working out very well. I think it's getting sorted out. As far as the order book is concerned, I think we have roughly around 2,000 crores of orders yet to be executed in my order book. So that's, if you take 40,000, then it's around 5% of my order book.
But it's a higher margin business, like you explained to us.
It's a double digit.
It's a double-digit margin business. So hopefully it gets sorted out. Got your point, sir.
Slightly forward-looking kind of this thing. This is war in Russia, Ukraine, right? Now we've heard from some, a lot of the transmission, distribution grids, etc., have been completely destroyed in that country. Is that whenever and President Trump is calling for a ceasefire in the next 10, 12 days. I mean, the war is going on for 3 years now. I mean, do these kind of things open up whenever there will be a big rebuild effort whenever it happens, whenever the fighting stops? Are those also opportunities in your as you see them?
100%. I think these are places where there are a lot of opportunities. And let me give an example. Already we started receiving inquiries from Syria. Okay.
Oh, wow.
Okay. So I'm just saying that, and Iraq is already rebuilding, although I am not there right now, but some of my competitors have already gone to Iraq where they started rebuilding lines. Syria is probably one step behind that, and Ukraine is probably still a little bit behind that. But in Ukraine, I know we've been getting inquiries for supply of, transformers and towers, etc. Nobody will go right now to build a line there. But supplies and all inquiries are already being discussed. I received some of the inquiries. So I think maybe 6 months down the line or something, or maybe even earlier, you may start seeing something happening in that market. Okay.
No, that's very interesting. And those things, of course, I mean, very difficult to put a number to it, but those are potentially very large rebuild efforts, right? typically billions of dollars over, of course, spread over many years. We'll continue to track it, but it's interesting you're saying you're already starting to see inquiries come through, even from Ukraine, etc. Thank you very much, sir. Thank you for joining us. It's always a pleasure having you here on CNBC TV18. Markets are up about 8 points, but 8 points is not the headline. The headline, of course, is the bounce we've seen from the day's low, although we are within the first 1 hour time frame. So still, I think finding our feet for the day. Nigel.
All right, well, let's get to our next earnings conversation then. TTK Prestige reported actually a weak performance in Q1. Muted revenue growth, decline in margins and profits. To discuss this and the impact of the quarter gone by and how is business shaping up from here on, we are now joined by Mr. Venkatesh, the Managing Director and CEO at TTK Prestige. Hi, sir. Good morning and thanks a lot for joining in. I'll tell you what, for your category and your company as well as the segment on the whole, the street is willing to look ahead. So the past quarter was a weak one, but that was anticipated. Tell us, how are things likely to shape up from here on? And before we get to numbers, are you seeing signs that Q2 is gradually shaping up to be better? There's a recovery in sight. You'll also, towards the end of September, it'll be pre-Diwali, so there could be some festive buying. So are there green shoots that you're seeing?
Good morning. Thanks. I would address this in two parts, one from a company perspective and two from the industry perspective. Our belief is that the industry is slowly back on track. Volume growth is still a little more tepid, but we do see two distinct trends. One, in the urban markets, we're seeing premiumization happening, a lot more of value growth happening in comparison to the volume growth. And two, in the bottom end of the spectrum, as we see some of the lower priced opportunities, there is volume growth happening. So combined, in our view, the industry looks a little tepid at this point of time, but our belief is that it will start picking up as it moves forward, driven by both premiumization and also volume growth at the mid and the bottom end, as we see it. From a company perspective, you're aware we've gone through a large-scale transition of leadership, and currently the management is in place, stable. And we do believe as we move forward, some of our efforts that we are putting in terms of market corrections, in terms of our go-to-market strategies, this would lead us to a reasonably good growth as we move forward.
Okay, all right. You were earlier guiding for high single-digit growth in this year. Do you think that's on? Is there a possibility you can deliver a double-digit growth? And also, if you could give us a sense in terms of margins, what is the band we should work with? Q1, obviously, you didn't get the benefit of the operating leverage. But since you're talking about a recovery from here on, that will play out as well.
I don't want to give any guidance, but like I said, I think we're quite confident that we will move into reasonably good growth as we move forward. As far as margins are concerned, we are considerably investing in a little bit of futuristic investments across capability building, across capacity expansions in specific categories like cookware. And we do see, therefore, there would be a substantial investment in both OPEX as well as CAPEX that would go over the next 2 to 3 years. So that would place our margins at a reasonable place. Suffice to say that I think we are in a phase where a little bit of additional investments when compared to the industry is happening, both in terms of capability as well as in terms of CAPEX.
For Mr. Vijayaraghavan, good morning. Any specifics you can share with us in terms of what how are you thinking about the cookware as a segment for FY26? Any key changes in product mix, etc.?
We've actually moved ahead. We've had some product portfolio gaps in the past, which have got sort of corrected today. Currently, as we speak, we do believe that cookware is one of the segments that will continue to grow reasonably ahead of the other categories that we are in. For two reasons, like I mentioned, there is a lot more replacement cycles have got shortened in the cookware segment, a lot more acceleration around volume. That combined with premiumization happening in the top markets, I think cookware is a little more better poised than appliances and cookers in terms of growth. And we would like to capitalize on this as we move forward, and which is one of the reasons I said the CAPEX expansion is happening at this point of time. Having said that, I think currently our NPDs as well as our product portfolio is reasonably ahead of the industry, and a lot more emphasis on the cast iron portfolio, the stainless steel tri-ply portfolio, a lot more emphasis on some of the new materials that we would like to experiment with. Ceramic, for example, is one of the materials that the industry is experimenting with. Globally, it's picking up, and I do believe that in India, that probably would be one material-specific idea that would probably pick up as we move forward.
Mr. Raghavan, so growth you're saying should gradually pick up. What about margins? Because we've seen a fair amount of compression on margins in the first quarter. The company's been guiding, saying that, there will be some readjustments on margins before things finally settle. So where are we in that curve?
So
is this a bottom, or is the bottom still further down?
So I would suggest that we are at the initial stages, like I mentioned. It's a 2-year to 3-year transition. I would say there would be a couple of quarters before we could probably sort of answer this in a very firm manner. I think the guidance from our side is that we stay invested, and the investment is of substantial quantum, like we mentioned. And therefore, I think for a couple of more quarters, we would see this happen where there would be a little bit of EBITDA dilution as we had predicted in the past.
So some sense of it, I mean, I think you're just above 6% now at the EBITDA level. I mean, how much lower could perhaps margins get, and where do you see the point of turnaround? You're saying 3 quarters down the line. By the time we exit FY26?
Yeah, towards this year, we should definitely see a turnaround.
Okay, all right. What about the mix for you between rural and urban? What is your sales mix?
So we are largely urban driven, while we have a distribution system which is fairly entrenched as a leader in the rural markets. Our belief is a lot of our growth today is coming from urban markets. Rural, in my mind, is still unexplored. We did have an indirect channel through the institutions that we used to sort of sell in the rural markets. Now, that channel has been under pressure for the last few quarters, given some structural changes that are happening there, the multi-finance institutional opportunities. So as we speak, I think we are largely urban driven at this point of time, with a large opportunity at the bottom end. Rural, I think, is something that we would believe would start kicking in for us a couple of quarters down the line.
Okay, all right. What about the export markets? Mr. Trump has something to say every day. But, going according to what you have heard, some Indian producers in various segments, they believe actually it's throwing up an opportunity to push through exports. That's still very small for you. But is there an opportunity, in the horizon, say, 4 to 8 quarters down the line, you can actually see a big opportunity emerging?
So I think there are 2 trends as far as exports are concerned. There is definitely a willingness from most of the global players, including European players. So I see it as 2 parts. We play largely in the OEM segment, as we call it, or the white label segment. We are not into branded products at this point of time. In the white label segment, if you were to look at, there's a lot of intent to shift to India. Of course, there is an ecosystem issue today in terms of costing that we need to work out when we compare it with, say, competitors like China. But I think there's an intent from a large part of the globe to shift supply chain towards India. And that's a very positive sign that I would say from a long-term perspective for white label exports in our categories as we speak. The second part of it, as far as the US market is concerned, I think the signals have been mixed. Our experience has been that a lot of players, including our partners in our branded space, they have sort of not been able to conclude as to what is the impact, and therefore there's been a little bit of holding back in this quarter. But if I were to take a slightly longer horizon of 2 to 3 quarters, I think it will play out, and it may play out to our benefit.
Okay, all right, Mr. Vijay Raghavan, good conversation, sir. Good luck. Thank you very much for joining us. And we'll keep a track on what's cooking at TTK Prestige as we go along. Thank you. We'll take a break here. We are coming back in just a bit. I mean, the big stock move of the day has been Tata Chemicals, right? I mean, it came out of nowhere, and that's at almost $1,000 now. It's coming through very, very sharply. I think there is an upgrade which has come through as well from Morgan Stanley, and we'll highlight that with our team as we go along.
Just one more stock, Jaiswal Nico. We were, last week we had explained here on CNBC TV18, there were 25 crore shares with an ARC that was gradually being absorbed. In yesterday's disclosure, a very, very small 52 lakh shares has been bought by the promoter entity of Shyam Metallics. It's an extremely small investment that's come out there. But the bigger point is, from around 25 crores of holding by the ARC, that ARC's holding has now come to sub 5 crore, and currently the volumes are very, very large. So we'll have to keep an eye out on this one. But we've highlighted that this is an overhang. Till the ARC continues to hold stake, that will be an overhang. Once that gets absorbed, Jaiswal Nico is the company that we're talking about. The volumes are very high. That's why we're just highlighting this, purely for educational purpose. There was a filing on the
put up let's put up the stock if we have it for a quick bit, and then Jaiswal Nico, right?
Yeah, that's the one.
We should have, are we able to pull it up? We should, if, okay. I think it'll come up.
No worries.
on your screen now. So that's the one that Nigel is talking about. 12.5% higher, 46.5 rupees. So it's a big move which is coming through. We'll take a quick commercial break here. We're going to come back in just a bit from now. We'll have the management of Premier Energies join us to talk about their first quarter numbers. Stay tuned. Okay, welcome back. Let's talk about the renewable space, right? And we have a bunch of listed companies now, which allow you to give which give you a play on renewables directly, solar especially. And I have the management of Premier Energies with us now to talk to us about the numbers which they reported for the quarter. Vinay Rastogi is Chief Business Officer at the company. Vinay, great to have you with us here on the program as always. Good morning. I would like to talk about competition, which I think is the big bugbear, which investors are worried about, which we will get to in just a bit. But let's just address the numbers for a quick bit. So order book in the quarter, as I see right now, is kind of flattish, right? But you look at margins have come off. They were about 33% in the fourth quarter. They're about 30% in the first quarter. But these are still, compared to a year ago, they're still significantly higher. They're almost double. So quarter-on-quarter decline, but year-on-year, I mean, it's a big jump. Order book, though, is kind of flattish. So let's just address those, especially the profitability point, Mr. Rastogi. The decline that we saw on a quarter-on-quarter basis, what was it on account of? And could you guide the market for the full year, EBITDA margins? Mr. Rastogi, you'll have to unmute yourself, sir.
Hi, can you hear me?
Yes, please go on.
Hi. So I'll start with the order book. I think our order book has still grown over the last quarter. What has happened during this quarter is that there was a lot of volatility in the international prices, particularly in relation to some of the raw materials. So as a result of that, both the customers as well as we as a company, we felt that it was a better time. It was a time to kind of let the market settle down a little bit and then move towards order execution. So as it happens, since the end of the quarter, we've already signed some large orders, and our order book is actually very, very healthy. So I won't read too much into the quarter ending number as a result of that. In terms of margins, so again, our core profit margin remains intact. Our profit numbers are actually at all-time high. What you see in terms of the slight depression in the EBITDA margin, that's merely an accounting entry. Because, as I said, the international raw material prices were volatile, as a result of which, as a conservative policy, we have taken a markdown on one of our raw material inventory. And that has pushed up the cost of goods sold, causing the slight dip in profits. But as we go forward, as those raw materials get converted into finished goods, we will see those accounting entries being written off and the profits come back to normal levels.
Mr. Rastogi, could you give us an end of the year number for both? Where would order book be at?
So,
and where would margins be at?
So, what I would say is that the Indian solar market is growing exceptionally well. We had a best ever quarter, Q1 FY26, in terms of capacity addition, 11 gigawatts, which is more than double of what we did last year.
Mr. Rastogi, numbers would help, sir. It just focuses the mind.
Yeah, so, unfortunately, I can't give you any guidance in terms of numbers for us as a company policy, but we have a very, very healthy order book. As well as a discussion pipeline with the customers for future orders.
Have we seen the peak? Let me put it another way. At 30% EBITDA margins, is that a bit of a ceiling? And we kind of, same time last year, the EBITDA margin was 16%. 16 is now 30.
Correct.
Right? So, what should we expect? Direction of travel?
So I think the direction of travel, as far as we can see, is pretty encouraging and near the current levels. We have an order book already signed in place for next year's production, which is nearly at the current margin. So I think we expect the visibility at these current levels to stay for some time.
Okay, all right. Hi, Mr. Rastogi. Good to see you, Ben. The cell capacity has been coming on stream. I think in this month, there was another capacity that came on stream for cells. Or it's due to be coming on in the coming months. Tell us, out of the total cell production, how much of it is consumed in-house and how much of it is sold to third parties?
Yeah, sure. So you're right. Our new cell line has come online. It is one of the most advanced cell lines in India right now. We consume part of the cells in-house and partly sell outside to other manufacturers. And that ratio, it tends to vary from quarter to quarter. But very broadly speaking, we try to maintain the ratio at about 50-50 levels.
Okay, all right. So 50-50 levels. And as you get backward integrated, then will that be an additional reason for margins to go up from here on? As Prashant just said, you were doing teens, you're gone to 30%. But as backward integration comes about, is there scope for further margin improvement, or you'll be satisfied at around this 30% ballpark?
So, I would say two things. One, we are integrating backwards. So a lot of the raw material that goes into solar module production, we will start making ourselves. So that will definitely help the margins go up. But the second equally important factor is that, we are moving the policy framework, moving towards more and more value addition in this space, which means customers are mandated to buy in India, and the share of Indian manufacturers as a result in the whole market is also expected to rise. So overall, because of these two factors, like I said, our margins should be very stable and if anything positive because of the backward integration.
Okay, all right. I just want to take that point forward itself because you've mentioned in your con call as well, you want to focus on India. Exports has come down to 1% and that's not a focus area. Previous quarter, I remember it was around 6%. Now, if you're saying that, Indian producers, Indian manufacturers will gain a greater chunk of the market share, what is it currently? If you could give us a rough number, and what is the opportunity then?
So, this year we expect the Indian market at about 40 gigawatts, out of which imports will account for about 15 gigawatts, and the rest would be the Indian manufacturers. So we are talking about 25 gigawatts out of 40, which is a market share of about 60%. In 2 years' time, this 40 gigawatt market size is expected to go up to about 55 gigawatts, with the entire share coming from India. So, which means the share of Indian manufacturing is going to actually, or the absolute volume is going to double in size over the next 2 years.
Vinay, finally, just very quickly, apparently cell prices in China have picked up in the last 2-3 quarters. Some reports suggest they're up 30%. Correct. Can you just tell us if that has any second order effect here on pricing in India? What is generally happening with cell pricing here, modules, and just how you see the next couple of months shape up on this?
Yeah, sure. So, what is happening in China very quickly is that the Chinese companies have been selling below cost. They've been dumping their products because they have so much oversupply and overcapacity, which was not sustainable. So I think they've had a lot of pressure and the prices have started going up finally. The good news for us is that the Indian market is pretty insulated from what is happening in China, partly because of the government of India policies, and also because of all the investments that we have made in our own capacities. So I think, we don't see, there is temporary, some minor adjustments that we have to make in terms of our purchases, timing of our orders, etc. But by and large, our pricing and our profitability remains intact and insulated from any movements in China.
But can you demand higher pricing for what you're selling outside, not the captive use, but outside? Do you see higher sell prices in India?
So yes, currently the sell prices in India are higher, but that is again, depends on what you're comparing it with. If you're comparing it with China, I would say that is not a true benchmark because the Chinese companies are selling below cost.
Yeah, absolutely. It's interesting, and maybe next time we'll press upon that. You said EBITDA margins should be, we should be able to hold on to it for some time. So that for some time is the question. Thank you very much, Mr. Rastogi. Appreciate you joining us, and good speaking with you here on CNBC TV18. Good luck. We take a quick commercial break here. Manisha Gupta joining us on commodities. What's top of her mind coming up in just a bit.
Welcome back. Well, we've got Mitesh joining in. Mitesh, good to get you back. So what are the trades now? Recovery from the lows?
That's right. And, as I said, we might not drop much below 24,500. We actually got a low of 24,598. So I think this is the area where, medium term and weekly supports start kicking in. And the put call ratio was also getting close to kind of oversold levels from where we have seen some kind of bounce back. So I think maybe in the short term, you will not see much of a traction on the downside unless until we start breaking below 24,500, 400 zones. Having said that, I have a buy on Alchem Labs. That's a stock which is making a fresh swing high. So keep a stock below levels of around 50-50, maybe 50-40. On the upside, look at targets of 51-30 or thereabouts. And the other stock which I like, that's Cipla. I think Sudarshan had given that call as well in the morning. After a good rally, the stock has been consolidating for last few hours, but looks like there will be a continuation. So 1548 is the stop was recommended and 1625 is the target.
Okay. All right. Got it. Mitesh, thank you very much for that. Let's quickly shift the focus to the commodity markets. We have Manisha joining in with the latest. Manisha, good morning.
Morning, and thank you for that, Surbhi. I'm talking about the crude oil prices because we've seen strong gains overnight come in for this one. The first part of the week wasn't so strong, but we've seen 2% of gains overnight, and with that, we are trading at a one-week highs for the crude oil prices. The latest trigger clearly comes in from US, which has shortened the ceasefire deadline for Russia. Now, the US President Trump released a statement yesterday saying that Russia has 10 to 12 days now to agree on a ceasefire or face further secondary sanctions as well. Remember, it wasn't too far back that European Union also released an 18th package of sanctions on Russia, and this time around it has been on oil and energy. We have seen sanctions come in on in sense of price cap. There also are individuals and institutions which also are now facing restrictions, and apart from that, apart from the cut in the price cap as well, total 400 ships, shadow and direct, have been sanctioned now. So this really does impact the flow there. And we also have a JP Morgan report in the meanwhile suggesting that the further US sanctions, if implemented on Russia, could lead to a supply shock as the OPEC Plus does not have that kind of a spare capacity, and that led to premium in case of prices there. Well, the support also comes in from the fact that we're looking at various tariff records now coming in. US has seen tariff agreement with Japan, UK, Vietnam, Indonesia, Philippines, and that seems to be supporting the risk sentiment and the belief that you could be looking at demand growing going further. Of course, there are deals on table as well. You still have China. The conversations for that started on Monday, and then you have Mexico, Canada, India. These deals still on the table there. The support also comes in after the OPEC report, which says that they are looking to pause further production increase from the month of October. Remember, OPEC has been increasing production from the month of April, and they are doing it until the month of September. October could be a pause, and that clearly is supportive for prices. There also is a statement from IEA which says that the global inventories have been increasing and accumulating at a rate of 1 million barrels per day, which is 1.5% of total global consumption. Markets looking at this number as well. And then finally, it is about the US crude inventories, which we have seen continue to decline quite sharply. The US crude inventories right now are at a 4-year lows, and they are 18% below the seasonal 5-year average as well. Not just the US crude inventories, the distillate inventories are also more than 18% below seasonal 5-year average, some of the factors which clearly seem to be in support for crude prices.
All right, Manisha, thank you very much for that. So oil in focus. We'll take a quick commercial break here. We get chatting with the management of Bank of Baroda on the back of their first quarter performance. Lata will take you through that conversation with Mr. Devdatta Chand coming up in just a bit.
Welcome back to our earnings corner. Bank of Baroda's first quarter results were a mixed bag. Very resilient net interest margins, but higher slippages due to an overseas loan and a slight uptick in personal loan NPAs. But the net interest margin was the cynosure of everyone's eyes. It fell by only 7 basis points. Remember, for many private banks, the margin has fallen by between 15 and 25 basis points. But can the margins see lower levels now in the current Q2 and in Q3 because of the rate cuts? Also, can loan growth maintain this 12 to 13% run rate that we saw in Q1? For all these questions, I'm joined by Mr. Devdatta Chand, Managing Director and CEO of Bank of Baroda. Good morning, Mr. Chand. Thank you very much for your time. Well, first up, it is the margins question. You all controlled it well in the quarter gone by, but will it take a bigger chunk in the current and next quarter? Have you any estimates?
Thanks, Sweta. Good morning. And as far as the margin is concerned, it is typically because of the rate transition that is happening on the economy. And as you said, right, that the book has shown a resilient in terms of the margin cut as far as Bank of Baroda is concerned. So going forward, what we see that major part of the repricing, the full quarter impact we are going to see in the next quarter, that is Q2. And this quarter, the full impact has not come. So there can be pressure. At the same time, on the deposit side, we are seeing significant repricing. That means the interest expenses is going to go down for the next quarter. So net to net, there would be impact, but we are not looking at a significant impact on the net interest margin in next quarter. That's why the full year guidance we are giving at 2.85 to 3, with a quite bit of hope that Q3 and Q4 will be much better than the Q1 and Q2.
Okay, so you're expecting the recovery in Q3 itself. Q2 you think will be the bottom?
Yeah, that's right. Q2 would be the major impact Q2 would take, but Q3 and Q4 would be much, much better.
Okay. Well, the other point is, of course, on slippages. There is, of course, as you pointed out in the investor presentation as well, that there is one international account, but there was a bit of pain in the personal loan account. Can you take us through the slippages picture and how it is evolved now? You're already 2 months down in the second quarter. Can you give us an idea of how slippages might pan out sector-wise?
Yeah, as far as the slippage is concerned, even if with the international account, we are well within our guidance range of 1 to 1.25. And because this international slippage is one-off, so excluding that, the slippage ratio would be at 0.99, which is comparable with the slippages we have seen in the earlier quarter. Our normal run rate on slippage per quarter is roughly around 2,800 to 900. So in that, the bank is well within the slippage guidance, and excluding this one is all comparable with the earlier quarters. Saying so, on the personal loan, on the legacy book, we have seen some 100 of crores slippage, but in terms of slippage ratio, because the denominator is also increasing, the slippage ratio is well within the comparable parameters with the earlier quarters. So we are not seeing any elevated level of slippage going forward. On the collection efficiency is much better now. The credit book looks very, in terms of the SMA 1 and 2 looks much better now. So we are not thinking of the asset quality of the bank is quite robust and resilient enough to take care of any impact because of the slippage going forward.
No, I'm not saying that you will be in trouble at all, sir. After all, you all have historically low NPAs of 0.6%. There's no question of any problem. But what I'm asking is that, is there any vertical, for instance, unsecured personal loans or MSMEs, or any, international book where you may see pain? Have you already noticed in the first 50 days of the current quarter?
Yeah, as far as international book is concerned, again, the asset quality is quite good. And this particular account is a one-off clearly. So other than this, there is absolutely no other account which has any sickness as on today. Secondly, on the domestic book, only on the retail advances, we have seen some 150 crore of additional slippage as compared to the last quarter. And precisely as I said, that because of legacy personal loan book, the slippage has been there. But as a strategy, earlier the personal loan used to grow at much higher pace of 30, 40, 50%. We have moderated to 20% this quarter. And I don't think, this additional slippage is because of the legacy book. On the current book, absolutely no stress therein. So, but in case you compare the slippage ratio, then it is well within our earlier quarter slippage on the personal loan.
Okay. Just one number came to my eye when you have a page in your investor presentation which says that the MSME loan NPA was the highest. It was 10,600 crore. In everything else, it is, the next big is agriculture, which is 7,000. Then is retail, 5,000. MSME 10,600 is standing out. Is that likely to give you any trouble at all?
No, not. See, MSME, there are a percentage of this outstanding is again because of different government scheme. The government guaranteed they are in the credit guarantee coverage is there in those NPA outstanding.
Oh.
So, but at the same time, if you look at the slippage ratio for MSME, because the MSME growth last year was 14%, and this quarter it is almost at 12.4%.
Yes.
Considering that the denominator is also increasing. So what is important here to take note of is a slippage ratio. In terms of ratio, we are not exceeding our earlier slippage ratio in MSME.
Okay. Yeah, there is a 13% rise in MSMEs and 17% in retail. Yes, but 13% is a fairly robust number. Let me come to credit offtake. Credit growth on the overall number looks very good, even if it is a Q fall. That is to be expected. After all, the March quarter tends to be very strong. And with the start of the monsoons, Q1 does not match up to Q4. But can you repeat a 12% growth?
On the overall advance, absolutely. Our guidance is 11 to 13%. And this quarter also we're at 12.6% on the advance growth. So only the RAM segment, which is retail, agri and MSME, almost growing on an organic book 18%. So that's significant. At the same time, the corporate, typically the first quarter of the year, we do a bit of realignment. What I mean by saying that, because we have reduced the bulk deposit to the extent of 23,000 crore. So obviously the fine price asset typically, because there is a repricing happening, so we could not, do those transactions. So the corporate growth is 4.2%. If you compare the corporate growth of 4.2% vis-a-vis the last year, the same quarter, that was at 2.5%. On a full year basis, we could achieve around 9 to 10%. And we are hopeful also this year that on the corporate also, we are going to have something around 9 to 10% for the full year. Saying so, the RAM continued to be the growth driver. And this time the RAM growth is almost 18%. But I expect at least a 15% growth for the full year on the RAM side also. So RAM growth of 15%, corporate growth of 10% typically would put us into around 13% growth on the advances side.
Okay. I hope you know that you are on the higher level in terms of guidance. Practically no one is guiding 13% on the street. Certainly not the private sector banks. They are closer to 10. What's the likelihood of the ROE going down in the current quarter? You all are very close to 1%. And there are a few people out there who worry that it may go down below 1 because the NIMs will be under pressure. You think so?
So look, the ROA has been in excess of 1 for last 12 quarters now.
Okay.
So a scenario that where the bank is actually the book is quite resilient in terms of both profitability and also growth on the top line. So the full year guidance again we are giving that the ROA has to be more than 1. The quarters where the NI is slightly bit a challenge because of the interest rate transition, we're able to optimize on the other income or the non-interest income.
Okay.
So going forward, I think we'll be in a position to maintain our guidance of above 1 ROA for going forward. Okay. As you talked about the ROE, as the bank is generating enough profitability, so ROE is almost at 16%. So going forward, again, when you grow, because I believe there is enough opportunity in the market for us to grow, then the ROE also is going to have it is currently very strong and going to be strong. I'll just give you a few of the bank's book. Look, one of the key piece of the bank's entire book is the way the liability management has been. At a cost of deposit of 5.05, at a CASA percentage of 39.33, at a domestic NIM of 3.06, I think the bank book is well positioned to capture all the opportunity that the market offers. At the same time, also, in case any headwinds because of the geopolitical scenario, also the bank book is quite capable of handling it.
Okay, fair enough. I'm not doubting that. And even if there is a dip, it is expected only for 1 quarter, not for the full year. The other issue I wanted to know is that, in your various meetings that public sector banks have with the government, is there any move to remove that 20% cap that FPIs have? It is not serving any purpose. They will buy what they will buy. irrespective of whether they are allowed 20%. Because of that, IIFL has made a calculation that SBI is losing some 1.4 billion of passive inflows. You are losing some $200 million of passive inflows. Is there any discussion at all that this cap, that sentence is just dropped?
Look, as far as Indian banks are concerned, going forward, let's say we talk about next 5 years or 10 years, banks would require capital. So, I mean, that's something we require it. But with the FDI cap, it's a policy issue which the stakeholder would take a call. Obviously, the data you are presenting is known in that way. The stakeholder would take a call with regard to that. But as far as banks are concerned, definitely going forward, although our CRAR is quite comfortable as on today, and that can take care of our requirement for going forward. At the same time, on a 5 years or 10 years horizon, possibly bank would require capital and possibly the call would be taken at the right time.
Yeah, fair enough. One hopes. I know this is a question to the finance minister and not to you, but I was only wondering if it comes up in your discussions. Just a final question. Are you all tapping the capital market in any way? I mean, either sale of your stakes in any of the subsidiaries or even holdings like NSE. Or even raising capital for your own sake. Look, your competitor, State Bank, has raised 25,000 crores. The market is kind to banks who have done well. Any way will you approach, either for your subsidiaries or for yourself, either for selling or for raising?
So there are two aspects here. One aspect is your own capital raise. We had announced to the market earlier that on a medium term, we intend to raise roughly around 8,500 crore of equity that we already announced. But at a time where it would be required for us to raise. So immediately there is no plan as on today. At the same time, on the monetization of the assets, subsidiary asset, already there is a plan. But again, I mean, all this monetization depend upon the right valuation, which is again one of the important factor for us to consider. So a couple of our assets like subsidiary, the divestment or the IPOs are in the pipeline. We are discussing also how do we again come out on that. So that would continue, like the moment we get an opportunity time, we'll keen to monetize that. But as far as bank's own capital is concerned, as on today, we are well capitalized. At the same time, yes, there is a plan to raise capital in a medium term, not immediately. But you are right that the market is kind. I mean, at the time, we'll take a note of that and then decide on the matter.
Yes, the market is certainly kind. Your stock is in the green, though Bank Nifty in general is not doing too well this morning. Thank you very much, Mr. Chand, for joining us with your thoughts. We leave the market in kind of cautious optimism, if you please, although at the moment I should say cautious pessimism. Stocks across the board, the indexes are in the red. Midcap is about a little better than the rest. Let's see if after the first hour of caution, the market perks up. Wrap up on Bazaar, Chartbusters coming up.
IndusInd Bank up and about despite a muted show in the first quarter on the profit front. Over 120 basis point spike in margin surprises street. The management guides for single-digit operating expenses in the quarters to come, though the stock, after an up move, has now moved lower by about 0.25%.
Piramal Pharma is off the opening lows. A muted show in the CDMO segment, coupled with a net loss of around 81 crores in the June quarter, weighs on the stock.
A weak show from Mazagon Dock across parameters in the first quarter. Lofty expenses in the quarter gone dent profitability, while margins taken near 1,500 basis points hit. The stock lower by 4%.
Paradeep Phosphate jumps nearly around 8% after the company reported a multi-fold profit increase on 255 crore rupees from around 5 crores year on year. The revenue also sees a 57% increase, while margins expand significantly.
Shares of Godrej jump over 5% after a strong quarter showing by the company. Gross written premiums rise 12%, while profit sees a 36% uptick.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC TV18 Motilal Oswal studio. I'm Nigel. With me is Mangalam. And the markets, are unable to trend to higher levels. So intraday, we did see a big recovery from the lows of the day. Currently, we're still sitting with a cutoff around 30 points or thereabouts. So intraday, there is some kind of recovery that we're seeing, but it's not being able to sustain. So I think in the near term, that important mark on the downside is around the 24,550. And on the upside, any kind of move to around 24,850 will be met with some selling. For the time being, we're not even able to get past the 24,750, which we attempted earlier in the trading session.
Take that point entirely, Nigel. We've been pointing out how the market is fairly oversold and a bounce at some point is imminent. The only thing absent are the triggers for that up move. So we'll watch out for that very, very closely at lower levels around the 24,550 to 24,600. Extremely crucial to watch out for. What we'll do is, in light of all that's taking place in the market, there are a bunch of earnings that have come in thick and fast as well. The first management on our show joins in. Acme Solar surged in trade yesterday on the back of a strong set of first quarter numbers. Remember, the company has been guiding for more than 7,000 crores in terms of an EBITDA by 2030. And the current numbers are dovetailing that trend. So revenue saw 65% uptick, while profit rose multifold, aided by other income as well. Nikhil Dhingra, the CEO of the company, now joins in. Thanks a lot, Nikhil, for joining in. The growth drivers that you had earlier spoken about for the company, one would be the increased capacity that you will constantly keep adding up all the way up until 2030, 2032. You have that path to getting there. And the second will be, increased supply or increased utilization for the PPAs that you've signed, etc. On both those accounts, could you give us a sense on where you stand versus what you had penciled in at the end of the previous financial year, and give us your guidance for FY26, increased capacity, increased utilization, and the PPAs that you've signed?
Sure, Nidhi. So we have commissioned more than 1,700 megawatts in the last year, and we have a capacity of around 4 gigawatts more to execute, out of which we are targeting to execute 2 gigawatt in the next calendar year and 2 gigawatt year after that. So most of the PPAs we have won, they have been there with us from last year. So in terms of the net signing, there are two stages in our business in terms of the PPA utilization. One is getting the bid, and second is signing the PPA. So we had a very good up move in terms of the signing of PPAs this quarter. We signed more than 550 megawatts of solar and FDRE contracts and 550 megawatt hour of battery contract. So a very good quarter for us in terms of the PPA signing. And in terms of the generation, our CUF is up by 107% from last year, same quarter. That is aided by the increase in the capacity. And next year also, we are targeting the same kind of capacity increase in the next calendar year. And that will be further increase the revenue because they are higher tariff projects and with the higher capex projects also. So that will help us increase the growth trajectory to the levels you mentioned.
Okay, all right, Nikhil. What about the PPA, prices that which you'll have contracted at? Say if you compare this year's pricing with last year's pricing, how different is it?
So, like I mentioned, our pipeline has been stable in terms of the tariff. So, weighted average tariff for our portfolio is around 3.5 rupees. And the tariffs vary depending on the type of the project. So, an FDRE will fetch you higher than 4 rupees. Solar plus less hours of storage will fetch you around 3 plus something. So the weighted average tariff remains at 3.5 for the portfolio. We have won a standalone BESS, which is a lease-based tender, which we spoke about last time we discussed. So that is a lease-based model. So other than that, our tariff remains at around 3.5 rupees. And tariffs, of course, have come down in terms of overall industry trend, but that is in sync with the falling capex prices. Which has led to the fall in the tariff, which is good for the utilities and good for the signing of the future PPAs.
What about your capex plan for this year? You've mentioned, you're looking at increasing capacity big time, looking at the storage project as well. So what is the total capex you've lined up for this expansion? And for this year, what will it be?
So for this year, we are targeting to release the purchase orders and doing the capex of around 12 to 14,000 crores. And we have already released purchase orders of around 6.5, 7,000 crores. We discussed about closing a large battery contract of around 3.1 gigawatt hour. We have closed all the long.
All right, we've got him on a scratchy line. Okay, go ahead, Nikhil.
Sorry, okay. I was saying that we have tied up bulk of the long lead items and all the capex for the batteries because we are trying to commission the battery project earlier this year as part of our overall project. So a capex of 12 to 14,000 crores is what we are targeting for this year. The timeline of the spending may go by 2 to 3 months, but definitely the orders will be closed in this year of 12 to 14,000 crores.
Got it. So 12 to 14,000 crore capex, of which 6 to 7,000 crores you've already signed up for this year battery project. Speaking of the battery project itself, you've secured some approvals for early commissioning of the BESS that may enhance your revenues in the short term. Could you give us a sense of what the opportunity here is? Because, BESS is classified as a storage asset and not generation. So under FDRE, early power dispatch is not really restricted by PPA norms. What could the initial enhanced revenue on this be, the opportunity by selling via BESS?
Yeah, so this is something we are doing it as a part of phased execution of our FDRE projects. We have around 1.8 to 2 gigawatts of central connected projects, which essentially means that our connectivity is ready and the AC infrastructure is already there. So we are commissioning our battery storage projects at those plants where we already have the infrastructure ready. So this will help us in terms of the early commissioning of the battery portion of the FDRE for our ongoing projects. So that is something we are targeting to do in phased manner over this calendar year and early part of the next calendar year. So that is what we are trying to do. What we will, in terms of the revenue, what we'll try and do is operationalize this and try and sell till the commissioning on a merchant basis. So that's something we will do. In terms of the revenue sizing, that is still preliminary. We will be able to give you guidance as we move forward. But it will substantially, because it's around 2.5 gigawatt hour of battery capacity, which we are trying and operationalizing in the next 6 to 8 months.
Could you give us a rough estimate on that enhanced revenue? You said it's preliminary, but I mean, you have the rough idea of the capacity in which you are putting BESS. You have the rough idea of the prevailing prices. Even if those numbers sustain for a couple of months, I suppose you would be making some money, right? Back of the envelope, what would those numbers look like?
So in terms of, I can give you the units we can do, right, and maybe the hourly prices difference which is currently prevailing. So let's say if we are doing 2.5 gigawatt hour let's selling 1 hour storage, we'll be selling 2.5 gigawatt hour, or if we are selling 2 hours, we will be selling 5 gigawatt hour, annual basis. So let's say if we do this for 6 to 9 months, considering our rest of the FDRE will be also getting commission, so then we will move to the PPA tariff. So that much units we will do, and in terms of the on a 12-month basis, so you can adjust the monthly revenue basis that. And in terms of the hourly difference, so the peak power tariffs currently are prevailing at around 8.5-9 rupees, give and take the seasons. So if you subtract the charging cost, that much margin we can make out of these units.
All right, Nikhil, we look forward to having a chat with you. Wishing you all the best for the remainder of this fiscal, and we'll have a chat maybe sometime before the next quarterly numbers. But a small programming note for our viewers as we slip into a break. As the workplace transforms, so must leadership in the Bengaluru edition of Future Female Forward Season 3. India's top business leaders gather to reimagine what the inclusive leadership looks like and how women are powering the future of work, capital and innovation. Catch it live today at around 5:30 p.m. onwards, only on CNBC TV18, CNBCTV18.com and on YouTube.
Welcome back. You're watching us here on Chartbusters. Let's talk about a couple of stocks which are buzzing around this morning. We have a bunch of them actually as we speak. And, Tata Chemicals is one which has now moved to the high point of trade. The other one is PI Industries. That continues to move higher as well from lows. Currently at the high point for that stock, sitting with a gain of almost 2.5%. And even though, there are more stocks declining than the number of stocks which are advancing, portfolios might not be feeling as bad because the quantum of gains is a lot more than the quantum of losses that we're seeing in a lot of these names. Exide, Biocon, all of them doing well. Though those lines have criss and crossed. Red line marginally above the green one. Let's get you some ideas for profit then from our colleagues at Money Control Pro. Bharat Jinani joins in with the stock that he's been tracking. Bharat.
Today's ideas would be Indian Hotels Company Limited. The company posted healthy Q1 FY26 results. Despite temporary blip owing to India-Pakistan conflict in the early part of May, domestic properties posted double-digit RevPAR growth in Q1. International properties also posted healthy 13% RevPAR growth in Q1 FY26. Overall, the hotel business grew 13%, whereas the air catering business on the Taj SATS grew by approximately 20%. Company was able to broadly maintain the EBITDA margins in Q1 FY26. The domestic demand continues to remain strong, and the company is confident of delivering double-digit growth in the current fiscal. The international business is also witnessing healthy recovery, with strong demand witnessed in the key markets of United States and the United Kingdom. The company has strong inventory addition pipeline and aims to add about 20,000 keys over the next 4 to 5 years. The new businesses of ginger, cumin, ama, as well as the management fees is witnessing strong growth. The company has a strong balance sheet with cash reserves to the tune of 3,000 crore rupees, which would enable it to tap any attractive inorganic growth opportunities. At the current market price, the stock is trading at an EV by beta of 27 times, 27 projections. Investors with a long-term view can add the stock in the book.
Break. On the other side, we have Kamal Singhal, the Managing Director of Arvin Smart Spaces, who will be joining to detail the quarter's numbers. Welcome back. Well, on to our second management on the show, Arvin Smart Spaces. It posted a strong, quarter. The stock is a little bit low, 3.5%. The mixed trends actually coming in there. To understand what's the way ahead, we're joined by Mr. Kamal Singhal, the Managing Director of Arvin Smart Spaces. Hi, Mr. Kamal. Thanks a lot for joining in, sir. You earlier indicated, I recall, that you're going to grow. Bookings is going to grow by around 10 to around 15%. And you had scaled it down, I think, from the 25 to 30%. Do you believe you can still do 10 to 15% for this fiscal?
Yeah, very good morning. In fact, historically, we have been growing at something like 25 to 30% in terms of fresh sales booking. This is the trend we are pretty much sure that we should be able to achieve. Last year was a little low at 15% growth that we could achieve. But this year, we're on track to come back to a growth level of more like a 35 to 40% actually, because we had few launches which got delayed into this year. And that will also get added into this year's number. So if the long-term averages are something like 25-30%, we should actually exceed that number this year.
So you're saying 35 to 40% this year, right?
Correct, yeah.
All right, interesting. What about collections? Last year it was a little south of around 1,000 crores. This year, what number are you factoring in?
So generally, collections would move along with the fresh sales and the launches, etc., etc. We have been almost touching 1,000 crore last year. And this year, we should see a little bit of a growth over there to the extent of maybe around 10%. So anywhere between 1,000 to 1,100 crores should be the collection this year.
All right. So you are guiding for good growth in both bookings as well as collections. If you could give us a sense on, the sales and the launches that you have over the next 3 quarters and the unrecognized revenue that you're sitting on for the company, because the last time you said it was close to around 2,800 crore rupees. If you could give us a sense on where these numbers stand at.
Sure. Unrecognized revenue obviously is a function of how much we sell as a fresh sale and out of which how much gets into books of account. If the books of account are maybe around 800, 900 crores that comes into books of account and we sell more like 17, 1800 crores this year, it will get added to the extent of 1,000 crores this year as compared to the previous years. That's the basic match around how the unrecognized sales will be looking like. So if we were at something like 27, 2,800 crores last year, it should be more like 35, 3,700 crores this year.
All right. So you're looking at sales to grow to 25, 2,700 crores with collections coming in at a certain level. And you are looking at your unrecognized revenue to grow to around 35, 3,600 crores this year. What about Mumbai weekend homes? I think you were looking at that. What's the potential here? And when do we see any of the launches coming by?
Where are the weekend homes, sir?
Yeah. Weekend homes are close by. They are about to hit the market. Right now in the process of conversions and approvals, etc. The land is already aggregated. Agreements are all in place. So we're in the process of getting requisite approvals. It's a very exciting project, more than 1,000 crore rupees of top line, 98 acres to be more precise in terms of size, on a beautiful piece of hill surrounded by a lake and a river, etc. So this project is on track. We should be able to hit this project, hit the market with this project by the end of this year.
Where is this?
Where is this weekend homes? We want to know.
Lake and all that.
So this will be other side of Astal Setu, Mumbai 3.0 that we call as. So great place, great distance, location in terms of travel time, etc. Even from South Mumbai, because of the new connectivity that we've seen in that area.
Okay.
That'll be interesting then. The other side of Mangalam.
98 acres and 1,000 crores. That's, I don't think I'll be, able to look at even one unit of that. Be that as it may, I'm happy with my current home in which I spend weekends.
Wrong Mangalam in aspiring. ठीक है, देख लेगा.
देखेंगे on the other side of Atal Setu.
It's a challenge for us that we'll sell one to Mangalam for sure.
That's not a challenge for you, sir. That's a challenge for my employer for them to give me that kind of money that I buy it. What about, the society redevelopment project? You said you were seriously looking at one. Has there been any development here?
Oh, yeah. Society redevelopment obviously is one of our important pillars for MMR as a market. We're very seriously looking at it. In fact, one of these projects is almost about there. We are almost done and we should be able to announce something concrete on that in next few weeks, not months. And we are obviously looking at a couple of more. So very, very, very bullish about society redevelopment. A lot of action is happening. Team is busy getting more options there. And by the end of this year, we should be having at least 2 or 3 projects going on the society redevelopment side.
You're not too worried it's getting very competitive?
It is competitive, but at the same time, there is space for everybody. Mumbai is a very, very big market. And then there are size constraints and segmentation that one can look at. The tier 1 players in terms of size look at very, very big size these days. Then there are mid-size available for many of us. So there are segments, there are products, there are areas, there are micro markets which are there for everybody. And we find quite a bit of traction when it comes to Arvin as a brand being recognized in the market of Mumbai, and hence it is helping us quite a bit on that side. Very hopeful that we should be able to do very decent there in society redevelopment space in Mumbai.
All right, and demand is strong enough. We shouldn't worry.
Yeah, demand. I mean, micro market wise, it does vary. So one has to be smart in choosing where and what to play, what price segments to play. We are very clear on what we want to do and which areas we want to play. And there we are pretty confident that we should be able to achieve our numbers and achieve what we want to achieve in this new market for us.
When does your first home from that Mumbai weekend housing get delivered?
So if we launch within this year, generally horizontal projects start getting delivered within a short span of time, which is more like 30 months. So 30 months from start of next year is when
2028. Got it.
Yeah, correct.
2028. Thanks a lot, sir, for joining and just planning my holiday at Manglam's home. Appreciate you joining it, sir. Wish you all the best. We look forward to having a chat with you rather soon.
Thank you.
On that note, though, we'll wrap up on Chartbusters. The team of Trading Hour comes up next.
Hello and welcome to Trading Hour live from the CNBC TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always, Reema Tendulkar and Hormis Patakia. Well, I got the color right yet again, guys. But yes, of course, the cuts are not as deep as we saw yesterday. So it's a 37-point cut that we're looking at the Nifty with right now. And Nifty Realty, which was a big drag yesterday, that has recovered some of the losses. That jobs cut at TCS came as a surprise and a shock to the entire industry as well, because a lot of its revenues are from leasing commercial spaces to IT companies itself. So today Nifty Realty has made a comeback, but IT continues to be under some pressure. So we do have the IT index, which is down around 0.6%. Small caps have also come under some pressure. We do have the mid caps in the red as well. So across the board, there's not really a big sign of recovery that we are seeing. In fact, small cap did see some green at around 10 a.m. and there has been a sharp slide from the highs from there. Same is the case with mid caps as well, down 112 points right now.
Indeed, and the cuts are not as bad compared to what Asia is doing right now.
Yes.
So Hang Seng and Nikkei, both of them are down over 1%. So maybe, the Indian markets have been sluggish now. This would be the 5th week. Last 4 weeks, I think markets, closed with weekly losses. And this week too, we haven't started off on a strong footing. But again, today seems to be a more quieter session, just consolidating, but it's got a negative bias.
You may not want to be falling into that category of you spoke too soon, calling it a quiet session. But yes, as of now,
Maybe the last one is less quiet, right? Let's see that little bit of a dip.
The fall from the highs is the bigger talking point, right? It's following a familiar script. It was somewhere around about 10:30, 11 o'clock yesterday as well that the indices had begun to slide from the highs, as we were talking about it in yesterday's show as well, when we were seeing those sharp intraday swings, and taking nothing away from the fact that earnings reactions continue from the broader markets predominantly on the negative side. And take a look at the defense names that are taking a bit of a beating today. Zen Technologies is the third straight day of lower circuits in today's session, and Masgaon Dock 2 is down 5% after its results. We'll talk.
BEL2 is down
BEL2,
2%, yes. In the front line.
And indeed, we have to see more on these defense companies as well on the valuation front. We'll get to more on these as the show goes by, but on to corporate conversations. First up, Transport Corporation of India. And revenues were up 9% this quarter. Profits also increased 17% from last year. And Vineet Agrawal, who is the managing director of the company, is joining in right now to discuss the road ahead and, of course, how the quarter panned out. Vineet, good morning. Thank you for joining in. What has happened with the margins for the Seaways business? There has been a very, very sharp improvement, as we see. We've gone up to 37% in this business. Is that level sustainable, or do you see that 28-29% historical levels are the ones that are the normal ones?
Hi, it's a pleasure to be here. Seaways has seen quite a remarkable jump in the last, in fact, a year or two. With the crisis in the Middle East and other things that are happening, as you know, with geopolitical tensions, the freight rates globally have been rising. And they sort of, come down a bit and then they pick up a little bit. And, there's always been a lot of uncertainty. And when that happens, the capacity from the Indian markets, and as you know, we operate only on the coastal routes of India, that capacity moves away from India and goes outside. And when that happens, the freight rates domestically also go up. So the last quarter has been decent, more in terms of the number of trips that we've done and the fact that the freight rates have remained stable. Fuel prices have come down a little bit. That is the bunker prices specifically for the coastal ships. So all in all, it was a good quarter for the shipping business, and hence we saw decent margins. I do not think they're always sustainable. They've been keeping up this 30-40% range, but I think it should probably stabilize more between the 25 to 35% range.
Okay. Vineet, on the freight business itself, you said freight rates were steady this time around, but we did see margins declining on a YOY basis to 2.4% versus 3%. EBIT was down 17.9% and revenues grew in single digits. When do we see higher growth come by here, and when will we see an EBIT margin expansion?
See, the freight business follows the GDP growth to a great extent, and also follows the kind of industrial activity that is happening across the country to a great extent. Industrials are a bit slow, and we've seen that the order books are there, but really the flow has been very less in this last quarter. And we are seeing this trend continuing even in Q2. We know, for example, that the summer has been weak and that has affected consumer durables, even consumer FMCG sales, as well as things like industrial gases, etc. The things that have done well is agriculture, that the sector has picked up, including the inputs, more on the input side, as well as tractors, etc. So the general weak sentiment has affected that business and the growth has been subdued. And we are seeing festival stocking started, and we are hoping that this will start picking up in Q2, towards the end of Q2, and then it flows on to Q3 and Q4. But right now, the business is really mirroring what's happening in the economy.
Got that. Vineet, hi. Morning. Rima here. Just some numbers on the guidance. Last time you spoke about a tonnage growth of 7 to 8%, revenue growth of 10 to 12%, and margins improving by 150 to 200 basis points. That was the guidance we have for FY26. Is that intact?
Yes, our expectation is that the next few quarters should start picking up. And, we have to look at the kind of growth that we are seeing in different businesses as well. So one is that our supply chain business is doing reasonably well. We've seen huge amount of growth coming from the warehousing side, for example. Warehousing structure is changing in the country. The demand for warehousing for quick commerce, for example, is increased dramatically. We are doing a lot of that as well. Or for that matter, companies wanting to work with larger companies like us or organized players like us, that's increasing a lot. Cold chain business is increasing, our rail business is increasing. So some of our joint ventures are doing reasonably well. And I think a combination of all of these factors would mean that we should be able to maintain that guidance that we've given at the start of the year.
So 10 to 12% revenues, tonnage growth 7 to 8%, margin improvement 150 to 200 pips.
That's right.
Since you mentioned cold chain, Vineet, how did that fare in this quarter? You mentioned it has picked up. By what quantum did it do so? And what are your targets that you have for this business for the year?
Cold chain is a very interesting business because, what we are seeing is that different kinds of growth sectors. It's a small business for us. It's about 100 crore business, but we grew at about 18-20% in the last quarter. Business growth is coming not just from pharmaceuticals and QSRs and the food sector, but we are also seeing growth from things like chemicals because there are certain types of chemicals that require cold chain now, as well as battery technology. Certain kinds of battery also require an ambient temperature. The ambient temperature in India is not 20 degrees, it's much higher. So you need to maintain certain kinds of products into that kind of ambient temperature. So cold chain in the next few years is going to be a real growth driver from many areas, including in the future, maybe even semiconductors. So yes, we're very bullish about it.
All right. And what about the capex plans for FY26? So what do you have on your radar? Because it was around 275 crores in FY25.
The plan is to spend about 450 crores this year.
And how do you fund that?
The funding is mostly internal. We have enough cash flows coming in. We can take in certain small amount of debt. We have about 250, 280 crores of cash also on our books. And the capex is going into ships that we placed an order for last year, which will be delivered next year. So some of that capex, some of into trucks, into warehousing, into equipment related to warehousing, conveyors, etc., and of course into IT systems. So this capex of 450 is really planned out. We could do more if a second-hand ship is available to us, and that would be another 150 crores.
Very, very quickly, just on quick commerce. I thought last time you spoke, in previous interactions, that you steer clear from quick commerce, e-commerce, because of poor unit economics on delivery, where delivery charges have come down to 4 to 5%. But now you're saying an opportunity is opening up on the warehousing side. Very quickly.
Warehousing is very different from that part because, warehousing is on the fulfillment side. We do the back end, we do consolidation from various suppliers and then sending the material to the dark stores. The last mile is not something that we do. And as I said, that's where the unit economics don't work for us.
Got that. Thank you very much for that. We'll get into a break. The management of Madrasumi Wiring India joins in on the other side. Stay tuned.
Welcome back. The management of Madrasumi Wiring now joins in to discuss the quarter gone by. The revenues were up. Margins declined though compared to last year. The revenue growth was supported by an increase in content per vehicle. Gulshan Pahuja, who is the CFO, along with Anurag Gahlot, who is the Chief Operating Officer at Madrasumi Wiring, are joining in now. Gentlemen, good morning. Thank you for joining in. You know, your quarter gone by, you saw revenue growth of around 14%, which was higher than the passenger vehicle industry growth, which was just 3%. What contributed to that? Was it the increase in the content per vehicle, or was it did it come from the new customer model wins that you added this time around, or a combination of both? If you could tell us more on that.
Hi, good morning. Thank you for taking us on CNBC. As you said that the industry has grown by 3% and we have grown by 14%, and that is mainly due to three reasons. One is the volume growth, which is 3%. Another one is the higher content and availability of MSWIL into the new model launches as well. So it's a combination of all. If you have seen that passenger vehicle is dominating by the utility vehicles, and in that also you will see that top models are selling. So cost of sales for MSWIL is directly linked to the cost of models they are making. So it is directly linked to that. So if they are selling the higher model, the higher sale we have. And as I said that if you've seen our update also in the 3 greenfield, that we are already a part of the new launches, which are going to happen in the market in the coming times.
Okay. Gulshan, let me come to you, because your EBITDA margins ex greenfield projects are at 11.7%, but overall margins have dropped to 9.8%. Can you give us a sense of what's happening here? You're talking about higher demand coming in, but it's not translating so much to the EBITDA. How long will you foresee this drag continuing? And the other facilities as well, when will they break even?
So if you see our the greenfield expansion units, so if you just take out the impact of those units, our EBITDA has marginally improved from 11.7 to 11.8% quarter on quarter or year on year basis. So if this greenfield expansion units which are reflected in our current quarter results, and that got impacted our margins, because there are certain plans with respect to the certain greenfield units have got delayed. So if you see our presentation also, the unit wise plan is already coming in that slide. So there are certain plan which was supposed to be started in Q2. The volumes are ramping up, and you will have to see in the next quarter their impact will come. So that's
Yes. So what is the margin target for FY26 ex greenfield and including greenfield?
So once this volume will ramp up, basis the schedules from the customer and the revised projections, if able to meet that requirement, I think the margins will be there when we are in terms of the existing units.
Okay. Can you give us a number?
Numbers are already there, because all depends on the customer projections only. Because at this moment we only have that visibility that some of the plans have already been deferred. So once this volume will kick it off and the volumes ramp up happen, I think you will see that the margins will be there.
Anurag, can you give an indication of how Q2 or H2 is going to pan out? Because there are a lot of launches planned. I think there's e-Vitara, Escudo by Maruti Suzuki, Sierra by Tata Motors. M&M is ramping up its EV production. So can you sustain this 14-15% kind of revenue growth for the next 9 months? And as these ramp up, again, getting back to that question, where were the overall consolidated margins? Can you cross closer to the 11% mark? And what would the contribution of EV rise to? So 3 parts in this, but if you could explain all.
All right. Okay. So first, coming on the first part of your question, I think the way, as Gulshan has also suggested, that there are 3 greenfields and there are many launches, as you also said, of Maruti and Tata, which is going to happen. And once the volumes will ramp up, these costs will, get normalized with that. More than that, important is that we look overall in the, in totality, we see the ROS to our company. And if you've seen the last 3 years, we remain more than 40%, which is as per our company guideline. So margins will take some time, obviously, as the volumes and these things will pick up. And on the EV part also, we have remained to 5.41% of our sales is EV, which has increased from the last financial year, from 4.81 to 5.41 in this quarter. And I think with these new launches, EV penetration will grow more, but we have to watch very carefully how the consumer is going to react to these EVs. But the good news is that MSWIL is very much ready to take care for any of the EV volumes which are going to happen or any new technologies coming into this. We are a very much future-ready organization.
And 15% revenue growth sustainable?
I think it might happen if consumer is going to buying the utility vehicle and that also top model, why not? We are already 14% surpassing the market. So if tomorrow consumer keep on buying these vehicles, which are the top models, MSWIL is directly going to get the impact because of that.
You know, Gulshan, the earlier timeline for your Navagam unit to come on stream was this quarter, but now it has been pushed to the fourth quarter. What is the reason behind this delay? If you could tell us that. And are you on track to commission it in the fourth quarter? And once it does, how does it add on to your P&L?
See, as Anurag has already mentioned that we always have our planning ready in place. So that we have all the capabilities in place. Whenever the customer will ask us to rep it up, we will have that thing. I think this is something that the plan has got shifted from quarter one to quarter four. This is something on account of the customer requirements, basis their new launches. That's how the plan has got revised. And the answer to your second question, that once it comes up, obviously that will impact in our the cost will be normalized and that will reflect in our margins also over a period of time. I think it's a matter of time, 1 or 2 quarters. Once this volumes will ramp up, I think you will see the cost will be absorbed and the revenue will be back and the margins will be there and stable.
So while you're talking about margins, copper prices, they have been very sticky so far. What is your channel check suggesting? How would these prices pan out going forward?
See, in terms of the copper prices, we have a contractual understanding with the customer to pass through them. Okay, so whenever the price increases happen, there's generally a lag of quarter or a half year, and it always passes through with the customer. So you have to see a period of time like 3 to 4 quarters. The impact of the same will always get neutralized in our financial results.
Thank you, gentlemen, for joining in. Always a pleasure speaking with you. Wish you all the very best. Get into a break. As we do that, a quick small programming note for all our viewers. As the workplace transforms, so must leadership. In the Bengaluru edition of the Future Female Forward Season 3, India's top business leaders gather to reimagine what inclusive leadership looks like and how women are powering the future of work, capital and innovation. Catch it live today evening, 5:30 p.m. onwards, only on CNBC TV18, CNBCTV18.com and YouTube.
Welcome back. There has been a recovery from the intraday lows for the index. It has now moved into the green as we speak, nearing that mark of 24,700. But there are enough and more pockets that are not doing well. Lakshmi Organic is one such name, down 7%. Result reaction as well. So 7% lower on Lakshmi Organic. And of course, can't take away from the fact that most of the defense names, actually all of the defense names, are taking a bit of a beating in today's session. But what are some of the other movers in the broader markets? Vivek is here to put the spotlight on some of them. Vivek.
Well, thank you so much for that. Mostly dominated by result reactions, a very strong reaction to results. Along with that, a lot of news flow. First on the list has to be JSW Steel today, and a very important development. Remember, review periods by JSW Steel as well as the lenders will be heard by the Supreme Court, and any development on that front will be a significant, impactful event as far as JSW Steel is concerned. The other stock on the radar, one from the broader end of the market, is Paradeep Phosphates. The EBITDA margins here in Q1 has actually more than doubled. So that stock on strong volumes higher by 12.5%. Look at Flair Writing. Exports over here too has become quite strong. Back of that, almost 7% higher. This after the stock has seen quite a strong rally. Godrej, even though the results were slightly muted, this particular stock on strong volumes has gained over 4% today. And Torrent Pharma, yesterday the company held a conference call post Q1. They've given a good guidance as far as margins are concerned, and brokerages have come back quite upbeat. Brokerages also say the acquisition of JB Chem could actually add or aid a re-rating as far as the valuations are concerned. On the other hand, like you mentioned, Horma's different stocks, Mazda came out with its results last evening. Weakish execution on the back of that stock low by almost 4%. Home First Finance, from the lenders pack, this particular stocks of very weak asset quality, and on the back of that almost 5% low. This is after a 5% down tick that the stock saw yesterday. Poonawalla FinCorp, remember, was one of the top gainers yesterday, almost 7% higher, but that stock has given up most of its gains today. And IEX, it's been a very volatile last couple of weeks for IEX today. A Bernstein downgrade coming in. Market coupling implementation is something that has prompted them to downgrade the stock. That stock low by 4% today.
Okay, after that sharp fall, there's still more to come for IEX when it comes to market coupling as well. Thank you, Vivek, for joining in as always and telling us the stocks which are moving around in the broader markets. Let's get Mitesh Thakkar for a quick technical check on the markets. Mitesh, what's the market's mood now? What are the charts suggesting? Do you think we'll continue this volatility that we've been seeing, big fall and sharp recovery from the lows? What's your take?
To me, I think the market looks like, possibly completing a leg of decline and getting into, preparing for some kind of sideways action. Though my downside targets were around 24,500, 550 zones. We got a low of around 24,598 or something. But the idea is that around these levels, you might not see much of a downward thrust. The PCR is also slightly, suggesting levels which could indicate that the declines could be arrested at least in the short term. So mostly looking at a sideways kind of a market, broadly 24,550 to about 24,920.
450 point range there, Mitesh, but specific stocks?
Yeah. On the stock side, Bosch looks good with a stop below 38,000. Look at a target of 38,800 over here. While GMR Airport is negative or a sell call on the stock price. So keep a stop around 91, look for targets around 86.
Got that. Thank you very much for that. By the way, a bit of a recovery in the markets now. So in the green for the Nifty, Eternal has trimmed its losses. It was down nearly 2%, now down 1%. L&T is seeing some buying ahead of its numbers. Look at that intraday move in L&T. That's raced away to a 1% gain now. Numbers today, along with that, you've got numbers from Asian Paints. But for L&T, the street is working with a 14% top-line growth, EBITDA margins at 10.1%, and the company is likely to retain its guidance. So L&T is a stock to watch, the big up move starting 11 o'clock on that. But now let's get a handle on the latest trends in the futures and options space. Mangalam joins in.
Well, the market's grinding lower, but from low levels, it is seeing some purchase as well. But just the way it happened yesterday, any sort of recovery from the lower levels was sold into. And let's see whether that continues today or not. In the second half of trade today, there is that likelihood of volatility increasing, and that's largely because it will be the Sensex monthly expiry that will take place as well. So the Nifty Bank, as well as the Midcap Index. The Midcap Index in particular has seen some recovery from the lows. So the Midcap Index now marginally in the green. The other data point that I'll be watching out for very closely is how the advanced decline behaves, because for most part of today's trading session, we had the green line above the red line. Thereafter, in the middle, there was an intersection, and the red line has moved slightly above the green line. Let's see, now they're coming close once again. So the green line does move ahead. We can see signs of recovery, though still not out of the woods. And that is, determined by the fact that the India VIX continues to rise despite the consolidation that we are seeing. Over the last 3 trading sessions, it's risen nearly 21%, going comfortably above levels of 12, which tells you that it is an option seller's market right now. Ahead of the monthly expiry that takes place day after tomorrow on the Nifty, it's the 24,650 straddle, which is a call and a put together, which are extremely active. So 24,650 call has a premium of almost 128 rupees. Pull up the 24,650 put, you will have a premium of around 80-90 rupees on that one as well. So those who are writing these two options together are hoping for pocketing that 200 rupee premium, and the reason when they make money would be if the Nifty holds at lower levels at 24,450 and does not cross past 24,850 on the way up itself. So that's the kind of fulcrum that the street is watching out for. As we're looking at a bunch of individual stocks, Bharti Airtel stands out. It's doing well in an otherwise wobbly market, currently at the higher end of today's trading range, so a lot of long positions added out there. And the other one I'm looking at is IEX. That too may enter F&O band once again in today's trading session, given the sort of open interest build-up that we've seen in IEX. So these are a couple of stocks I'll be watching out for.
Thank you so much, Mangalam, for joining us with the F&O update. By the way, those are GAIL's conference call updates which are come by. They target addition of 85 new CNG stations in the next 2 years, something that they had spoken about in the earlier conference calls as well. And it's marketing EBITDA guidance of 4,000 to 4,500 crore rupees for FY26. They are maintaining it. And the stock is lower by 0.9%. Now, remember the numbers which were lower versus the muted expectations as well. And that's why the stock opened lower and continues its downtick. The biggest trigger, of course, for GAIL will continue to be the tariff update that comes by for their unified pipeline, and that is something that street is watching out for, because that is something which will indicate what kind of EBITDA they'll get in their transmission pipeline, which did not do so well. So we should change that flash. It should be maintained marketing EBITDA guidance of 4,000 to 4,500 crore rupees. Their natural gas transmission volume guidance has come in at 127 to 128 MMSCMD, which compares with 138 to 139 MMSCMD earlier. So that's a cut which has come by in their volumes, and that is very important to note, because the transmission business is the one where maybe tariffs will go higher, but if volumes are lower, that means EBITDA will continue to be at the same levels.
Got that. Thank you very much for that. Get into a break. On the other side, we'll come back and get you more movers and shakers in today's trading session. Welcome back. L&T continues to see buying again at the high point of the day, 1% up, and it's helping the Nifty touch the 24,700 mark. But let's find out the other moving stocks in trade, the buzzing stocks. Our research team is joining in. We've got Upasana joining in on Mazgaon Docks. We'll talk more about Paradeep Phosphates and even about 5-star finance. But let me start with Mazgaon Docks. Upasana?
Well, overall, the company has reported a weak set of numbers, mainly due to weak execution and even higher other expenses that have impacted the performance of the company. Now, coming to the revenue first, revenue saw an uptick of 11% on a one-year basis and declined 17% sequentially. EBITDA also declined by 53% on a one-year basis, and EBITDA margins dipped as high as 1,575 basis points, stood at 11.5%. Net profit stood at 452 crore, down about 35% on a one-year basis. Now, profitability in Q1 was mainly impacted due to higher expenses, and majority of it was contributed by subcontracting expenses, which saw an uptick of 9% on a one-year basis, led by other project-related expenses, which saw a jump of almost 13 times on year-on-year basis. Provisions also elevated, stood at 540 for the quarter. Now, Antique maintains a buy rating on the stock with the target price of 3,858 per share. It says that the elevated provision impacted the overall profit margin of the company, but the follow-on Scorpion and P-75 submarine project, it's boosting the order book and it maintains the midterm growth going forward for the company on the back of this. It says that the margin volatility from provision hikes is likely behind for the company, and potential delay in order is flagged as a risk by the brokerage. Overall, for FY26, it has cut EPS by nearly about 8%, and for FY27, the brokerage has unchanged its EPS estimates.
Okay. You know, this that Antique was saying that the trigger for the company would be the order for those 3 additional Scorpion submarines. They're saying if it comes through, if the company gets nominated, it can double their order book. So that's, you know, the big trigger that Antique is looking out for.
Okay, all right. So we'll watch out for that one. But the other stock in focus post their Q1 is Paradeep Phosphates. Winnie is here to tell us what it looked like this time around. Winnie.
I saw a set of numbers that came in for the company in Q1 FY26. Good performance. When you're looking at it in terms of profitability, it's come in at 247 times increase versus last year, right? So 255 crores approximately is what the profit is at. Revenue seeing a jump of about 60%. Operating performance, very strong operating performance coming in there as well. 12.4% in terms of EBITDA margin versus just 6.8%. Obviously, the significant improvement in terms of profits as well as the revenue performance has been strong. That's leading to an up move in terms of the stock. You know, we'll wait out for the con call highlights coming in, but just in terms of what was highlighted in Q4 FY25, in terms of the con call, that given a guidance of around 4,500 to 5,000 as an EBITDA per ton guidance for FY26. Capex plans of around 500 crores during the year as well. So will be interesting to watch out for in terms of the guidance. What are they looking at now going forward in FY26?
A barely subscribed IPO, Paradeep Phosphates, is now up 5x from its IPO price, which was 42 rupees. Vinny, thank you for that update. And 10% higher on that stock today. But the other one is not doing too well, though, is 5-star Business Finance. Has recovered from the lows of the day, but still holding on to some losses. Gaurav is here to tell us why the street is disappointed with this company. Gaurav.
Well, yes. Let's talk about numbers first about 5-star. When it comes to loan book growth, that was at around 20% versus their own guidance of 25%. That was the first disappointment that we saw in the results. Other than that, when we look at disbursements, there also we saw some kind of a weakness. Let's move on to the income statement now. When it comes to net interest income, that increased almost by 18%, but net interest margins, now they have declined almost by 40 basis points. Another pain point that we saw in the business is the credit cost. Now, gross NPAs have gone up almost by 17 basis points, and as a result, when it comes to credit cost, the reported credit cost went up as high as 57 basis point to 1.3%. Now, when it comes to the stage 2 and stage 3 assets, there also we are seeing some kind of spike, which is something concerning. And that is the reason when we look at the profit that has declined, that has increased only by 6% on a year-on-year basis. Now, coming to the commentary, what management is saying, they actually take this MFI stress as a surprise. What they are saying is that they have actually increased their guidance of credit cost from 100 basis point that they have given earlier to 120 basis point now. And the reason being that they believe pain point in the MFI because of the over leveraging that still remains for Q2 specifically, the early pool, delinquency pool. What they're saying is that this will actually stabilize, but at the same time, we will see some kind of improvement in Q3. So definitely some improvement is what they're expecting. As a result, we are seeing some recovery, but because of the weakness in credit cost, we are seeing the decrease in the stock price.
Okay, all right. Thank you so much, Gaurav, for joining us. That's about 5-star Business Finance. The stock, though, has recovered from the lows of the day, is down just 2.5% as we speak. With that, we'll slip into a break. When we come back, we'll discuss what's buzzing in the commodity space with Manisha Gupta. Welcome back. You're still tuned into Trading Hour. It's time to talk about commodities. Manisha is joining in, and today we are focusing on metals. What do you have for us, Manisha?
Well, after being a stronger July, as we head towards the close of the month, we have seen some profit taking for many of the metals. I'll start with copper because the COMEX copper prices fell 3% overnight. It was only last week that we saw COMEX make all-time highs at almost at $6 per pound. We're trading at 5.5 at this point in time. It's trading at a one-week lows, not just for COMEX, but for LME copper prices also. Here as well, we've seen the prices decline to almost $97, $70 a ton there. Well, US has announced, remember, a 50% tariff that comes into effect from 1st of August. Now, what the markets really are waiting for is the details of these tariffs, whether it's on copper, refined copper, copper products, cathodes, etc., or whether, and what really happens to various countries. Is it like a blanket ban, the way we have seen happen in case of steel and aluminum there as well? It's a 50% tariff. And also, a lot of countries have been pushing copper into the US markets ahead of these tariffs. So much of this metal is in transit also. What happens to that metal? So all of these details, as we look at 1st of August, are still awaited. It's not just about copper. We have seen profit taking actually come across metals. The one-week highs that we've seen in dollar index has led to 4-month off the 4-month highs that we saw in case of zinc. That's the same case with aluminum and steel as well. Remember, we started previous week on a higher note. We did see 4-month highs as well. But all these metals, including zinc, aluminum, steel, are off those kind of highs right now. Nickel was trading at a 2-month highs just about yesterday. That one also has gone in for some profit taking. What the street will watch out now for is the US Fed meeting announcement and the US jobs data that comes in on Friday. That would give further direction.
Thank you very much for that. By the way, IEX is having another tough session. 3.5%, 4% gone on IEX. This month, it's lost nearly 30%. And there is a downgrade on IEX where Bernstein has downgraded it to an underperform, target price 99. So about a 20-25% downtick even from the current levels, because they're saying the regulatory order is seen more damaging than they expected, and they see little chance of the company overturning it. So that's been one of the misses in today's trading session. Get into, yeah.
The only one with a sub-100 rupee price target for IEX is Bernstein. So the lowest one on the street, still a 30% downside is what they see. We'll take a short break and put the spotlight on the two big numbers awaited later in the day from Asian Paints and from L&T. We get you the street expectations on the other side. Stay tuned. Welcome back. L&T, the big number of the evening, one of the two big ones actually. The profits are expected to rise 21%. Revenues are expected to rise too. Vivek is here with what the street is expecting from L&T. Vivek.
Well, that's right. The key numbers over here will be tracked. All eyes will be on L&T as to how exactly they go ahead and start FY26. Revenue seen higher by 14%, aided by steady execution. EBITDA seen higher by over 13%. Margins on a year-on-year basis expected to slip 10 basis points, and profitability seen higher by 21.5%. Now, what has the company guided at the start of FY26 to the analyst community? Top line growth seen at 15%. The core EBITDA margin guidance, that is the project the P&M margins as they call it, seen at 8.5% versus 8.3%, so 20 basis point uptick on a year-on-year basis. And order inflow on a very, very high base is seen higher by 10%. Now, the domestic order prospects is at 7 lakh crore and 12 lakh crore for international. And just earlier today, in fact, L&T actually went ahead and declared a very large order win as well. This is for the hydrocarbon business, again coming from West Asia. So, it'll be interesting to see what are the order books that the company has booked as far as Q1 is concerned. What are the orders that have spilled over to Q2? And the more important question, that we'll be asking the management is, what are the prospect of the sale of the Nabha power plant, as a few media agencies reported, to Torrent Power.
Thank you very much for that. Varun, beverages numbers are flashing for you on your screen. On the top line has declined by 2.5% on a year-on-year basis, while the bottom line has gone up by nearly 5%. These are the only two numbers that we have. EBITDA has come in flat. So revenues have declined 2.5%, EBITDA is flat, and profits are up nearly 5%. The stock is still in a bit of a tentative mode.
Indeed, and some choppy moves seen in Varun Beverages. It's a 2.5% decline in the top line. The EBITDA, as you just highlighted, is flat. There has been a very sharp decline in the finance costs, and we'll wait to see the management commentary on what they have to say with regards to the volumes and how the business has panned out during the quarter. We'll await more details from the investor presentation. But for now, prima facie, Varun Beverages, at first glance, the top line has declined on a year-on-year basis. The EBITDA is flat, and on the margins front too, they've been fairly okay. From 27%, they've gone up slightly, around about 80 odd basis points on a year-on-year basis. But that's Varun Beverages for you. You'll get more details on the other side when Mangalam joins in on halftime report. But from Rima, Sonal and me, we take your leave on this edition of Trading Hour. Thank you so much for watching.
Stocks trade soft on mostly tepid earnings and uncertainty over tariffs as the August 1 US trade deal deadline nears. Realty, Metal and Pharma see some green while IT continues to drag.
IndusInd Bank reports margin improvement and a dip in credit cost in Q1, but analysts don't see it earning a healthy return on assets for some years. The street awaits the appointment of a CEO as the next cue.
A Supreme Court bench headed by CJI Gavai is slated to hear JSW Steel's review plea on Bhushan Power and Steel today. The Apex Court's decision on the matter is being keenly watched and will be critical for JSW Steel.
L&T's hydrocarbon offshore vertical bags an order worth a lot of 1,000 crores, more than 15,000 crores in West Asia. The order entails EPC work, installation of offshore structures and upgradation of existing facilities.
U.S. Trade Representative Jamieson Greer says more negotiations are needed with India on a trade deal, adding that the discussions have been constructive, but U.S. needs to see how ambitious India wants to be. Very good afternoon. Hello and welcome to our halftime report from the CNBC TV18 Motilal Oswal studio. I'm Ekta Batra. With me is Manglam Malu and Vinny Motiwala. Well, it's turning out to be a session where we are definitely trading with trepidation, you'd have to say. So it's just about a range-bound day of trade with a negative bias, and around 130 odd points is what the range has been for today's trade at this point. However, watch for the 56,000 level on the Bank Nifty, because that becomes a crucial level to watch out for. And lot of stocks in focus, however, some of them bucking the trend. So, for example, Tata Chemicals is higher, JB Chemicals ahead of its numbers tomorrow, and even Torrent Pharma reacting to its numbers today. So that seems to be standing out. We do have a lot of results to watch out for. Case in point would be from the frontline space, L&T and Asian Paints. So busy day ahead in terms of stock-specific cues, but as of now, market doesn't want to please us with any gains.
Busy day indeed, Ekta. But you know, what's interesting is that every time there is an attempt to recovery, there is an equally vociferous attempt to decline from the highs as well. That's what took place yesterday. Let's see whether the second half of trade today sees some selling or not. Volatility is expected also because it's the Sensex monthly expiry that takes place today. So we'll, watch out for that. But a couple of sectors doing extremely well today. Real estate really stands out. So we have Lodha Developers, which is higher in today's trading session. We did see some traction come by in a couple of these other, real estate players as well. So the Nifty Real Estate Realty Index comes up for you on this screen. It's mildly in the green as against the other parts of the market which are fairly in the red. Puravankara over the last 5 minutes or so has seen a big surge, and this has come on the back of good volume. So just pull up the intraday chart of Puravankara, nearly 14% in terms of an up move taking place out there. And the stock generally has been a bit of an outperformer. But by and large, from the frontline pack, the other one that I'm looking at is Bharti Airtel as well. That's seeing some fresh long positions being added and supporting the cause of the bulls for now. The one metric that I'll keep an eye out on very closely as the day progresses is the advanced decline lines, because they've been flittering between green on the top and red on the bottom and alternating through the course of the day, and now fairly close with 1,400 stocks in the red for around 1,200 in the green. Hi, Vinny.
Hi, good afternoon. So yes, you all have mentioned some bit of those positive coming in, but we're seeing some bit of a pressure surely coming in on some of these banking names as well. So continue to keep an eye out on that one. Axis Bank, Federal Bank, all these continue to be in pressure today as well. IndusInd Bank, the numbers were not as bad as the street was expecting. So muted performance there is what we're seeing. But we will start with the management at first corporate for today, and that's on the back of its earnings, and that is eMudra. Now, we saw a muted quarter that came in for eMudra in Q1. When you're looking at it in terms of a quarter-on-quarter basis, muted growth. Year-on-year basis, strong growth. But what is the outlook of the company going forward? We do have Venkatraman Srinivasan, Executive Chairman of eMudra, joining in with us to talk to us about the outlook. Good afternoon, sir, and thank you so much for joining in with us. Let's just start by talking about your revenue. Overall, what you've done this time, quarter-on-quarter basis, it's around 0.1% growth. Year-on-year basis, 59% growth. Last time in your con call, you had spoken about, your revenue guidance at around 650 to 700 crores. And this time, I believe you've increased the lower end of the guidance. So what is keeping you positive, or what are you bullish on in terms of drivers for the growth? What are the trends that you're seeing, specifically on the BFSI government side of the business as well?
Yeah. So if you see on the first quarter, we have achieved a revenue of around 150 crore. Generally, if you see the Q1, it is a weaker quarter for the digital signatures and also a little bit weaker quarter for the enterprise solution. Generally, the Q2 is much better. Q4 also will be much better. So in the Q1, if you are able to get 150 crore, 150 into 4 on the, if you just to project that itself can come to 600 crore. Then we are also doing an acquisition. We have announced an acquisition of a company called Cryptas. So that itself is quarterly 25 crore per quarter. So 3-quarter revenue of that is also there. So with this itself, around 675 crore will be possible. So that's where we felt that 700 crore would be achievable. So this is the basis. And on this again, BFSA and government both sector, the order book position and pipeline is continuously improving. So that's where we feel that this guidance of around 700 crore is an achievable guidance.
Okay. So, just want to understand, obviously, you're talking about that Cryptas acquisition as well. In the last year, you've made other acquisitions on the AI front as well. What is the growth that you've seen in these inorganic growth acquisitions that you've made? So what is the growth in these companies versus what is your core company's growth?
One is, if you see last year around 36% growth, on that organic growth was around 18.5%. Balance 17-18% is due to the acquisitive growth. So this is how the combination is there, and this time also this kind of a growth will be there, around half of organic and acquisitive growth.
Okay. And what about margins, sir? What is the expectation there as well? This time, the company has managed to see EBITDA margins of around 23%. It's the similar range that we saw in Q4 as well. What are we expecting over there? And given that you've made these acquisitions, it's expected to have a short-term impact on the margins. Then what is the short-term range?
One will be if you see the Cryptas acquisition, what you announced, it is a little PAT negative, but with the more and more integration and driving the synergy, we have to bring it to positive, which may take maybe 2 to 3 quarters. But at the same time, whatever our product we are selling, the margins are quite good. So that's where on a combination, we hope to maintain the margin, even PAT margin around 16.5%. And EBITDA margin at the current level. So we feel the margin will not decline. It may not immediately dramatically improve also, but at the same level, we will be able to maintain the margin.
Okay. All right. If you could just tell us quickly, you did have some loss to competitors in terms of the digital signature certificate reselling. You did lose some amount of it to competitors. Can you just give us a sense in terms of what kind of pricing competition might you be seeing at this point in time? And what are the competitive dynamics that you're facing in FY26?
Yeah, if you see the digital signature, if you see 2-3 years back, there were only 3 to 4 players. But now other certifying authorities are predominantly for the defense industry, for the Reserve Bank like that. They were not public certifying authority, but now almost some 10 to 12 public certifying authorities have come. And they are all selling in the same market. And at the same time, the digital signature certificate volume has not increased, but it has declined by 20 to 30% because of some of the taxation use cases have been simplified. So,
Mr. Venkatraman, I'm afraid we'll have to leave it at that right now. It's a short interaction that we had because the Home Minister Amit Shah is currently addressing the Lok Sabha on Operation Sindoor. So let's hear that out. Thank you for joining.
तब इस पर मुक्त चर्चा भी होनी चाहिए, चिंतन भी होना चाहिए, आगे न हो इसकी व्यवस्था की भी चिंता होनी चाहिए। माननीय अध्यक्ष जी, मैं विषय पर आने से पहले आपके माध्यम से सदन को और सदन के माध्यम से पूरे देश को ऑपरेशन महादेव जो कल एक हुआ है, इसकी जानकारी देना चाहता हूं। माननीय अध्यक्ष जी, कल ऑपरेशन महादेव में सुलेमान उर्फे फैजल जट, अफगान और जिब्रान 3 आतंकवादी सेना, सीआरपीएफ और जम्मू कश्मीर पुलिस के संयुक्त अभियान में ऑपरेशन महादेव में मारे गए। और माननीय अध्यक्ष जी, ये जो सुलेमान है, ए श्रेणी का लश्कर तोयबा का कमांडर था। पहलगाम हमले में और गगनगिर आतंकी हमले में वो लिप्त था। इसके ढेर सारे सबूत हमारी एजेंसियों के पास है।
Okay, so that is the Home Minister talking in Parliament, and we'll get to more details with regards to Operation Sindoor as well as Operation Mahadev, which took place yesterday. But as of now, we need to take a short break, and as we do that, a small programming note for our viewers. As the workplace transforms, so must leadership. In the Bangalore edition of Future Female Forward Season 3, India's top business leaders gather to reimagine what inclusive leadership looks like and how women are powering the future of work, capital and innovation. Catch it live today, this evening at 5:30 p.m. onwards, only on CNBC TV18, CNBCTV18.com and YouTube.
Welcome back. Just look at the intraday chart of Varun Beverages. That stocks recovered from the lows, but the company has reported its presentation and it tells you a few weak things that took place during the quarter. Remember, there were unseasonal rains and as a result of which the summer sales were weak. So for carbonated drinks, their volumes actually fell by 5%. And if you look deeper, the India volumes for the company declined by 7%. So telling you that demand was fairly hit during unseasonal rains this summer, and as a result of which there was weakness in the overall performance. Though how much of that is in the price or not is something that we will have to consider going forward. But speaking about numbers that came in, we did have Tanga Malai Jewellers, which reported their numbers yesterday as well. A near 28% jump in their overall revenues, but the profits after taxes were lower by 19%. EBITDA was lower by 6% because the company chose to invest excess savings into brand building and promotional activity, and higher depreciation led to lower profits as well. What's the way forward? We do have with us the management of the company joining in. We have, the company's leader, S.M. Lakshmanan, the Vice President of Finance and Accounts, and on the show. Thanks a lot, Mr. Lakshmanan, for joining in. You know, the obvious question, demand in the second quarter, because gold prices are now off highs. What are your target gold and silver volumes for this year? And the margin outlook for this year as well, given increased promotional spends, store opening expenses, and brand building that you're likely to do. So what do you stand by for the full year?
Good afternoon, Mangala. Thank you for the opportunity. Tanga Malai Jewellery Limited has achieved a turnover of 1,555 crore rupees for the first quarter FY 25-26, a retail revenue YOY growth of 28%. In terms of volume, during the first quarter, gold is at -4%, silver volume increases by 11%, diamond volume increases by 22%. As far as the current quarter Q2 is concerned, the company is expected to maintain the retail revenue year-on-year growth of 28% during the Q2 as well.
Okay. So you're targeting 28% in Q2 in terms of revenue growth?
Yes.
And what about the entire fiscal? Your earlier revenue guidance for the entire FY25 was 25%. So are you increasing that? Do you stay at 25%?
Absolutely. The company will be able to do a retail revenue growth of more than 25%, and probably the company could look at a revenue of top line of 6,000 crore rupees for this financial year 25-26.
Okay. So, what about your store addition plan as well? You've plans to add around 10 stores. Does that still hold, or would you look to add more?
Financial year 25-26 started with a store count of 60. 2 showrooms had been opened during the first quarter. 2 more showrooms have been opened during this second quarter, July month. The present store count is 64. These 4 new showrooms which have been opened in Chennai, along with the flagship showroom that have been opened during the last quarter of financial year 24-25, have all been doing satisfactorily well. And the company is looking at 11 more new showrooms for this financial year in the remaining months, taking the new showrooms tally to 15 for this financial year.
All right, so 15 stores for this entire year. That is an accelerated number because you haven't been adding as many stores in a lot of years in the in the past. Mr. Lakshmanan, you...
And Mangalam, just to interrupt, predominantly most of these showrooms are going to be in Chennai, and probably a couple of showrooms could be in other parts of Tamil Nadu.
Yeah, you had called that out as well, because earlier you didn't have much presence in Chennai, but after the flagship store in Chennai got great response, you are increasing their presence out there as well. And in terms of a market, it's a lot bigger market than the markets that you currently serve. But let's talk about margins, because opening in Chennai means higher costs. Opening in Chennai means better, expenditure towards promotions, etc. And that's seen an impact on your margins in the first quarter. Your margins have come down to 5.4%. On an EBITDA level. What is it that you're targeting this year? You've given us a target of 6,000 crores on the top line. What kind of EBITDA and margins are you targeting this year?
Yes, Mangalam, EBITDA margin for the first quarter is at 5.78% on the retail sale. In my earlier CNBC discussion, I had mentioned that the company would like to retain or maintain the EBITDA margin target of 6%. And the company continues to stand at that level. And But for the few expenses, probably the company consciously has spent it towards media, advertisement, brand building for the ongoing expansion activities in Chennai, and to some extent the staffing expenses. All these expenses which have been incurred in a front-ended manner for the expansion activities that is going on, the revenue benefits we will be getting on an enduring basis in the coming months, quarters, and years.
And on silver, you said that the volumes had seen a big surge, nearly 40%. Obviously, with gold prices rising the way they did, people would have looked at silver as an option as well. Between gold and silver, what gives you bigger margins, and how do you expect silver volumes to pan out this year?
Absolutely, the first quarter, the company has seen a non-gold revenue growth of 34%, which is a highly encouraging one. And as you very correctly said, this will try to increase my bottom line as well.
Okay. So overall, you're targeting 6,000 crores in terms of top line. You're targeting 6% in terms of margins. It's looking extremely bullish, Mr. Lakshmanan. What is the downside to this? What is the risk to your numbers and the risk that you are possibly factoring in to this margin picture?
Margin, we will be able to maintain probably closer to 6% certainly, as the non-gold revenue seems to be giving us a boosting reception, especially in Chennai. And the other factors will be able to keep the EBITDA at a 6% level. And let me also tell you that, as I mentioned in my earlier discussion, that the gross margin the company has seen are coming to the double-digit level. We are at 11% for this quarter. And all these seem to be, giving us a good boost that we will be able to maintain a double-digit gross margin as well as the EBITDA at 6% going forward.
Okay, so just a quick word, target for SSSG, what would that be for FY26?
Yes, for the first quarter, the company is at 6.83% say SSS. This is over and above the last year's 19.76%. And this has been able to be achieved by the company even in the midst of 32+% increase in the gold price. So the company will be able to come back to the double-digit SSS percentage as the volumes and the revenues scale up going forward.
Okay, so that's by the end of the year we could expect that coming back as well, and double-digit SSSG growth. Okay, sir, thank you so much, for joining in with us this afternoon and giving us insight in terms of what we should be watching out for the company going forward. That was the management of Tanga Malai Jewelers. As of now, the stock is down 0.6%. But on that note, we're going to submit a very short break. A reminder for our viewers, unlock a world of exclusivity, expertise and influence. Become a member of CNBC TV18 Access. Our premium members only experience on CNBCTV18.com. The membership includes access to CNBC TV18's flagship events, interactions with our journalists along with curated studio tours, e-learning sessions and masterclasses, and curated lifestyle benefits. Welcome back to Halftime Report on CNBC TV18. Obviously, a couple of names buzzing on the back of their earnings. But, a lot to watch out for in the world of F&O as well, given that the market has been quite muted. What are we keeping an eye out on now? Nigel is joining in with us for that.
Well, that's right. Actually, the market's been muted. And if you look at the Nifty, the intraday pullbacks as well have been quite feeble. But if you want to look at a couple of positives, one is the advance decline ratio. That's not falling apart. You have close to 1,200 stocks that are advancing, which is a pretty good sign out there. So the broader markets, it's not that bad today, which is encouraging. The other point I'm looking at is the Nifty as well as the VIX. If you look at the VIX, we've fallen more than 1,000 points from the top. But the volatility index hasn't really perked up. It should have been at high teens at the least. It's still holding at around 12 odd. So that will give the bull some kind of comfort. Moving to the options data then, the PCR at the start of the day was around 0.64. That's moved to around 0.68 approximately. There's call as well as put writing in today's trading session, and the option writers, they are taking the money. That is, they're writing the premiums, they're pocketing the premium, and the premiums moving down because the IVs as well are crashing out there. So just look at the 24,700 call. Premium out there, it's down to sub 100 rupees. If you look at the 24,900 put as well, the premium has crashed from around 100 rupees to around 82 rupees approximately. And the 26,650 put, well, at the start of today, the premium was more than 80 rupees. That's come down to around 60 rupees. Short point is the writers seem to be at play today. And just looking at the data points in terms of technical levels, in terms of the options data as well, the broad sense is the crucial support comes in at around 24,550. So if we have to see a bounce or a short covering bounce, this level needs to hold out. If that gets broken decisively, then we're easily seeing a further slide down. On the upside, 24,850 going by the options data, that's the first level of resistance. There can be a pullback, but you'll get further confidence once you get past the 24,850 odd mark. Stocks that I'm looking at, and before that, the Nifty Bank, that's the one that's actually broken down the last few days. So if there is something that needs to bounce, then the Nifty Bank needs to get its form back. Currently it's trading below the 50 as well as the 20 DMA. Finally, in terms of stocks, GAIL is seeing some bit of short covering in today's trading session. That's why, as the con call progressed, the open interest is down, the stock is mildly higher. And you have Marscon Dock as well. There is some selling in the cash market, but there is some unwinding of positions as well that we're seeing on that one. And finally, RBL Bank, that's in the F&O band. But there is a likelihood it's gradually moving towards that 80% of MWPL. It started the day at more than 95% since it was in the band. So watch out for that one. If there's further unwinding, then it could possibly come out of the band. Back to you.
Okay, all right, Nigel, thanks very much for that. That's on the F&O space. But we do have Hormuz now to take us through the stocks that are moving around in trade this afternoon. Hormuz, over to you.
There are plenty of earnings reactions, and start with the positive side first, considering we're in a little bit of a wobbly market. So we'll start out with some positivity. But Paradeep Phosphates is the name here. 11.5% higher, strong results coming in there. And interestingly, the stock is now up 5x from its IPO price, which was around 42 rupees. And even today, 6 crore shares have already been traded compared to its 20-day average of just 60 lakh shares. So it's a new high for Paradeep Phosphates today. Lakshmi Organic is the other one, a not so pleasant earnings reaction, 7.5% lower on that stock. It's the second day of losses, and this too has declined on strong volumes in today's trading session in comparison to its 20-day average of 3 lakh. Already 13 lakh shares have been traded. Good Luck India is a positive mover in today's session. Over 2 lakh shares have been traded, a 20-day average of 70,000, 9.5% higher on that stock. And Fedbank Financial Services, or FedFina, reported results yesterday, but it's been an underperformer, up 5% today, but this is only the second time in the last 7 sessions that the stock has gained, and despite this move, the stock is trading below its IPO price. So earnings reactions are plenty, and some underperformers like Fed Financial as well.
All right, Hormuz, thanks a lot for that. With that, we'll move into a short break. Remember to tune into the all-new CNBC TV18 Prime, which brings you insights from policymakers, business leaders and economists, all of them shaping both the India and world's future. We have CNBC TV18 Prime that decodes global shifts and their impact on Indian businesses, gives you unparalleled insights. You can tune into CNBC TV18 Prime at 12 noon daily for the Global Reset. At 1 p.m. you have the Big C, which speaks about cryptos and commodities, and Global Lens as well, which is at 8:30 every weeknight.
Welcome back, and joining us on the show now is Sabyasachi Ray. He's Executive Director at the Gem and Jewelry Export Promotion Council. Mr. Ray, hi, thank you so much for taking time. And clearly, the month of July seems to be ending well for you, especially with the India-UK trade deal done. And one of the major beneficiaries clearly is going to be the jewelry exporters here.
Thank you, Manisha. I think this is a great time for the sector with the India-UK CETA. We are calling, the ministry is calling it CETA. FTA which has been signed, of course, is a great news because the figures, whatever, if you look at the figures, UK imports total $92 billion of, gems and jewelry from the world. And from India, they're only importing 3.5 billion. So sky is the limit. That much I can tell you. So,
all right, 90 billion and 3.5 billion. Where do we stand at this point in time? How was 2024 as a financial year? And what is the expectation now with CETA in? What numbers are you guys working with, let's say, for the next 2 or 3 years?
No, if you look at the numbers, we are exporting only $450 million of jewelry, where UK is importing some $3.5 billion of jewelry. So we are looking at to increase it, ramp it up to more than 2.5 billion another next 3 years level. Because we have seen that a lot of silver jewelry is consumed there and we are not consuming that silver jewelry. Now, if you look at the UK deal, I'll just tell you something, is that if you look at UK is also having a large South Asian population, And if you look at South Asian, I talk about South Asian, it is Indians, Bangladeshis, Sri Lankans, Nepalese, all these people, all are wearing the kind of jewelry what we export or the ethnic kind of jewelry. So that itself is a captive market. And if you have seen in recent times, Malabar, then this Kalyan, etc., all have set up their shops there. So it will expand. The retailers will expand their shops to sell with these people. Of course, they will start with these people, but going forward, we'll also export to the expats. Recently, we have done a India-UK buyer-seller meet, where we have seen, we have targeted the studded jewelry, diamond-studded jewelry, which is mostly targeted in the local UK population. We talk about the whites, basically. And there also have seen a huge interest. They were not knowing that India manufactures this kind of, diamond jewelry. They're exporting from, or importing rather, from Hong Kong and etc. So that itself is a huge market in itself, and we will have huge inroads into that kind of market where, of course, India is not having a footprint. So overall, because in all these segments, you have to understand that the whole duty has become totally zero. So we'll have very good competition in terms of when you talk about Hong Kong or China and etc., and also Thailand.
Oh, well, absolutely. From 2.5% to 4% or thereabouts, it's a 0% duty export right now. So clearly, I do see that happiness and smile on your face. Mr. Ray, also, while UK being done, and you're talking about more than double the numbers in the next 2 to 3 years with UK, but the conversations with US are still happening. I do understand GJPC has been making a lot of representations there as well. What is that a number one and a two that we can anticipate as that trade deal goes through, as it does?
No, you have put me into a very difficult situation because nobody in India is talking. Of course, what we have heard, or Honorable Minister has talked, that the talks are going on a very good pace and at a robust rate. So he is very hopeful and he is very confident. But when we have talked to him, so if that, and also you have also talked, I think the media has also talked, and this is what he's speaking. And when you look around, we have seen day in and out, different kind of agreements going on. But one thing we have to also notice, yesterday also I was noticing, let's say there is a deal with EU, or there's a deal with Japan, or there's a deal with Indonesia. Everywhere where you have seen is that nothing has come out on paper, the exact, like when I'm talking about UK, right now when you are sitting with me, I'm talking about each of the HS codes.
Exact numbers.
And exact numbers, that means what are the import duty there and what is the PSR, that means the value addition, everything. So, and FTA, when we are talking about, in fact, if you have seen, our Prime Minister have told that we will be signing a bilateral trade agreement with US. Now, bilateral trade agreement should have all these details, isn't it? We should not be having only some announcement or only some paper announcement, etc. So I think India is going for a comprehensive deal where all these details will come out, and that is where I think we'll score over the other people or other countries in the world.
All right, Mr. Ray, thank you so much for joining in. So clearly, UK deal done, but US still a bit of a question.
All right, Manisha, thanks very much for that. So that's the update coming in on the commodity space. Just want to point out we had two numbers which came in. We had Strides as well as Happiest Minds. Strides should come up for you where there was an exceptional loss which took place, but on a PBT level, the profit is lower on a year-on-year basis. So Strides is up around 4% reacting to its performance this quarter. And the other one is Happiest Minds. Revenue is absolutely flat this time. EBIT up around 17% on a sequential basis. Happiest Minds, the stock is quite happy at this point. So up around 5% currently for Happiest Minds. So three result reactions, Hind rectifiers on your screen as well, reacting positively to its numbers, up around 8%. So Strides, Happiest Minds Technology and Hind rectifiers, all three of them seeing a positive outcome.
Absolutely, but on that positive outcome, let's actually just slip into a very short break. And after the break, we're going to be connecting with the management of Chennai Petroleum to decode their Q1 FY26 numbers and what we should be watching out for in FY26.
Welcome back. Chennai Petro is the stock on our radar. Reported a weak set of numbers in the first quarter. The weakness in results was due to the inventory losses and lower GRMs as well. H. Shankar, the managing director of the company, now joins us. Thanks a lot, Mr. Shankar, for joining in. And notably, there was an adverse reaction on the stock as well post those numbers. So the first obvious question is, what led to your GRMs, compress so much? Because your peers reported numbers, despite having a shutdown, their numbers were a lot better. So why the weakness in your GRMs in the first quarter? What do they stand at now? And what's your outlook for this entire year when it comes to gross refining margins?
Yeah, good afternoon to all the viewers. I think before we step into this GRM, I think one important parameter that we need to discuss is about the physical parameters, because that indicates the strength of the company. That also indicates that how we are actually doing with respect to our operational abilities. So in this regard, I think one important point is that consistently, if you look at the last quarter of 24-25, followed up by this quarter, we have been consistently doing more than 100% of the capacity utilization. At the same time, you should also appreciate that the operational excellence has led to a good level of distillate yield, which is about close to 80%, fuel and loss below 8%. These are all like great benchmarks when we look at performance. Now look at the performance with respect to the crude pricing and the overall financial result. Then it gives a different picture altogether, in the sense that if you see the core GRM, but what we call about as with respect to operation, it has been consistent with our last quarter also. At the same time, there has been an impact on the crude level, because of which the reported GRM is showing around 3.2. So I think when we look at our peer, that is what the comparison you are talking about, I believe that these are all comparable figures with respect to the overall performance of the company. And this is more or less in line with what a standalone refinery like our peers we are talking about. These are all in this almost comparable levels at which we are operating now.
So as of date, what does the GRM stand at? And at the same time, do you have any shutdown planned in the second quarter?
See, today when we are looking at our operational level and the GRM parameter, I think we are doing quite well now. The outlook is quite looking very good now. At the same time, we are looking at a window for shutdown, maybe towards the end of Q2. We are looking at it so that we can improve upon our operations going in future. Like, for example, if you look at our last year, 24-25, we had a shutdown coming in 24-25 in the month of September, October. And after that, our operational levels have really improved quite a bit. So I think this is very important for the health of the refinery and also for the reliability and operational excellence. So we are planning sometime around end of September, but looking at it, we have to also see the economic viability, how things pan out, and then freeze the date.
Okay. So, Mr. Shankar, is it fair to assume that maybe Q2, Q3 is when you're probably looking at a shutdown?
Yeah, Q2 end, we can fairly assume as of now. That is the plan we have now with us. So we will be also evaluating it down the line, maybe 4 weeks in advance. We will take a call, because we have to necessarily tie up all our crude requirements and also the product upliftment with respect to the availability of the shutdown. So 4 weeks down the line, just before the shutdown, we will take a call on that.
So what would your, bottom line look like for the entire fiscal then in FY26? Because you were marred by inventory losses this time round. You are looking at a shutdown going forward as well. So if you have to talk about, say, even the bottom lines, would it be a majority, maybe a first half loss that we would see for the company?
No, it is not. It is too premature to really assume such a kind of statement now, because, see, we are looking at an operational level of very good, and now looking at the current cracks position, it is really improved quite a lot. And we are also looking at a very positive July, August months to be coming up. So September is towards the end of the quarter that we are looking at. So with the current level of cracks and the crude price which has stabilized, I believe that Q2 we should be doing quite well. And I don't see any reason why. It's a very marginal rate we are looking at now in the Q1. So we should be able to recover this, and Q1, the H1 should be a good result. That is the expectation we really have.
Okay, we're expecting better performance in Q2, and overall H1 we'll see better performance as well for the company. Right. But Mr. Shankar, IOCL, recently told us that the refinery project, which is with the company, that is on hold. Could you tell us what has led to this? What is the impact that we could be expecting, and any impact in terms of your future projections that come in? Because I think you previously spoken about this Kaveri refinery that would add around $1 to $2 to your bottom line once it's commissioned. So, any change in terms of that and the impact?
Yeah, see, the refinery which was originally planned, it was a totally fuel-based refinery, which had about 6% of petrochemical intensity index also built in the project structure. And we had a lot of plans to move towards the higher petrochemical requirements in the phase 2 of the original project. So now, along with our principal, Indian Oil, we have been reworking on the project economics, and we were also looking at the project configuration so that if we are able to increase the petrochemical part at the beginning of the project itself, instead of going into phase 2 and further planning down the line, we have taken a call. How about looking at the configuration once again? And based on the configuration, we expect that the margin, what we are talking about down the line, would be much improved as compared to the. So therefore, the reconfiguration is under study now. And then based on the final outcome, we will be again going back and submitting one more final report before we embark on the construction execution activities.
Mr. Shankar, running short on time, just final 2 numbers before we let you go. One number you alluded to, fuel and losses, that has come down below 8%. Could you give us a sense, for every 1% reduction in F&L, what is the impact, the positive impact on your EBITDA? That's one. And second, on your debt, what does your debt stand at? And what's your deleveraging plan? Because finance costs have come down over the years.
Correct. So coming to the fuel and loss, I think if you look at the overall percentage, like every 1% of the fuel and loss that we are able to save, it almost gives us 500 to 600 crores of saving on an annualized basis. So that is the big number that we are looking at. So that's quite significant amount of saving that can come with respect to the fuel and loss. Now, looking at the second part of your question regarding the, that was regarding your
debt,
sourcing, you said, right?
No, that was debt.
See, debt part. So debt equity, we are maintaining around 0.5 now. We have about 4,000, which is mostly related to the processing of our short-term requirements. And that is a very small portion of it. And we really do not foresee any problem because we have been repaying many of our long-term debts and processing it and finding out the lower cost of interest, which is prevalent. So we are actually taking the advantage of that, and we are leveraging all our long-term with respect to the low interest rates that is prevailing now. So, yeah.
Thanks a lot, Mr. Shankar, for joining in and giving us an outlook on the company. You sound fairly optimistic, as a result of which we will watch out for better performance coming in the first half of this year and thereafter as well. We'll keep an eye out on the shutdowns that you plan to take. With that, we'll take a short break. On the other side, we will have more news and updates coming in for you.
Welcome back to Halftime Report on CNBC TV18. And as of now, we have seen a jump up coming in the Nifty. We started the show with it in the red, but now it's moved on to the green side. 24,700, about that mark is what the Nifty is trading at. Broader end of the market also is managing to outperform right now the Nifty 50. So that's going to be seeing interesting moves coming in there. So keep an eye out on what's going to be happening in the second half of this trading session today. But, with that, we'll wind down this edition of Halftime Report. Thank you so much for tuning in. Up next, your Business Lunch.
The market recovers from the lows of the day to trade with marginal gains. Realty, metals and pharma stocks see some green, while IT and consumer durables continue to lag.
IndusInd Bank reports margin improvement and a dip in credit cost in Q1, but analysts don't see it earning a healthy return on assets for some years. The street awaits the appointment of a CEO as the next cue.
A Supreme Court bench headed by Chief Justice of India Gawai is slated to hear JSW Steel's review petition on Bhushan Power and Steel later today. The Apex Court's decision on the matter is being keenly watched and will be critical for JSW Steel.
L&T's hydrocarbon offshore vertical bags an order worth more than 15,000 crores in West Asia. The order entails EPC work, installation of offshore structures and upgradation of existing facilities.
And US Trade Representative Jamieson Greer says that more negotiations are needed with India on a trade deal, adding that the discussions have been constructive, but the US will need to see how ambitious India wants to be. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I am Hormus Patakia. With me as always is Vamakshi Thoria. Vamakshi, good afternoon. A lot of earnings being reported as of now, but we are counting down to two main numbers. But looking at the screen, well, it's not much of a gain, but you could say it's not as bad as it was yesterday.
Well, classic tug of war playing out, right, Hormus? Initially it was bulls, then the bears took over, and now again we're seeing the bulls fighting back. The Nifty for now is trading with a gain of 22 points. The Sensex also higher in trade. The mid-cap end of the market, though, is doing fairly well as compared to the benchmark indices. For now, the mid-cap index is up almost 0.4%. The small-cap end of the market, too, seems to be doing quite well. That'll also come for you in just a bit. There it is up almost 0.2%, and it, in fact, is trading at the day's highest points. And this is sort of reflecting in the advanced decline ratio. Earlier on, it was the number of declines that were outpacing the number of advances, but that ratio seems to have now flipped. The declines have crossed just a short while ago, and now it's the bulls that are taking charge. Now, as Hormus was highlighting, several earnings in focus today. Parity Phosphates, for example, that stock has surged by almost 11% on an otherwise, muted day for trade. Flare Writing too is another counter that is flying high in trade today. But Hormus, two important triggers that we'll be watching out for. Number one is, what goes on as far as the US deal is concerned with India. More discussions will they follow? And the other, the FOMC meeting that is scheduled the interest rate decision that will come tomorrow.
Well, the next 3 days are the busiest for Wall Street. Mega cap results, Apple, Amazon, Microsoft, Meta, all of them reporting results over the next 2 days. There's the jobs data coming in, GDP data coming in. So there's a lot to track when it comes to global cues from the US. But the two major triggers that we are watching out for later this evening, of course, one is the results from L&T. Of course, that will give you an idea of how India's largest infrastructure player is performing during the quarter. And of course, we are counting down to India's largest paints company as well, Asian Paints. And L&T, ahead of its results, is at the highest point of the day. Mind you, it just announced an order win earlier in the day, which was up to around 15,000 crore rupees, an ultra mega order that the company announced. In Asian Paints, well, it has seen some recovery from the 52-week low that it made earlier this year. And since then, it's around 0.5% lower. The number should be out anytime from now. But the most awaited news announcement so far has been the India-US trade deal, which are just few days left for the tariff deadline of the 1st of August, and that it still continues to remain in limbo, even as the US has moved ahead with finalizing several other bilateral agreements. Now, the US trade envoy, Jameson Greer, told CNBC International that the US needs more time to sort out outstanding trade issues with India. And it's not just Greer, we also spoke to other experts to understand the impact of not meeting the tariff deadline. Listening to these reactions.
I think the thing to understand with India is their trade policy for a very long time has been premised on strongly protecting their domestic market. That's just how they do business over there. And the president is in a mode of wanting deals that substantially open other markets, that they open everything or near everything. So we continue to speak with our Indian counterparts. We've always had very constructive discussions with them. They have expressed strong interest in opening portions of their market. We of course are willing to continue talking to them, but I think that we need some more negotiations on that end with our Indian friends to see how ambitious they want to be.
My sense is that it's not material. The market's making a mountain out of a molehill. Exports to the US from India are 1% of India's GDP. If you include services, it's 5% of GDP. But clearly the market likes talking about it, and it's a big sentimental issue. And I think the more concerning thing, just eavesdropping on your conversation earlier, is the idea that President Trump is unhappy with what's going on in Ukraine. He wants a ceasefire. It's not happening. Doesn't look like it's going to happen. And so he's going to indirectly ratchet up sanctions on Russia through its intermediaries, of which India is a big one. And that threat of a 100% tariff on countries which do business with Russia is, I think, a more material concern.
If India does not strike a deal at this point in time, it will have a comparative tariff that is higher than many others who have struck deals. And in particular, Japan, and the EU just yesterday at 15%. Many of us former trade negotiators and U.S. trade negotiators have been scratching our heads about this over the last couple of weeks. These aren't commitments normally made in trade agreements. Many of these commitments are not yet in writing. We haven't seen agreement texts released, so we can assess exactly what is intended. I see some of these statements of hundreds of billions of dollars that will be invested or will be purchased as essentially best efforts, intentions on the part of the two countries.
Meanwhile, top US and Chinese economic officials met in Stockholm for more than 5 hours of talks aimed at resolving long-standing economic disputes at the center of a trade war between the two nations. Seeking to extend a truce by 3 months, Trump earlier previewed the talks with China, stating US has a good relationship and hoped China would open up amid tariff negotiations. CNBC's Eunice Yoon brings us the details on China's requirements from the ongoing negotiations.
China is reiterating the Commerce Minister's recent remarks that there is no reason to return to a trade war. The minister said practice has proven that through dialogue and consultation, we can properly manage contradictions. So the Foreign Ministry repeated that today, saying that the Sweden talks can reduce misjudgments and strengthen cooperation. And this comes after a weekend editorial with Xinhua, the state-run news agency, was playing up what it described as the mutual benefits of these talks, pointing to China processing export control applications. It didn't say specifically that that was about rare earths, but that's what it's about, and the rare earths were processed for U.S. industry. And then it's also mentioned that the U.S. lifted what it described as relevant restrictions on China. So that means that China, again, didn't explicitly say that this is about AI chips, but China does now have the ability to access H20 NVIDIA chips, which had been previously banned, at least the export to China. So in terms of the expected agenda items from a Chinese perspective, there's a lot of belief that we are going to see an extension of the August 12th deadline, possibly by 90 days. Also that China would push for a reduction in the so-called fentanyl tariffs. The Chinese believe that these tariffs that were put as sort of a punishment for their non-cooperation from the U.S. perspectives on fentanyl as unfair. And then the Chinese expectation is that the Russian oil purchases are going to come up just because the Treasury Secretary Scott Bessent had flagged that as a talking point. State media, though, has already been flagging that they will be pushing back on that last point, saying that if Bessent uses this issue to put pressure on China, it will likely cause the newly established trade consultation mechanism to collapse. This is in the Global Times, the Communist Party paper, saying that China would not just, quote, go along with Russian oil cuts. Guys?
Eunice Yoon, thank you for that update. Now, U.S. Trade Representative Jameson Greer, you just heard him on the U.S.-India trade deal, but on the issue of China, he mentioned that the US is in an incredible position with regards to a deal with them, but he does not expect any substantial outcome just yet. Listen in.
The U.S. is in an incredible position. We've spent the past 3 months trying to reorder global trade to make sure we can get rid of these systemic imbalances that have persisted. We now have deals with the EU, Japan, and a number of partners. So we come into these negotiations with a strong hand. Our discussions with the Chinese are always cordial and constructive. This is the third round in the past 3 months. So just the fact that we're talking and we want to move forward in a positive way is its own good sign. I don't expect some kind of enormous breakthrough today. What I expect is continued monitoring and checking in on the implementation of our agreement thus far, making sure that key critical minerals are flowing between the parties and setting the groundwork for enhanced trade and balanced trade going forward.
Well, that was all the information you had on the US-China as well as the US-India trade talks. We'll keep getting you more as the August 1st deadline looms near. But a small programming note for our viewers as we slip into a short break. As the workplace transforms, so must leadership. In the Bengaluru edition of Future Female Forward Season 3, India's top business leaders gather to reimagine what inclusive leadership looks like and how women are powering the future of work, capital and innovation. Catch it live today evening 5:30 p.m. onwards only on CNBC TV18, CNBCTV18.com and YouTube channel. Welcome back. You're watching Business Lunch on CNBC TV18. Let's now go to some of the top buzzing stocks in trade today. We now have Upasana joining us with all of those counters. Upasana, take it away.
Well, good afternoon, Vamakshi. First up, let us look at the stocks that are in focus on the back of result reaction. First up, let us look at the stocks that are surging in trade today on the back of positive results. Strides Pharma reported results sometime back today. Revenue is up almost about 6% on a YoY basis, and margins have also seen an improvement of almost 25 basis points at 7% on a YoY basis. Happiest Minds also reported their numbers sometime back. It's a strong set of numbers. Net profit has seen a growth of 67% sequentially, and margins have surged from 11.3% to as high as 13% sequentially. Flair Writing reported a good set of numbers last evening. Revenue saw a growth of about 17%. PAT saw an uptick of 10% on a year-on-year basis. And domestic sales saw an uptick of 23% versus export sales with a growth of 24% on year-on-year basis. Next up is Paradeep Phosphates. The stock surges sharply in trade as profitability improves. The revenue has seen a growth of 58% on year-on-year basis, and net profit jumps almost 47 times on year-on-year basis at 256 crores. On the flip side, now let us look at the stocks which are seeing some cuts in their prices because of the weak results. Masgao Dock is the one with the weak result. It's mainly impacted due to higher prices, higher expenses and order execution. Aeroflex also has reported a weak set of numbers. Revenue declines nearly 6% on year-on-year basis, and margins have seen a downtick of nearly about 190 basis points at 18.3%. So all in all these stocks on our radar today.
Recovering from the lows of the day, though, is Masgao Dock. Upasana, thank you for that update. Now, it's day 2 of the marathon 3-day debate over Operation Sindoor. Home Minister Amit Shah addressed the Lok Sabha, where he announced that the militants involved in the Pahalgam terror attack were killed under Operation Mahadev. Meanwhile, Prime Minister Narendra Modi is likely to address either houses of the parliament at 7 p.m. this evening. Leader of the opposition, Rahul Gandhi, and Congress leader Priyanka Gandhi are also set to talk today. Amidst the opposition ruckus on the first day of the debate, Defence Minister Rajnath Singh and External Affairs Minister S. Jaishankar hailed Operation Sindoor's decisive action against cross-border terrorism.
Well, in fact,
let us now listen into what the moment when Home Minister Amit Shah announced the elimination of the Pahalgam terrorists in Operation Mahadev.
Operation Mahadev में सुलेमान उर्फे फैजल जट, अफगान और जिब्रान 3 आतंकवादी सेना, सीआरपीएफ और जम्मू कश्मीर पुलिस के संयुक्त अभियान में ऑपरेशन महादेव में मारे गए। और माननीय अध्यक्ष जी, ये जो सुलेमान है, ए श्रेणी का लश्कर तोयबा का कमांडर था।
On that note, let's slip into a short break. But as we do that, remember to tune into the all-new CNBC TV18 Prime, bringing you insights from policymakers, business leaders and economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune into CNBC TV18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C and the Global Lens at 8:30 p.m.
Welcome back. The Supreme Court will now hear review pleas by the JSW Steel on the Bhushan Power and Steel insolvency case today. Ashmit is joining in with more details on this. Ashmit, big day for JSW Steel.
Well, indeed, it will be critical. This is a review petition that has been filed by JSW Steel, that has also been filed by the lenders, seeking a review of the Supreme Court judgment, which had very clearly set aside the entire resolution plan, set the clock back by as much as 5 years, taken the entire resolution process and then said that the company needs to go into liquidation. That's the question that will be raised once again. Just a few housekeeping issues to highlight for the benefit of our viewers. This is a review petition, and as is the norm, these review petitions are not heard in open court. Lawyers don't have access to the judges for purposes of this review hearing. It will be heard, it will be decided, it will be considered within the chambers of the judges themselves. There will be no representations being made by the lawyers. Here, important to point out that the counsels for the lenders, the counsels for JSW Steel have repeatedly said as a part of their application that this matter should be taken up for consideration in open court, where they get a chance to make their case before the Supreme Court. Now, what's important is that this matter will be taken up at 1:55. Post that, we'll begin to get some clarity whether it's been considered, whether an open court hearing will be allowed, or whether the Supreme Court feels that this is a matter that should be dismissed. These are questions, important questions that the Apex Court will have to answer on. Bear in mind, JSW Steel had put up as much as over 19,000 crore rupees for Bhushan Power and Steel. As a part of their petition, they're arguing that there's been a complete turnaround of the company. The production has doubled, the top line, the revenue has tripled, and these are aspects that they're hoping will weigh on the minds of the Apex Court as they take up this review petition. 1:55 is when the Supreme Court judges will take it up in their own chambers. Back to you.
Well, absolutely critical for JSW Steel today. We'll be waiting by to hear more details on that front. But moving on then, amid the dispute at auto parts maker Sona Comstar, the late Sanjay Kapoor's mother, Rani Kapoor, has spoken out, saying that the family's legacy must not be lost. Listen in to what she had to say.
I still don't know what happened to my son. I'm old now and need closure before I go. I may be old and frail now, but my memory of being with my husband when Sona was set up is strong. I remember the early days of Sona, built with care, sacrifice and love. I am here to remind the world that our family legacy must not be lost. It must be passed on as my husband always wanted to be.
That we take your leave on this edition of Business Lunch from Amakshi and me. Thank you for watching. We leave you with the markets at the highest point of the day. Midcap Radar on the other side.
Good afternoon. Welcome to Midcap Radar live from the CNBC TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. What a chart today, right? It's a day of volatility. Right now, the Nifty is up 54 points as we speak, around 60 points. There was a point in time when we were lower by around 40, 50 points. So there's been a massive swing, and that continues to be the story that we saw yesterday as well.
That's right. So generally towards the expiry week, it's the last couple of trading sessions that are so volatile, but this entire week has been extremely volatile. But nothing much to complain. The market has recovered quite sharply from the day's lowest points. Advanced decline ratio has recovered quite significantly. We have a lot lined up on the show, so let's start off with the top headlines. Market recovers from lows to trade with marginal gains. Realty, Metal and Pharma see some green, while IT and consumer durables drag. Mid-caps outperform.
A weak show from Mazagon Dock across parameters in the first quarter. Lofty expenses in the quarter gone by, dent profits, while margin takes an over 1,500 basis point hit. Stock plunges over 4%.
Happiest Minds surges after its net profits up 67% on a year-on-year basis, while margins expand sequentially. Stock up nearly 6%.
Shares of Godrej jumped nearly 5% on the back of a strong June quarter. The company's gross written premium rises 12%, while profit sees a 36% uptake to 138 crore rupees.
Strides Pharma gains after reporting its Q1 numbers. Revenues up 6% compared on a year-on-year basis, while margin gains again to 7%.
Okay, all right. Since the show is Midcap Radar and it's all about midcaps as well today, that index is doing well, 0.5% higher. We have the small cap index as well, which is 0.5% higher. And the chart just shows a recovery. So it's a good time to talk about a lot of midcaps because it is at the day's high. So let's go across to Hormuz for just that.
Positive earnings reactions. We'll start off with some of them. They just came in a few minutes earlier. And it is, look at Apar Industries, the spike that both Apar Industries and Happiest Minds have seen after their results. Apar Industries is now up 10%. Happiest Minds is now up 5.5%. And of course, some earnings reactions from yesterday as well. Paradeep Phosphates, a new high for the stock, and Flair Writing as well, 8.5% higher after their results. Not every stock has had a positive earnings reaction. Some of them have taken it on the chin as well. That 5-star Business Finance has recovered from the low, still holding on to a 3% loss. Aeroflex, the casualty of the day, 8% lower here. Kolte Patil just came out with numbers, 6.5% lower on that stock. And Lakshmi Organic too, recovering from the lows, still down 5.5%. Among some newsmakers today, Tata Chemicals, after that double upgrade coming in from Morgan Stanley earlier in the day, 6.5% higher on that stock. Paras Defense continues to be beaten down after a 10% circuit yesterday, another 6% knocked off today. And Jaiswal Nico, after a big block deal that took place earlier in the day, the stock up in a 20% circuit. Stocks on the volumes front, as you mentioned, Go Digit in your headline as well, 5% higher off the highs of the day though. And Netweb Technologies is up 6%, and Mangalore Chem, a new high for the stock, 9% higher in today's session on very strong volumes. And what is also making new highs today, Sterlite Tech recovering from the lows of the day, Torrent Pharma, an earnings reaction, Bosch at the highs of the day as well, 3.5% higher there. And Laurus Labs continuing to grow from strength to strength, 910 now on the stock, another 2% added in today's session. Back to you guys.
Thank you so much for that, Hormaz. A whole host of stocks mainly moving on the back of their Q1 results. But before we slip into a short break, here's a small programming note for our viewers. As the workplace transforms, so much leadership in the Bangalore edition of Future Female Forward Season 3. India's top business leaders gather to reimagine what inclusive leadership looks like and how women are powering the future of work, capital and innovation. Catch it live today evening 5:30 p.m. onwards, only on CNBC TV18, CNBC TV18.com and YouTube.
Welcome back. You're still tuned into Midcap Radar. Multtech Packaging, that is the first management on our show, reported good set of Q1 numbers. Revenues jumped 22%, driven by healthy demand across all segments. We are now joined by Janu Mahanti Lakshman Rao, who is the CMD at Multtech Packaging. Mr. Rao, good afternoon. Thank you so much for joining in. It's been a good set, and you have guided for volumes of around 12 to 15% and revenue growth of 18 to 20% in FY26. Which segments will drive this? You have 3 segments that you cater to. There's a new one as well. Can you break it up for us? What is the demand like in all 3 of them?
Yeah, paint segment is contributed handsomely this quarter. A more than 20% growth we witnessed in the paint segment, followed by pharma and food and FMCG, which are our main contributors towards a better profitability. So all these 3 have crossed double digits, and they're in the region of around 15-16%. Overall, the growth in volumes is around 16.9% compared to the Q4, but the sales are up by almost 19% value revenue-wise. So that indicates the margins are expanding thanks to the better product mix.
Okay. Mr. Rao, the other question is, as far as the lubricant space is concerned, this particular quarter, it has seen, some pressure. Rest of the year, do you expect that particular segment to continue to underperform? And going forward, do you expect pharma and paints to lead? And could you quantitatively give us the kind of volume growth you're expecting there?
The loops is always a stable trajectory. They never shoot up or go down drastically. Due to the unexpected rains in May, consumption of lubricants, even ice creams and yogurt have fallen drastically, leading to a negative growth in lubricants compared to the Q4. But compared to the Q1 last year, there is a minor growth. So that indicates that the trend is neutral in loops, which is always been expected. And I think it will start improving because of this setback in May and June. Probably from second or third quarter onwards, lube companies would pick up volumes. Coming to the growth parameters, I'm really excited about the pharmaceutical prospects. Several companies have approved our facilities for trials and commercial orders. Very few commercial orders have started in, but the numbers have already crossed last year Q4 numbers by around 11%. And we are looking at a much stronger demand for our pharma products in the coming quarters, because more than 10 to 12 companies are using our products in trials and machine trials and stability tests. And I hope that even few of them get cleared. Quarter on quarter, they will be adding numbers, and we will be crossing our targeted 35 crores projection for the current year.
So 35 crores for FY26 and 50 crores for FY27. Is that something that you'll achieve? You had indicated that in Q4 conference call.
Yes, we'll be aiming to go beyond 50 crores next year. Probably it will be somewhere around between 50 to 60 crores next year, because there's quite a bit of traction. And as I can expect, 3 to 6 months time for the demand to really turn into commercial orders. By fourth quarter onwards, we can see the sales running into double digits in crores. So for next year, our target would be in between 50 to 60 crores.
Mr. Rao, so, with this particular guidance that you have given, so are you saying that this does not take into account some of the ongoing discussions that you have with the companies? And in case that does fructify, you're saying there is an upside risk to these projections. Is that accurate?
Yeah, 35 and 50 crores are certainly given.
Okay.
There could be an upside if few of our plans happen.
So another question, one key metric that analysts track is the EBITDA per kg. In the current quarter, it's at a little over 41.5 rupees per kg. Can this sustain? We understand that this is towards the higher end of the range that you typically operate at. Can this sustain? And going forward, what is the target that you have?
Yeah, as you can see, in the last 10 quarters, we have never crossed 40 rupees. And now we are above 41.5. And it is a better quarter. Q1 is always better for us. But May has been a dampener to some extent. Otherwise, it would have been still better. So I'm hoping the other 3 quarters also will catch up, because of pharma adds at a much higher level of EBITDA. So probably we can still aim at 41 in this year, if not more. But it can further improve as our pharma and FMCG sales grow up. As I mentioned in my Q1 call, our Panipat is starting food and FMCG products in August middle, from August middle. That will start adding a new markets and new segments for us. And those numbers will start adding in the third and fourth quarter. So that's why my confidence to stay around the same figure in EBITDA is possible in spite of low seasonality in second and third quarters. Probably third and fourth quarter would further improve if our plans in pharma happen, as per the demand, it seems like.
Take that point. Actually, I was going to ask you, the next question was going to be on Panipat, but since you already answered that, we would leave this conversation on this note. Thank you so much for joining in. The street likes what you're saying. The stock is up 4% as we speak. With that, we'll get you a reminder for all our viewers as well. Unlock a world of exclusivity, expertise and influence. Become a member of CNBC TV18 Access. Our premium members only experience on CNBCTV18.com. The membership includes access to CNBC TV18's flagship events, interactions with our journalists, along with curated studio tours, e-learning sessions and masterclasses, and curated lifestyle benefits.
Welcome back to Midcap Radar. Well, the midcap end of the market continues to do quite well and is, in fact, trading closer to the day's highest point. But one particular management that is in focus currently is Quess Corp. Remember, the company reported a slightly muted Q1 set of numbers. Revenues as well as growth came in muted compared to what the street was anticipating. To discuss this and more, as well as the way forward, we are joined by Guru Prasad Srinivasan, ED and CEO, along with Sushant Pai, who is the CFO at Quess Corp. Thank you so much, gentlemen, for joining us. First up, Mr. Srinivasan, what we want to ask from you is, as far as headcount addition is concerned, on a year-on-year basis, it's actually dipped almost 7%. Sequentially, there's been a slight uptick of close to 0.5%. Now, keeping in mind or taking into context the kind of layoffs that we have seen at TCS, now how exactly are you looking at the operating environment, especially headcount addition?
Sure. So first of all, thank you so much for having us. And the quarter has really begun as well in terms of our EBITDA has been up by 10% year on year. And specific to headcount, we closed at 462,000 headcount. Now, for Q1, when we started the quarter, while the April and May was little muted specifically for general staffing, and June, we have seen substantial recovery. So June alone, we had a net add of about 6,500. And as we moving into Q2, we are now seeing almost about 42,000 open mandates that has come back on back of the festive season just opening up in the country. The hiring is slowly coming in. So we are seeing a recovery for general staffing. The second part of the question that you specifically asked was related to the professional staffing. So with regard to the professional staffing, we have grown almost about 31% year on year by revenue and about 48% year on year in terms of EBITDA. And our margins, our EBITDA margins has just crossed about double digit. We are about 10.2%. Despite of IT services companies are not hiring, majority of our demand is coming in from GCCs and the non-IT, non-technology companies who are hiring big time in that space. And GCCs are really hiring well and high-end niche talent that they are hiring, and we are able to actively deliver for them.
Okay, take that point. Mr. Pai, let me come to you. Sequentially and YY revenue growth has been a little muted this time, right? You have spoken about achieving a double-digit growth in FY26. Are you on track to achieve that growth number? What will the margin number look like? And what will be the growth drivers for you?
Yeah, thank you and good afternoon, everyone. So clearly, when we started the year, we had a clear plan and laid out a path for improved profitability. And there were two action points there. One was improve operational efficiency. And second, higher margin business should contribute to higher EBITDA margins. So I'm happy to state that on both counts, I think we have shown results and Q1 has yielded that. So if you see broadly, our EBITDA was about 70 crores. Has grown 10% year on year, which is again faster than the revenue growth. So that's one thing. Second, on a margin basis as well, 1.8% has become 1.9%. And that's the trajectory that we wanted to achieve. And the second part of the margin improvement was profile mix. And clearly, as you can see, the professional staffing business, which was contributing to EBITDA, which was at the end of FY25, was only 23%. Has now contributed to 29% to the EBITDA. So clearly the profile mix, operational efficiency has started yielding results. As we go along, we want to continue this path, which means we want to show that margins will accelerate higher than revenue growth. And therefore, that's the path we want to continue for the full year. Yes, revenue has been muted in Q1. And like Guru just explained, we are just getting into the festive season. So we are seeing good traction in revenue growth as well as we get into Q2.
Can you quantify, the targeted margin trajectory, at the end of FY26, where do you see margins, especially post-demerger? Investors are still, investors want clarity as to how exactly the margin trajectory will move forward for this particular entity.
Yeah. So like I told you, our margins at the end of FY25 were approximately about 1.8% at an overall level. And we want to slowly take it to about 2%. That's the direction that we gave investors, and we are on that path. One quarter has happened and we are at 1.9. And like I told you, that even professional staffing margins has improved from about 9% last quarter to about 10%, which is in the double-digit trajectory. So the path is slowly take it to an exit of about 2% at the end of FY26.
Mr. Srinivasan, a couple of questions. Number one, especially in the BFSI telecom space, how has hiring panned out? The second question is, especially in the IT, is IT hiring slowed down significantly? And is that being offset by GCC hiring? And thirdly, how is overseas hiring, especially Singapore, Philippines, how is that particular segment panning out? Keep it a little short, sir.
Let me go in a sequence. So BFSI for Q4, Q3 and Q4 was definitely slow with regard to the general staffing. We are now seeing slowly mandate coming in for Q2. So that's specifically for BFSI. And moving on to specific to technology segment, see, largely our hiring are coming from GCC, and within GCC, we work with various verticals. So again, the high skill demand, which is coming specifically for AI, cloud, and high tech technology plus media and electronics. So these are the spaces where specifically where we are getting the mandate demand in from. And moving on to the international piece that you asked for. Singapore is still muted. We are not seeing much of, the borders are still sealed for expats to come in. And but Singapore is offsetting for us with Malaysia and Philippines doing well, specifically for ITES businesses in these two geographies are doing well. That should cover up our Singapore slowness. So in nutshell, this year we'll have growth coming in from international business as well.
Thank you so much, Mr. Srinivasan and Mr. Pai, for joining us. Wish you all the best for the rest of FY26 and hope to see you soon at the mid between the two results as well. But that's all the time we have on this edition of Midcap Radar Mutual Fund Corner. When we return.
Hello, good afternoon. You've tuned into MF Corner on CNBC TV18. I'm Vinny Motilala. With me is Sonal Bhutra as well. Sonal, very good afternoon to you. Momentum currently in the markets is not exciting, but momentum funds in the last couple of years have done quite well. And that's what we're going to be talking about.
We are going to be talking about that and focus on whether it is the time for investors to go ahead and invest in momentum funds or not. These funds have witnessed a remarkable journey actually, with their assets under management growing from just 2,400 crore rupees. This is in December 2022 to a staggering 20,742 crore rupees. This is as on June 2025. However, these funds have seen a sharp decline of over 20% in the last 3 to 6 months. So, do these funds thrive only in the bull markets? What is the stock selection process? Who are these best suited for in terms of investments, in terms of their portfolios? To get these answers and more, we have Harsh Roongta, founder of Fee Only Investment Advisors, and Shweta Rajani, who's the Associate Director and Head of Mutual Funds at Anand Rathi Wealth, joining us now. Harsh and Shweta, thank you so much for joining us today. Lady, let me start with you first up. In simplest terms, let's make it easier for our viewers. What are momentum funds?
Good afternoon. Yes, so, momentum, just like the name says, if I see in simple English what momentum means is something that is running too fast in a certain direction. And when you apply that in the investment, philosophy, then it is talking about stocks that have been running in a high direction, which means stocks which are seeing their prices rising in the recent time period. And therefore, when I say a momentum fund is investing in those stocks which in the recent period, which means in the last 6 to 8 months, 1 year, maybe running high prices and seeing good returns. And that's where momentum funds invest in.
Okay, where there is some bit of a trend, that's where that momentum fund investment comes in. But Mr. Roongta, I would come to you with the same question as well. Anything you would want to add on that front, as well as in terms of momentum funds, recent times, we have seen that decline coming in specifically in the last 3 to 6 months, right? So which have been the worst performers and how volatile are the returns in these funds and how careful does an investor need to be after this?
I think she's explained what momentum funds mean very, very simply. I mean, it just follows the basic maxim of stock markets, right? Bhav Bhagwan che. Price says everything. It encompasses all fundamental analysis within itself, and definitely it does so over long periods of time. The only thing I want to add are basically two things. One is that these funds will be very volatile because it follows prices, and prices are volatile. Any investments based on prices is bound to be very, very volatile. And over time, and time I mean literally like over 8 or 10 years, over time, if you follow this trend on a very disciplined basis, it in the past has made money. Now, two things there. If you just look at short-term periods, you spoke of a 3-6 month period. We've not even done an analysis over 3-6 month period. But if you do an analysis over a 1 year period, and if you look at the various momentum funds, pure momentum funds today come in 3 varieties that you invest in where the universe is, the 200 stocks, either Nifty or BSE, or the universe is the Midcap 150, or where the universe is 500. I think these are the 3 universes on which there are momentum stocks that is available. 30 out of the top 200, 50 out of the Midcap 150, and 50 out of the 500 stocks.
Okay.
Now, in that, absolutely. But in that, please note that over a 1 year rolling period, going right back to 2011, there are at least 20% of the time, and sometimes up to 25% of the time, the 1 year returns of momentum funds lag the underlying wide index. Second thing is people also tend to misunderstand overperformance. Now, if an underlying fund has dropped 15% and the momentum fund drops 5%, it still got a negative return, but it is counted as an outperformance. So I think these two things. One, that momentum funds are very risky. It is only meant for that portion of an investor's fund that is for long term, meant for high risk. And second, that it will deliver relative outperformance, not absolute positive returns. And over short run, like a year or 6 months, 3 months, it's not relevant. So I think the statistics quoted have no relevance at all. And those people who are going to look at 3-6 months returns to decide should not be investing in momentum funds or any equity funds for that matter.
It's the long-term game, right? We've been talking about that. In fact, Shweta has very helpfully put out that table as well. That should come up for you on the screen. It talks about and compares it in various time frames, be it 3 months, 6 months, which both of you have said we should not be looking at in general. But even 1 year return has declined 10% for momentum funds versus a time when Nifty was up around 1.7% and Nifty 500 is up 4.43%. So that graphic plate should also come up for you on the screen. And this is something that indicates how returns have been over a period of time. 3 years though, it's been up 20%, while Nifty is up 14% and Nifty 500 is up 17%. So this is something that Shweta has provided us in terms of returns as well. So Shweta, let me come to you in that case. So do momentum funds only thrive in bull markets? Then how does one get an idea, right, when to enter such ones? How does the entire process work here?
Sure. So, like we've seen the data also historically that if I break it up, into calendar years or financial years of a year, and then you see in how many instances have momentum done better than a broader market. Yeah, you would see that if I'm looking at the last 7 calendar years, then probably 4 out of those 7 years, momentum has done better than a broader index. Now, those were also years where the broader market did phenomenally well, I would say, whether it was your 2021, 2023, and if a broader market is giving 25% or 20%, which itself is very good, you have most of the stocks running up. And what you should also look at is this during this time period, it's not only large caps that have done well, but mid and small as well. So it was that phenomena or that phase of the market where whatever you were touching was gold. So it's but natural that you could see momentum doing better in those periods where the broader market is performing well. However, this also comes in with a far more volatility, because of that same 7-year chart, if you see, the ups and downs are way more volatile in a momentum index than a broader market index. So one thing is clearly, if you have to look at momentum, look at the risk adjusted return and then see if it makes sense for you, which in my in my analysis, what I have seen is in most cases it may not make sense in all bull year periods. So while one check that you have to do is, yes, it's a bull market, so momentum as a factor may play out better than the other factors that you have of value, quality, all of those. But also you need to check that are the broader market caps also doing well, because rather than being in a style which is momentum, breaking it up into a diversified style but having more of a mid-small exposure may make more sense for you than focusing on one factor. So that's one thing. Yes, bull cycle means a high probability of a momentum doing well, but there are other factors that you need to look at. Second, like I said, if you're looking at those trigger points, look at the risk-adjusted return. Look at your expectations from not just a large cap segment, but also what you could expect from a mid and small cap segment, and then take your decision.
Okay, important factors there that one should be keeping an eye out on before deciding in terms of the momentum fund and entry that comes in over there as well. Mr. Rungta, what about the stock selection process in such a case as well for such funds? Is it fundamental or technical? And also in terms of any other points that you would like to add on when one should be looking at entering these funds or factors that one should keep an eye out on?
I think as Shwetaji explained right in the beginning, momentum funds assume that the price encompasses everything. and therefore all the funds that have done well over a stated period, typically it's 6 months, then the funds that have generated the highest return from a given universe, whether it is 200 or whether it is mid cap, whether it is 500, from that universe, the top 50 or the top 30, whatever be the ultimate selection, those are ranked and it's called a Z score. And on a certain basis, because they will keep certain more number of stocks than what they are going to finally select. There is some technicality around what will be the proportion of each of those stocks. So, but within that, I think the real thing is, as I said, it is based on returns. There is no fundamental, there is no technical in that. The other thing I think very important for, and you asked about who should be doing it and whether this is the right time. Anybody who's going to look at last 3 months, 6 months returns to decide whether to invest or not, no factor fund, forget momentum, no factor fund. In fact, no equity is good enough to invest. You can't look at 3, 6 months, 1 year's return to decide on whether to invest in a particular scheme or not. Second, I don't think we should look at an investor as a whole. Every investor, no matter how aggressive that investor is, to the extent that there is a part of his wealth that they are going to use for the, say, child's education that is due in the next 1 to 3 years. Now, that cannot go into 100% equity. No matter how aggressive that investor is, and no matter how conservative an investor is, if the money is needed 30 years later or 20 years later, some portion will go into equity. Whether that equity portion can go into even more aggressive portion of that equity, which is factor investing or not, is a matter of individual choice. But what I'm saying is that we don't look at an investor as a whole. We look at that portion of the investor's wealth that is earmarked for usage after 8-10 years at least, and which can be allocated to very high risk investments, and only those should be considered for things like momentum investing.
We take that point, makes a lot of sense, and talks about the basics of investments, right? Not just a particular theme, not just a particular particular category, so to say. Very interesting discussion, but we have to slip into a quick break. We'll continue our discussion on the other side. Stay tuned for that.
Welcome back to MF Corner on CNBC TV18. We still have with us Harsh Rungta, founder of Fee-Only Investment Advisors, as well as Shweta Rajani, Associate Director and Head of Mutual Funds at Anand Rathi Wealth. While we're today discussing on momentum funds, and we've discussed so far what are the funds, when do they give the best returns, what are the factors you should keep an eye out on while investing in these funds. Now let's talk about how does it change things for an investor when you invest in passively managed momentum funds and active managed funds. Shweta, what is the difference between that, and how should investors actually be evaluating this factor?
Sure. So, when we talk about a passive fund, now clearly it is investing in an underlying benchmark, and the fund manager is not intervening or, calling the shots over here. Now, what happens is, let's say for a momentum index, the index will change its constituents or rebalance the portfolio once in 6 months, and which generally happens in June and December for a lot of these momentum funds, which means that what would have recently happened may not be captured in the underlying portfolio of the index constituents. So the changes that may be requiring an immediate attention may come with a lag of few months. And therefore, when you're investing in a passive fund, clearly there is a possibility that you've missed out on those active calls, and there's no risk management that is getting applied over here. So your risk may be more, plus you may be compromising on the returns a little due to active calls not being taken. On the other hand, in an active fund, clearly, you can decide your weightages to stocks. You can decide if for a certain stock, a momentum is not playing out. You don't have to wait for a 6 months period. Every month, you may want to churn a little bit of your portfolio. So that higher active management clearly could yield a slightly better return. And in fact, in momentum funds also, if we go to see why there are 27 schemes today, there's one fund, which is the Samco Actively Managed Momentum Fund, which has completed a 1-year period. And if I look at that fund and compare it to the passive momentum funds itself, it shows that the Samco fund has done slightly better in terms of return, also at risk levels lower than that of the momentum index. However, the second part to this is also investing in actively managed funds, which are more diversified in their style. And that could have a blend of, momentum, quality, all of that. And then if you compare that third leg, that shows that those actively managed funds have done better than actively managed momentum fund and far better than a passive momentum funds. So that's, the key differential. What you should do is maybe, look at funds which have a momentum play, but also is not completely dependent on a momentum play, and be in the active space.
Got that point, Shweta. Mr. Rungta, coming to you. In that case, you have spoken about it, but momentum funds in that case are only for investors who undertake high risk. What would the risk profile for such investments be? And is it a good time to look at momentum funds, if at all?
As I already mentioned, it is not dependent on the risk profile of a investor. Each investor for different portions of his wealth. I mean, in technical terms, we call it asset allocation, right? For the different parts of his wealth or their wealth, they are basically going to have different objectives. On some part of the wealth, they can take high risks. On certain parts, they can't. So I think that needs to be sort of recognized. For any long-term investment, whether it be in, just pure simple equity funds or, in even more high risk, factor funds, and probably in factor funds, momentum is the riskiest. Whether to do that in that or not will depend on, how much that portion has been allocated in this particular for that investor. And timing, I think, should be absent, because when you're doing an 8-10 year investment, when you get in is hardly going to be relevant at the end of 8 or 10 years, and data supports that. It has very little weightage. The key there is to stick to it. Very, very clearly, during short terms, it may underperform the broader indexes. If you get out at that time, the strategy will fail. It's not primed to do that. So I think that is extremely important to sort of remember. And I think if you remember that why have you got in? You have got in because you had an 8-10 year horizon. You were prepared to take high risk. And if something is not working out, during 6 months, 3 months, 1 year, 2 years, then that is how that strategy is designed. Please just be aware. And if you're not aware, don't get in. As they say, if you can't stand the heat, don't get into the kitchen.
Okay, get that point, Mr. Rungta. It makes a lot of sense. So, so far what we've understood on the conversation is momentum investing is, and it's something that works for these funds when market is in a bull market, though for a longer period of time, these funds have not really given superior returns to the benchmarks as well. In fact, if we talk about the data that Shweta helpfully provided us in terms of the returns, that should come up for you again, it is over a 1 year period that these funds have seen a decline of 10%, which compares with Nifty gaining 1.7% and Nifty 500 gaining 0.43%. And as Mr. Rungta said, it's not very particular to an investor, and it is not something that should be the core part of your portfolio as well. So makes sense. Shweta and Mr. Rungta, thank you so much for joining us today with your take on what momentum investing looks like and who is it favorable to and what should be a part of your portfolio when it comes to momentum funds as well. It was a pleasure speaking to the two of you.
Thank you.
Okay, with that, we'll take your leave on this edition of MF Corner, but stay tuned for Closing Bell to take you through the last hour of trade.
market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC TV18 Motilal Oswal studio.
The Kospi in South Korea too is trading with losses of well over 1% now.
Bank Nifty broke the previous low, which it did not do last Friday, but yesterday it did. 24,600 is on the Nifty, 24,620 or so.
I think on IT sector, the AI is going to be a structural hit. I believe there is enough opportunity in the market for us to grow.
The cuts are not as deep as we saw yesterday, so it's a 37-point cut that we're looking at the Nifty.
ऑपरेशन महादेव जो कल एक हुआ है, इसकी जानकारी देना चाहता हूं.
That index is doing well, 0.5% higher. We have the small cap index as well, which is 0.5% higher.
Okay, well, finally, there is a bit of a bounce, and let's hope that we get a positive daily close as well. In the morning, we were saying that most short-term indicators are looking oversold, but not sure that whether this is going to be the day when those work. Well, for now, it's working. It's a 100-point move, 24,800 plus. And we need evidence by close that this is here to stay. This is Closing Bell. We are coming to you from the CNBC TV18 Motilal Oswal studios. I'm Prashant Surabhi, Rima here in the studios with me, and Nigel is joining us from the newsroom floor. Guys, good afternoon.
Hi, afternoon. And the numbers help, right? Like Asian Paints is a steady showing, not too bad. Stock is up more than 1%. L&T is higher ahead of the numbers. And then the global construct today. Europe continues to be firmly in the green for the second day in a row.
Just a relief to see one green day at least, and hopefully a green close. And like you're saying, let me add amber to the list as well. No disappointment, decent growth, stocks up 4-5%. So yeah, I mean, a green afternoon after a long time. Feels good.
No, it feels good. And, you know, we basically now look at what the market needs to do to sort of, you know, get out from under this downdrift that we've been seeing. We'll just need the market to basically cross above 25,000. 25,999 is the number. What is that? You know, you have to do it in steps. So the last wave of decline which happened was from the high of the 24th of July to the 29th of July. The high was 25,246. The low was 24,598. The 61.8% retracement is 24,999. 25,000 rounded. And that is the first stop. Of course, the first stop is a positive, decent, solid, positive close. And then, I mean, you know, for us to be able to say that maybe, you know, it wants to do better things and maybe it's changing direction, the direction of travel, 25,000 is that sort of broad level that one will have to wait for the market to cross. Nigel.
Well, that's right. You know, guys, the good point is after a while, we have seen a bit of a short covering bounce that's played out. And earlier this morning, we had mentioned 2 points, right? One is the FIs are net short with 1.6 lakh contracts on the short side. And you had the PCR that had already come to the oversold levels of around 0.63 approximately. And today, just to add on to the list, you know, you've had some good positive triggers. Results, Asian Paints, Amber, you know, you had Hind Rectifier from the broader markets as well. That's locked upper circuit, you know, 20% move on that name. That's already seen a big run. So there are, after a while, we have a day when we're looking at positive earnings reactions. And the street likes that. So 140 points up. I'll tell you what, if just for today's trading session, we can get past the 24,850 odd level, we could easily see another 50 to 100 points on the upside on the Nifty itself, because there was aggressive writing suggesting that the 24,850 level will not get stumped out. So we'll have to keep an eye out on that mark. And the good news on the Nifty Bank is that, in fact, you have it holding now above the 50 DMA, gradually making its move closer to around the 20 DMA. Well, guys, let's run our viewers through what we have lined up on the show.
Absolutely, and there's lots of action coming up, lots of those stocks and earnings on our radar today. So let's tell you what the next 50-odd minutes are going to look like. We'll, of course, turn the spotlight on Asian Paints to begin with. The company's just reported numbers, and the stock has managed to recover from intraday lows, looking good. That volume growth number at 3.9% is quite strong, so we'll get you more in just a bit. Paradeep Phosphates has been the earnings star from the Midcap universe today. We'll find out what is working for this fertilizer maker in the first quarter. We'll put the spotlight on their outlook ahead for the rest of the year. Moving on, we've got Morgan Stanley delivering a double upgrade for Tata Chemicals, and that's inspired a lot of confidence in this stock right from the morning, still up about 7%. We'll tell you more about the MS view and why they're so confident on Tata Chemicals coming up in just a bit. And again, Happiest Minds, again some green. Finally, good news coming in from a lot of these mid-caps, right? Happiest Minds reported numbers and the quarter's looking good. And Rima will tell us more about what are the other internals that the market is taking heart from. So all of that coming up. And then, of course, let's not forget, we have more Nifty majors lined up ahead in terms of today's numbers. So action from L&T and NTPC expected post-market hours. We'll get you the expectations as we go along.
So how should you position yourself in the last hour of trade? Mitesh Thakkar is now joining in with a few closing strategies. Mitesh, did you go long? We've seen a pretty good intraday recovery, now up 150 points in the Nifty. What's your strategy been? And do you expect more strength in the market?
Yeah. So I think, I kind of talked about in the morning that this decline could get arrested around 24,500, 550 zones. We got a low of 598. But the idea is that with the PCL oversold and the weekly supports coming closer, we might not get, immediate declines. So, and the signs of an upward reversal are still missing. So therefore, I think on the upside, as long as we don't get past 24,950 zones, I would not turn positive. And even if you do that, then 24,250 is the next set of target which I'm looking at. So it's a market which will stop falling. That's the positive. But I'm not looking at a big reversal or a strong advance on the upside.
Mitesh, on the contrary, would you short this bounce? Or no, it's looking more durable to you?
No, not yet. As I said, I think with the PCR, I think Nigel also highlighted that. I also spoke about it in the morning. With the PCR reading in such an oversold level, you might not actually be benefiting too much out of shorting the market as well. So I think this is a market you would want to, watch, see if you can get a directional bias, still then trade with stock specific bias. The short side trade is nearly coming to an end, so therefore not much is happening over there.
Okay, so let's talk stocks then for the last hour.
Yeah. I have a buy on Syngene, and Tata Chemicals I think is also flat. So Syngene is a buy for me with a stop below 698 for a target of around 735 and strong, breakout taking place in Tata Chemicals. So maybe you would want to buy it in tranches, but try to buy it now. If you get a 10-15 point decline, buy more. Keep a stop below 972 and look for a target of 1040.
Got that. Thank you very much for that. Let's put the spotlight on Asian Paints, the stock which is shining in the last hour or so post the numbers. It's been feeling the heat from competition for the last 5 or 6 quarters, but this time it's turned in a steady quarter. Manglam joins in with the numbers.
Well, if you look at the Asian Paints numbers and the stock price move, it tells you that maybe the worst is behind. Why do I say that? Because, decorative volume growth on a base of 7% has come in closer to 4%, and the street was working with a number of just around 2 to 3%. Yes, if you look at the numbers year on year, there has been a mild decline in the revenue, but the street was fearing a bigger decline. So the revenues of the company have come in at around 8,939 crores. The street was working with a number of 8,835 crores. And for the revenue decline, it hasn't actually seen a bigger EBITDA decline. In fact, the EBITDA has come in at 1625 crores. The street was working with a number of 1600 crores. So that's telling you that the margins have maintained as well, 18.2% versus a poll of 18.1%. On the back of that, the net profit has been absolutely in line with expectations, a little over 1100 crores. Domestic decorative volumes at 4% or nearly 4% is the key highlight of the numbers. And to add further color to the numbers, the management commentary, they've said that the industry has experienced a slight uptick in this quarter, marginally improved demand from urban centers despite monsoon slowing down momentum in June has meant that overall performance for the company has been good. And we have other verticals as well. Industrial coatings did well because of auto and protective coating businesses growing well. So that grew in near double digits. And we had operating margins which were marginally lower on account of higher sales and marketing investments. So there is no fresh negative that has emerged from Asian Paints numbers. And remember, the stock has already seen a correction of almost 30% from the highs, despite the rally that we've seen from the lows. So maybe the worst seems behind for Asian Paints. And not just the Asian Paints stock, but also the entire paint sector. So if you look at the intraday chart of Berger, post Asian Paints numbers as well, the street believes that Berger will go ahead and do one step better. Berger also has moved to the high point of trade. I think we have Prakash Diwan with us. Prakash, on the face of it, these numbers are soft. But given the context and the commentary, it appears that perhaps the worst is behind. Would you agree?
Oh, absolutely. I think I wouldn't really read too much into the numbers because, you would need to see whether these numbers hold and set the base for the next quarter to be slightly better. But the commentary is not at all defensive. What you would expect a company to come up with, given how market share is shifting, competitive intensity is increasing, they would have tried explaining why they've not outgrown and all of that. But that doesn't seem to be the case. In fact, they seem quite positive, and the tone that is set is very clearly indicative of the fact that the current quarter ending September could probably be even better. Remember, early monsoon should have impacted volume growth, but this close to 4% is certainly a beat. So, and post this, things could only get better as festive season starts kicking in. So, all in all, looks like, a lot of the bad news is probably past us, and the market has reached some sort of an equilibrium in terms of market share as well.
Thank you, Prakash, for joining in. Hemang Jani is also joining in into the discussion. Hemang, first a quick word on Asian Paints. Now, between a Berger, Indigo Paints, Shalimar or Asian Paints, which one would you bet on?
Rima, I think the entire industry is going through a challenging environment, and while people can say that Asian Paints number were good and the stock also has corrected, we have to realistically see what kind of growth some of these paint companies can deliver in the current environment. And also, I think the valuations of most of the paint companies is no way attractive. So there has been a de-rating which is going on. You might see a bit of pullback because of the numbers being slightly better. It might go up a bit here and there. But I would certainly avoid this sector given the headwinds in terms of competitive intensity, the operating leverage not being in place, and higher valuations.
Hi, Hemang. Good afternoon. Good to see you. When the other big trigger from the other set of numbers that we'll be looking at is the peer to Eternal, Swiggy. It reports its numbers in the next couple of days. What is your sense on that number? Because it has a discount in comparison to Eternal, but one part of the street argues that it is very rightfully so. What is your view?
Nigel, post Eternal numbers in the management commentary, there are slightly higher expectations coming from Swiggy also, and the sense is that on the of course, the growth would not be that. It would be hardly about 1.82%. But on the quick commerce side, as we saw in case of Eternal, the growth would be about 23-24% quarter. I think the market is sensing that while the margins of operating profit may not be that good, the top line growth across delivery and more so in case of quick commerce to be very strong. And that would be very positive for a company like Swiggy, because Swiggy at the end of the day is still quoting at a 22-24% discount for an Eternal. So definitely going into this numbers, we have a positive view, and we think that even if the numbers are in line, commentary being slightly better, the stock actually give a very strong positive reaction.
Okay, now we'll keep an eye out on Swiggy as it reports numbers. Deepak, fertilizer numbers are at the bottom of the screen. Revenues are up 17% and profits are up 25%. So that is, a pretty good set of numbers that on a year-on-year basis. EBITDA is up about 10%, 11% or so. Widely tracked and widely held name as well, and it's spiking up in reaction to those numbers. So maybe more on this with Sonal in a bit as we kind of go along. Actually, it is a day for chemicals, Tata Chemicals we spoke about, which we will address in a bit from now. But the other one is Paradeep Phosphates, right? I mean, just a rocket. Again, numbers at play here. Vinny's going to detail that out for us. Vinny.
Hi, good afternoon. So yes, a strong set of numbers that came in from the company in Q1 FY26. The stock, intraday surge as much as 12% as well. Now, net profits of the company have come in at 255 crores, which is a growth of around 47 times on a year-on-year basis. Revenues are up 60%. We're seeing sharp improvement, to be precise, in terms of margins. More than 600 basis point expansion for the margins on a year-on-year basis, 12.4% versus 6.18%. It's a strong operational performance, strong growth in terms of revenue. And just a highlight that came in from Q4 FY25 for the guidance for FY26. The company had spoken about, sustaining those EBITDA per ton guidance. It was around 4,500 to 5,000 crores in FY26, as well as the total capex plan that they have for FY26 is around 500 crores. But strong performance, operational as well as on the top line, is keeping the stock robust today.
Okay. Vinny, thank you very much for that. We'll sort of look at this one. Of course, I mean, it's a big one on a year-on-year basis, but company, of course, is small. Let's just look at the Tata Chemicals move as well. And, that's also surging as we speak. Sonal is going to join us, and there is a Morgan Stanley double upgrade which has come through. Now, while Sonal will detail that for us, the bigger sort of underlying thread across some of these categories which is happening, especially chemicals, refining and steel, metals and mining, is that China seems to be cutting capacity quite a bit. I mean, at least that's the plan. That's what they've announced across categories. For example, in the case of chemicals, what China is saying is that any facility which is over 20 years old needs to be upgraded or shut down. And that is the reason for excitement across a range of not just, chemical names here in India, but in the region as well, and actually in Europe as well. The Chinese chemical supply, perhaps over the next year and a half or so, will take a bit of a backseat. That's the broader story here, but it's not limited to chemicals. And with regards to Tata Chemicals, there is a specific upgrade which we will touch base with Sonal a little later. But I don't know if you have any thoughts, if you've looked at this, Hemang. These are all commodity sectors in a way, where, of course, I mean, China is by far the largest player. Any names come to your mind, or how to look at this?
All host of companies are there in this space, and what comes to my mind is definitely Vinati Organics and Jubilant Ingravia. I think given the kind of portfolio that particularly Jubilant Ingravia has, and the fact that this quarterly numbers are due probably on 31st, so we are looking at almost about 30% kind of a YY growth top line with a substantial improvement in the margins. So I think combined with the situation in China, the fact that globally some of the specialty chemical prices are favorable, and you will have an advantage of the capex that the company has done in the last about 1 year or so. So some of these companies tend to benefit. Tata Chemical would be more of a play of one single commodity, and it's difficult to gauge how things are pan out. But definitely some of these specialty chemicals, we have a positive view. Vinati Organics and Jubilant Ingravia.
Got that. Happiest Minds is the other one, which came out with numbers earlier today. And it was a good set of numbers. The company's constant currency revenue growth was 2.3% quarter on quarter. Year on year, it was a revenue growth of 17.5%. Margins for the company expanded. The way the company calculates the EBITDA expanded by more than 200 basis points to 21.4%. And at the bottom line, there was a big jump of 68%. There was an exceptional loss in the prior quarter, but just look at that margin performance. 200 basis points margin improvement is what the company has reported. And this has been a tough quarter for the industry. And in such a quarter, they reported a 2.3% quarter-on-quarter revenue growth and 17.5% on a year-on-year basis. Among lots of mid-cap IT companies, are out. Largely, the consensus seemed to be favoring a Coforge or a Persistent, maybe a KPIT Tech. But other than these three, would is Happiest Minds on your radar? This is a company which was born digital. It was a digital native in that sense. Do you look at Happiest Minds or any other IT company that you like?
Prima, this quarter, particularly for the mid-cap IT companies, even when the companies are delivering in-line performances or slightly better, sheer valuations and the fact that people are not really confident about the growth visibility, over the next few quarters. We have seen a bit of underperformance come through from majority of the mid-cap IT companies, be it Persistent, Coforge, I think happiest mine to my mind be much smaller in size. Of course, they have some interesting verticals and the numbers YY, definitely look better. But I would definitely stay away from, some of these mid-cap IT companies because of the valuations. If I have to, buy something, I would be rather comfortable buying into Infosys or HCL Tech, where, there is a degree of valuation comfort. At least Infinity had positive surprise with a reasonably good clarity on the growth going ahead. So would rather prefer some of these large cap names.
Okay, that is on the IT side. Just very quickly taking a look at some of the other stock reactions, and today at least we have some pleasant ones. Like we were mentioning, Amber. Amber's numbers have been fairly all right. Just checking out, the tally as it stands. Revenue growth of almost, there we go, we have them on the screen. 44% revenue growth. Margins have come down a little bit, so that's a slight disappointment. But the EBITDA has grown about 35%. Profits looking up as well, over a 40% growth in profitability. That's Amber. And there is Varun Beverages. Varun, there's some sluggishness in terms of volumes and top line, but for Varun Beverages, the margin is expanded. So therefore, there's some positivity on these stocks. Look at that, 5% up on Varun. Hemang, very quickly, any advice, cues, any thoughts on Amber or Varun?
So be Amber, just before the number, the top corrected a bit, and because of the early, onslaught of the this monsoon, some of these stocks, people were not sure what numbers they will throw up. I think Amber numbers look much better, at least in terms of the revenue. Of course, margins a little bit of a pressure, but I think it's more of a reaction to the fact that the numbers are not showing any signs of slowdown there. I think post-management con call, we will have slightly more color growth. But overall, quite impressed by the Amber numbers.
Okay, they've done this acquisition as well, right? I mean, Israeli company that came out yesterday, and apparently it's a small one, some $40 million or so, but apparently it's a good one in terms of size of business, size of opportunity, etc. as well. So there's some news flow to track here. Results and, of course, that acquisition. We'll try and have the company on. NSE numbers at the bottom of the screen. That is the country's largest exchange, unlisted, but a frenzied amount of trading in the private markets on NSE. 5 lakh crore market cap, maybe a little lesser now. But what do we have? The basic numbers should come up. Profits are up 10% quarter on quarter. Revenues are up 7% quarter on quarter. EBITDA is up 12% quarter on quarter. These are not bad numbers at all. But remember, this is April to June. The curve on F&O, etc. started late last year. But the Jane Street thing only happened early July. That, of course, will not be part. I mean, volumes, etc. quietened down after that. So that perhaps is not available. Will be by the end of the month if they decide to put out monthly data, and others will as well. But these are April to June numbers, and they look pretty okay, pretty good on a quarter-on-quarter basis. That is NSE for you at this point in time. We'll take another quick commercial break here. But just, some programming note. And this is, of course, our event which is happening in Bangalore. That's the latest edition of Future Female Forward, Season 3. So really a power-packed lineup of leaders who will be there, powering the future of work, capital, innovation. Catch it live today evening, 5:30 p.m. onwards, here on CNBC TV18, CNBC-TV18.com and YouTube.
Welcome back. It's not a bad looking screen at all. We've got a 100-point gain on the Nifty, and it's that time of the show where Hormaz joins in to go beyond the obvious stocks and get us some more buzzers. Hormaz finally seeing some green today.
Oh yes, and the list is reflective of that, and we start off with Punjab Chemical and Crop Protection as part of this list. Now this 1500 rupee stock has had a market cap of just over 1800 crores, 11% higher on this stock. It's a result reaction, but apart from the results, it announced new capex plans, and it expects that capex to add around 150 crore to its top line, and that is showing up on the stock price today, and it's gaining on very, very strong volumes as well in today's session. At 17 lakh shares already traded compared to a 20-day average of just 13,000 shares. Now, Fed Bank Financial Services, or FedFina as we used to address it, it listed in 2023 amidst much fanfare along with the Tata Technologies and the likes. Now, it's been gaining on strong volumes today. 42 lakh shares have been traded compared to a 20-day average of just 7.5 lakh. But despite this move, the stock is still trading below its IPO price, which is 140. Now, IIFL Capital is the other mover today, up 12 to 13%. It snapped a 4-day losing streak in today's session, and this 12% move is the best single-day gain that the stock has seen since June of 2024. And a common trend among all of these names is all of them have been trading on crazy volumes. And look at this, 28 lakh shares traded today of the stock, 20-day average of just 2 lakh. Mangalore Chemicals is the other one. It's been a recent mover in over the recent month or so. It's gained in 5 out of the last 7 trading sessions. So far this year, the stock is up 130%, which has made it the best calendar year performance so far since 2007. Now, starting 2020 till date, the stock has gone up from 30 rupees to 360 rupees. It's up almost 12x during this period. And lastly, a stock that is bucking the trend in today's session is Camlin Fine Sciences, and it's down in a lower circuit today. It's a 5th straight day of losses for the stock. It's down 23% already this month, and despite this drop, the stock is still up 90% so far on a year-to-date basis, and this move comes after 2 negative years in 2023 and in 2024. Even today, falling to a lower circuit, the stock has had 5 lakh shares traded compared to a 20-day average of 2 lakhs. So finally, some green on the screen, and it's showing up in some of these movers as well.
Hormuz, thanks very much for that. So that's interesting moves that Hormuz highlights for us every day at this time. Rajesh Kothari is with us, Managing Director at Alpha Accurate Advisors. Rajesh, good to have you here. By the way, Welspun Corp numbers just flash at the bottom of the screen, and numbers look, that's a pipe maker, largely in the oil and gas segment, and numbers look very good. EBITDA is up 40%. I'm not sure if there are any expectations on this one, but at least on an actual comparable basis, the numbers look super strong. Rajesh, good to have you with us here. Lots of these sort of, mid-caps performing quite well, even though overall, when you look at the, headline picture, one is not enthused, but it's all about single stocks, which you focus on as well. What has come to your attention where you've been really positively surprised in terms of earnings from individual companies, Rajesh, so far?
Well, I think there are 2 things. One is, I was just looking at, yesterday market, Friday close, and exactly 1 year back where market was. And if you look at it, the BSE 500 is up 0% on 1 year basis. Friday to last Friday, I was comparing 25th July. Similarly, BSE mid and small cap index is also 0%. So while of course 0% is not a great news, but at the same time, when you look at this 0%, considering the macro uncertainty, the global geopolitical uncertainty, the tariff wars, and still markets are not down. So market is resilient. That's number 1. And number 2, when you look at the earnings, I think the 2 bad sectors where we are expecting the highest pressure on earnings, particularly software sector and the large part of the banking sector, that is over. These are the 2 sectors where we were expecting the highest pressure on earnings. Software because, of course, the global economy is still under question mark, and banking because of the net interest margins expected to be under pressure. But I think as we move forward in this earnings season, more capital goods results, by and large, we expect to be a little bit better. We expect specialty chemical numbers to be a little bit better. Select consumer companies, you have seen yesterday, 3 companies have announced their results, and all 3 have reported reasonably good numbers. And I think you will see more of such trends going forward. And these are the select baskets which are going to be the winners from this quarter perspective. So a lot of interesting, numbers are out. Many of these companies EMS companies' numbers have been fantastically well. Few consumer durable proxy companies' numbers have been exceptionally good. So I think that's a trend, and we are rightly positioned, in those sectors.
Any new purchases at Alpha Accurate Advisors, Rajesh? And also wanted to quickly get your thoughts in on Coforge. I know it was a stock that you liked. Explain to us what exactly about that data center capex that the street didn't like, because the stock reacted very sharply on the downside despite seemingly very strong growth numbers. So first tell us, what have you bought recently, any new ideas or you've doubled down on, and then even on Coforge.
Company specific, we generally do not talk much, but in terms of the addition, particularly in last 3-4 months, rather than just last 1 month, we have been adding EMS names to our portfolio. Specialty chemical, we have added huge in last 12-15 months. From 0%, it is almost like 9-10% of the portfolio. And capital goods is one sector we continue to remain positive. Coming specific to the IT company name which you talked about, please put a disclaimer because we are holding Coforge for our clients' portfolio. I think, I do not agree with how market is reacted. The companies delivered fantastic numbers, number one. And coming to the data center related capex, good part of that capex is already funded by the client. And as a shareholder, what I'm always looking for is the companies which can invest and reinvest their capital in higher ROCE businesses. Rather than giving us dividend or keeping it as a treasury and earn other income of 6%, I think it is a great decision what Coforge is doing. They are taking very, very prudent approach in terms of capital allocation. And the capital what they have invested to get this deal is going to be good margin accretive on net basis and also ROCE accretive, more importantly, on the net basis. In fact, I'm sure we all basically keep thinking that why not the big IT companies in India? We do not have our own Indian Alibaba and many of these companies which have become globally number one, but we don't have Indian companies. But when Indian companies keep investing and if we punish them, then I think that's the wrong way to look at it. The ROCE of this business is very, very healthy. And even on incremental ROCE basis, we expect, I think the Coforge is taking very prudent decisions. So I'm not, too negative about, or I'm not concerned about this decision. And, I think it's a good decision in the interest of shareholders. And they are one of the highest growing company, if you look at last 4-5 years, despite various macro challenges what company has faced.
Rajesh, just to be clear, when you say that it's a good high ROCE business, you're talking about the move on data centers that Coforge has taken, right?
Yeah, because if you look at the total investment and if you look at how much client has already paid to them in terms of the upfront, the net investment what Coforge is making is not very high.
Right. Just to put those numbers, the company spoke about an $85 million capex, of which the client is going to give them $63 million. So the amount that Coforge will be investing is about $22 million, which is what, 150, 200 odd crore rupees.
And that's a strong argument that Rajesh is making, that now everyone's complaining, saying IT companies, large IT companies at least, they've not invested in new businesses, R&D, etc. And here's a company that's trying to do that. And the market is punishing it. So fair argument there. So that's Coforge. Rajesh, last I remember you also own Trent. So just give us your thought process there, because again, market getting extremely negative, saying, what is this 20% growth? I mean, it's not even 25%, which Trent said in the investor call, and the stock was punished. On the other hand, look at an Eternal. Again, I'm talking about consumer. I'm not sure if you have an exposure to something like Eternal. But just tell us about both these, high growth businesses. What are you thinking about platform companies like, say, an Eternal and Swiggy? And are you still keeping the faith on Trent?
So, well, I think, from the Trent perspective, again, please put a disclosure because we've been holding Trent for quite some time. I think it is one of our top holding from last almost 4 years. Of course, we keep rebalancing our portfolio over a period of time. So, I think what is happening should be from market perspective, the reactions and response time is getting shorter. And everybody would like to be ahead of time. And at the same time, a small marginal disappointment that leads to 10, 15, 20%, correction. And of course, everybody then comes out with a report of downgrade. Now, think of it, if suppose 2 quarters down the line, because thanks to income tax cut given by the finance minister, the liquidity boost given by RBI, if there is a 2% positive surprise, even today, it is the fastest growing consumer company in this country, correct? It is and you compare any other FMCG company or any other retail company, And if you look at this company which we are talking about, it is reported the fastest growth. But yes, the valuations and the PEG basis, how one looks at it, and some downgrade definitely results into, some disappointments. So as a fund manager, we need to be active, we need to be agile, and we need to make sure that we have a prudent exposure. So we also keep adjusting our exposure depending upon our bullishness on the stock. And, that's the real life. But frankly speaking, in my heart, I still believe that a company is rightly positioned to deliver the best of the growth compared to the entire consumer universe.
All right. Hi, Rajesh. Good to see you. And any view on these pipe makers? Welspun Corp, actually, these numbers look quite strong because the EBITDA number has come in at around 525 crores, which is the highest quarterly run rate we have ever seen on Welspun Corp. And the margins, it appears that the beat has come because of the gross margin expansion, because there is some inventory gain, it appears, which has come at around 43% approximately. So Welspun Corp clearly is a stock that's walking the talk now. Over the last few quarters, they have moved from a 350 crore quarterly run rate to around 525 crores. And it definitely appears that they're executing some part of those US orders which were absent in the last many quarters. But now in the next 8 quarters or so, they'll get executed. Rajesh, any view on this particular name?
We do not own this company, but what happens is that as the US oil and gas sector's capex restarts, and that's what is happening from post-Trump coming in and the orders which are likely to get restart, this company, because they have a good exposure to US business, which is a high margin business compared to the Indian business where the order book is still not growing if you look at last 3, 4, 5 years. And because of this change in that fortunes, particularly in the US side, which is a high margin, and also the incrementally higher order book growth prospects, which is very likely, that's what Street is expecting. And that's what results into this better delivery from the company perspective. But this is my, the limited views because we do not own this company in our portfolio.
Okay, all right. Rajesh, stay with us, just coming back to you, but maybe we can quickly get in Mangalam, who's with us as well, with what's the latest as far as the F&O space is concerned from the F&O desk. Mangalam, tell us.
Well, there is a sharp recovery that we've seen for the markets, and the indices have come off low, sharply off the low. So we have the Nifty doing well, we have the Nifty Bank doing well, and we have the Midcap Index doing well as well. But the sharpest reversal that we saw are on a couple of parameters. One, if you look at the advance decline ratio, at one point we had more stocks declining than the number of stocks which were advancing, and that has veered away once again. The lines have intersected, and if the green and red lines come up for you on the screen, you would see that they are fairly wide apart, almost 1,600 stocks in the green for a very small number which is in the red right now as compared to what we saw in the middle of today's trading session. The other thing that we're looking at is the India VIX. From a low of around 10, the India VIX rallied all the way up 21%, and now after today's up move, a reversal from the lows, the India VIX itself has come down. So currently sitting at the lower end of today's trading range with a cut of almost 4%. At one point, remember, the India VIX was higher by around 4.5% in today's session as well. All of this can be attributed to one big stock. Look at Reliance. The intraday chart of Reliance comes up for you up 2%. That's powering the cause of Nifty, and also supporting it is the recovery that we've seen on the Nifty Bank, though still slightly away from the 50-day moving average for the frontline banking index, that is. What's also aiding the up move that we're seeing in the market, remember, it is Sensex monthly options expiry, but at the same time, those in the morning would have written the 25,600 call on the Nifty. They've been caught on the wrong side, so they are swiftly covering their positions and they're turning put writers. So, the support for the market is coming higher. 24,800 puts fairly active, 24,700 puts equally active as well. So as you can see, short covering of the 25,600 call and writing on the 24,800 and 700 put, telling you that around 24,650, 24,700 is an important support to watch out for after the recovery that we've seen today. The put call ratio, which was oversold at close to 0.7 times, fell all the way to 0.64 times. That too has bounced back to around 0.77. And I'm watching out for a couple of stocks. In the last hour of trade, some long positions added in Asian Paints after the numbers. Street expects the worst to be behind. We have Syngene as well, which is fairly well bid on the future side. So fairly, high long additions is what we're seeing on Syngene. And finally, IEX. The threshold is 95% for a stock to go into F&O ban. The open interest is now at 94.77. So if it continues to see open interest addition, then chances are that IEX goes back into F&O ban. That's a stock I'm watching out for.
All right, Mangalam, thanks for that. That's F&O for you and a few names on that side, derivative side, to keep an eye out as well. Rajesh is with us. Rajesh, open question to you. I think we always do that. Anything new on your radar, Rajesh, apart from what we've discussed? Maybe you've added or you're watching closely?
Well, I think the CDMO space we continue to like, and with the new companies which are getting listed recently, we are following, we have been quite positive on CDMO as a space. Building material is another segment which is coming out of the bad times, particularly if you look at the tiles and the plywood side of it, so there probably likely that the worst is over, and there are a lot of tailwinds which can start because whatever real estate you have seen the boom in last 3.5-4 years, that is primarily the registrations, and now it's a time for handover of delivery, the actual position to the customers, and as that happens, it means next 24 to 36 months can be in your favor, and that can lead to revival in demand, in the building material space. And at the same time, certain raw materials within this building material, you are seeing the downward trajectory. So a volume growth is going to come back, number one. Therefore, you get operating leverage, number two. And number three, your raw material prices are coming down. And therefore, the competitive metrics, as well as the fight for market share, also comes in your favor. So net, your revenue growth and profit growth can be much stronger over next 12 to 24 months in the building material space in particular. That's the one segment which we like. And the second segment, which I've been talking about is the retail side of the apparel side of the business, the fashion side of the business. And there we believe that from September, October quarter, probably you will see the much better uptick in terms of the revenue growth, particularly for the branded players. And in fact, if you look at one of the companies which reported numbers yesterday, it has shown very strong 15% revenue growth, which has not happened in the last 8 quarters for the entire industry. So I think that is also probably bottoming out. The worst of I would say the fight of market share between e-commerce and the non-e-commerce players is also probably behind us. And therefore, even you might see some uptick over there. So net, the consumption basket on the discretionary side, within that to these sub-segments, that's what probably we believe that they're likely to do much better compared to what we have seen in last 2 years.
CDMO, you're talking about, you're referring to Anthem, which is a recent CDMO listing?
Yeah, I mean, I think the entire CDMO space will do well. We have been holding CDMO companies, and the new companies as well. They are quite exciting business models with the strong revenue visibility.
Okay, Anthem's done well since listing from that space. So retail, apparel, building materials, and CDMO specific pockets there. Rajesh, thank you for your time. Good speaking with you here on CNBC TV18. Just a quick reminder for our viewers as we go into that break. You can unlock a world of exclusivity, expertise and influence. Become a member of CNBC TV18. Access our premium members-only experience on cnbctv18.com. The membership includes access to flagship events, interactions, along with curated studio tours, e-learning sessions, masterclasses and curated lifestyle benefits as well.
Welcome back. So we continue to track gains. The market's been holding steady, 134 points, and it's 24,800 on the index. Mitesh, final advice, both for the index as well as individual stocks.
On the index, I maintain that we might end higher and I think another at least 100 points. And in case it clear this 24,950 from even 25,200 to 50 could be target. So it is still finding a ways, but doesn't look like a market which is possibly going to start some kind of rally, but a bounce back is what I'm thinking at. And on the stock side, Reliance is a BTST with a stop at about 1409, 1408, and a target of 1435 can be looked at. And the other one which I like is Oil India. That's a BTST with a stop just below levels of 438.5 for target of 446 or so.
Okay, all right. Got it. Thanks a lot for that, Mitesh. Well, let's hop across to Sonal. She's here to tell us about Tata Chemicals. The stock is buzzing in trade. Sonal?
Thank you for that. Well, remember, Tata Chemicals reported numbers on Friday, have the management commentary as well, which was quite muted. But there's an interesting note from Morgan Stanley, which talks about how they've seen a suppressed cycle, and the investor sentiment also about commodity chemicals is at a 20-year low right now. And maybe this is something that is forming bottom for these commodity chemicals. With the supply response underway, they think it's time to revisit equities, and per unit EBITDA economics in Asia are also at 2002 lows. Production outside China for listed companies, that is at 2016 lows. And that's why they think the cycle has ingredients for a positive uptake from here on. That's why they have double upgraded Tata Chemicals to an overweight. There is sign of global outbacks, which would support pricing from here on. And also Tata Chemicals is focusing on a lot of things, be it cost-cutting measures, be it volume turnaround, UK economy as a turnaround, or the business as a turnaround overall. And that's why they've increased the target price as well to 1,127 versus 839 earlier, because they think maybe bottom is near for Tata Chemicals and other names as well, and they think pricing will only improve from here on.
Okay, all right. Thanks a lot for that, Sonal. Well, I'm focusing on Jaiswal Nico. And remember, a week or so ago, we were on CNBC TV18 and highlighted this point, that the ARC had held a substantial stake in the company and they've gradually been reducing that stake. As of June, they held close to around 25 crore shares in the company. I'm looking at the BSE data and the NSE data that they normally disclose on a day-to-day basis. And the cumulative is they have sold roughly around 19.5, around 19 crore shares, very, very roughly is what they have sold as per the large trades. The buyer yesterday was quite encouraging because otherwise you have been seeing a lot of selling, but no notable buyer's name has turned up. Now, in yesterday's trading session, post we saw a large trade, and post that we understood that Shubham Capital Private, that's the company that has gone ahead and bought close to around 53 lakh shares in the company. It's a very, very small amount, but the significance of this is that Shubham Capital actually is the promoter entity of Shyam Metallics. It could very well be just a strategic investment, but the street is excited that the part of the promoter entity of Shyam Metallics has gone ahead and bought 53 lakh worth of shares. And just looking at today's volumes, it's massive. Out of those 5-6 crore shares that were pending, the street is sensing that maybe in fact bulk of this ARC clean-out trade has happened. That's the sense. Operationally as well, very quickly, the margins, just take a look at the improvement. From around 11%, it's improved to around 19%. So good looking screen out there. On a quarterly run rate, they were doing 150, 160 crores of EBITDA. That's moved to around 315 crores odd. How have they managed this? 100% of their iron ore comes in from captive sources. They have undertaken some modernization and capital repairs as well, which is definitely bearing fruit. And they've refurbished the blast furnace production, which has enhanced capacity and production as well out there. So operating leverage is playing out. So it's not just the operational performance that is improving. The interest cost as well has been coming down from around 150 crores that they were paying on a quarterly run rate. That's come down to around 120 crores because the debt was at more than 3,300 crores. That's come down to around 2,500 crores, or in all probability, there'll be further reduction in the coming quarters as well. So ARC overhang getting cleared out. Operationally, things are improving. The debt in the books is reducing as well. So what do we track from here on? Can they reduce debt further? Currently, they're borrowing at very elevated interest costs. So that's going to be important to track now that the ARC overhang will go out of the way. And how much can the FY26 EBITDA improve? Last year, they did south of around 1,000 crores. Can they do a much better number this year? That's going to be important to track. But we had alerted you last week that this ARC selling is gradually getting absorbed. And today, the stock is locked up in upper circuit. Post-market hours, we'll have to track the large trades.
Thank you very much for that. The two stocks driving the Nifty's strength today One of them is L&T ahead of numbers, now up 2.5%. And the other one is Reliance Industries. Look at that move in the stock in the last 30 minutes. But let's quickly talk about L&T and the expectations from the June quarter numbers.
Well, that's right, especially if you're talking about L&T. Remember, earlier today, the company did receive a very large order, and this is something that is...
Go ahead.
Yeah, sorry. So, earlier today, the company received a very large order of over 25,000 crores. So this is also one of the key triggers as far as the stock price movement itself was concerned. Now, when you're talking about what exactly to anticipate and expect from Q1, revenues are seen higher by almost 14% at over the 62,820 crore mark. The EBITDA seen higher by 13%, closer to the 6,360 crore mark. Margins on a year-on-year basis is seen slipping softly, almost 10 basis points lower, and all eyes will be on the core margin trajectory. Remember, the company has given a core margin guidance in the range of 8 to 8.5% for FY26. Profitability on the back of that seen higher by 21%. As far as FY26 guidance is concerned, the company envisages a top-line growth of 15%. Order inflow on a very high base of FY25 is seen at 10%. Any tweaks to that will be something that the street will watch out for very closely. Along with that, an important trigger will be whether the company is looking to divest its important power asset, that is Nabha Power. A few reports have indicated that the company is in talks with Torrent Power. Whether that proceeds and whether the company looks to go ahead and improve its ROE, or also known as Project Laksha, is something that the street will very keenly watch out for.
Okay, all right, got that. Vivek, thanks very much. We'll, of course, watch out for those L&T numbers. That's the big one to watch out for post-market hours. By the way, remember, you should definitely tune in to the all-new CNBC TV18 Prime, bringing you insights from policymakers, business leaders, and economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune in to CNBC TV18 Prime at 12 noon for the Global Reset. At 1 p.m., it's the Big C, and Global Lens comes up at 8:30 p.m.
Welcome back. As promised, we have Jay Bala, CMT at cashkiosk.com, who joins us on the show. Hi, Jay. How are you feeling about the markets? Give us two levels. One on the Nifty, what would the trade be? And on Reliance Industries, that has taken a bit of a break.
Hi, Nigel. I've been pointing out that once Reliance starts to bottom out, the market can start looking up. It's not entirely clear if today's low is the final bottom for Reliance. We'll just allow some more price action to reveal what's happening. When it comes to the Nifty, we're still focused on the 24,400 support. But this is very close to the price action. On my last check, the move from today's low was only 3 steps. So we defined trends as a 5-step move. So maybe one more high will confirm the Nifty has bottomed out. But until that point, we keep 24,400 as a mark is a point where this market is headed to. The resistance comes at about 25,660, and the unlikely event that the markets go below 24,400, the levels are at 23,950 for the Nifty.
Jay, afternoon. Reliance Industries, that's making a bit of a move, and even some of these IT stocks like TCS, which has been in the news.
Yeah, I see TCS needs one more sequence of lower low to come through for it to find a bottom, at least one more lower low to come through. But whereas the Nifty IT index is doing a lot better compared to TCS, and I've been pointing out from the middle of last year that TCS, when it crossed fresh 52-week highs, the price action was suspect. So, it's not surprising that it's here. The index support for the Nifty IT index is at 34,280. As long as that holds, the IT index has a potential to reverse from here. We have been counting the bounce from April low as a counter trend bounce, but watch 34,280 as a very important support for the Nifty IT index.
Jay, you have 2 long trades?
Yeah, the pharma sector is perking up, and I pointed out in June that 24,100 was an important level. 22,100 was a very important level, and it's starting to pick up momentum here. And there's a potential that pharma index is headed to something like 26,000 by the end of the year, or slightly a little later, subject to the whims of Donald Trump. The call on the pharma sector is Cipla with an objective of 1750. With a stop loss of 1450, and I think the crude oil is starting to trend lower, and I have a conditional call on the OMC space, HPCL in particular. If it crosses 431, keep a stop loss of 401 and keep an objective of about 470 to 480.
Okay, that is HPCL, Cipla and HPCL. If you can, the stock should come up on your screen. What Jay was referring to. You have a Jay view on defense as well. You're saying that early signs that these names HAL, BHEL, etc. may resume their up move?
That's right. It's not yet resumed, but that's showing early signs. But I pointed out to a double top for defense stocks a couple of months ago or a few weeks ago. And that's it's if this is a bottom, it might be just a short-term top, not a medium-term top. So watch for further price action to confirm. It's an early sign that it could reverse, but it's not yet reversed. So it's just probably a signal for people who've been short to start covering positions, but it's not at reverse yet. But this is showing early signs of a reversal.
Okay, early signs of a reversal. I'm going to start wrapping up things here. Jay, stay with us. So we touched upon IT, pharma, defense, of course, view on the broader indices, and a couple of trades as well. But more a little later after market close coming to you, Jay. The market close itself is pretty good. A pretty solid kind of close coming through. 24,825 is where we are at. Another 150 points. Basically, as I was saying, we need to sort of get above 25,000. For the market to start to believe that maybe, the decline itself is complete now and we need to look up. But today, really, the broader market is the story. About 20-25 names, mid and small caps, which rallied hard on the back of very, very solid volumes. That really is what shone through in terms of trade. And, one spot I'd like to especially talk about is chemicals, right? Chemicals and all sorts of chemical names. Tata Chemical was, of course, something which Sonal highlighted. Paradeep we highlighted. But look at others. Punjab Chemical, Sharda Crop, Deepak Fertilizers, Zuari, Granules, Dhanuka. So lots of action, especially in this part of the market, but not limited to it. You had many other sort of names which did very well. Varun Beverages was up solid. Arvin Fashions, Netweb, Affle India, Wellspun Corp. So many numbers coming through. So pretty busy last 1 hour coming through. But we sort of touched upon many of these on the back of earnings, especially. Some on the downside. IEX continues to sulk and not really back at the lows that we hit that we saw earlier, but close to it now. Home First and Paras Defense and Aeroflex are some of the other names on the downside. But out and out, win for the broader market, especially in the mid and small cap space, is what you had. Well, I think it's a wrap on this edition of Closing Bell from the entire team here. Thank you very much for staying with us. But Markets Forward will pick up on all the action in just a bit.
Market snaps a three-day losing streak amidst mixed global cues. The Nifty reclaims 24,800, most sectoral indices in the green, except for IT, Realty and Pharma. Realty and Pharma amongst the top gainers.
L&T stock jumped after hydrocarbon offshore vertical bagged an order worth more than 15,000 crore rupees ahead of numbers as well. Asian Paints perked up in trade after reporting its first quarter results as it beat street expectations on most parameters, management indicating that demand is picking up. IndusInd Bank, however, reports improvement in margins and credit cost dipped in the first quarter, stock marginally in the green.
Paradeep Phosphates perked up in trade after reporting strong operational performance. Strides Pharma also surged on the back of an expansion in gross margins and improvement in US sales, while Kolte Patil slipped after reporting losses in Q1.
Good evening. You're watching us here on Markets Forward, your go-to show where we aim to get you all the key data points to get up for the next trading day. I'm Mangalam Malu, with me Reema Tendulkar. Today was slightly different from yesterday in the sense that yesterday we ended at the low point of trade after a recovery that we saw. But today the dip was bought into and we ended virtually at the high point of trade. All in all, did not move much for the entire week, but between yesterday and today, there has been a swing in terms of sentiment. The Nifty Bank, led by Reliance and the broader markets, doing a lot better in today's trading session.
Indeed, the Nifty closing above that 24,800 mark, Sensex surging nearly 450 points. L&T, Reliance Industries, these were the two big heavyweights contributing on the way up. Mid and small cap indices also outperformed. Look at that advanced decline ratio, 2:1. And we've been having negative advanced decline ratios, Brett, for the last couple of days. So today there was a bit of a relief. What also helped sentiment with a slew of positive earnings. So whether it's in Asian Paints, which came in the second half of the trading session, but so many other mid-caps which attract, like a Tata Chemicals and Amber, Paradeep Phosphates. We'll discuss many of them. But you know, on the whole, there were more hits rather than misses in terms of, the earnings reaction. So let's also tell our viewers what we've lined up for them on the show today. We'll get to the top movers and shakers. Vivek will join in. On our radar is Happiest Minds, Asian Paints, a bunch of other stocks. They came out with the Q1 numbers. And then we'll get you the key market events to watch tomorrow.
All right, so let's kick off the show with all the movers and shakers. We have Vivek joining in. Vivek.
Well, thank you so much for that. Along expected line, most of the names are of stocks that have delivered results and seeing strong reactions as far as the Q1 performance was concerned. First on the list, name that we don't discuss too often, but APAR Industries, this particular wire conductor company doing very, very well. A robust operational performance, much above what the street was anticipating. Order book very strong. That stock high by over 11% today. Paradeep Phosphates, like you mentioned, this particular company actually saw its EBITDA margin more than double on a year-on-year basis, 8% higher for that particular name. Tata Chemicals, after a while, you did see a very strong move on this particular name. Morgan Stanley double upgraded the stock from an underperform to an outperform, higher by 7%. Torrent Pharma, I had the call last evening. This particular call did see multiple analyst upgrades. Very positive commentary as far as the JB Pharma acquisition was concerned. Saw continued buying throughout the trading session. And Multtech Packaging, strong set of numbers. The company actually joined us earlier today, and they did say that there is upside risk as far as volume performance is concerned, as far as FY26 is concerned. Now, on the other hand, a few stocks that did see some selling pressure. Mazgon talk, weak operational performance, execution was muted. That did see some selling pressure, recovery towards the end of the trading session. Home First Finance, asset quality was over that stock sold off quite significantly at the start of the session. Poonawalla Philcorp, did give up most of the gains that it saw last yesterday. And IEX, this particular stock continues to see a very volatile trading session, a downgrade from Bernstein, ensuring the stock ended lower by 3% today.
And the target price set by Bernstein is 99. And that's the lowest on the street. And IEX took another down leg today. Jay Bala of CashTheChaos.com and Sudeep Bandyopadhyay of Indie Trade Capital are now with us on the show. Thank you very much for joining in. Jay, just for the benefit of our viewers, what's the near term for the markets looking like? And if one had to take a trade for the rest of the week, what would the bias be?
Yeah, it's not a very clear buy signal for the Nifty. The strongest support comes at about 24,400. Because Reliance is starting to bottom out, there's a potential that the markets might have seen today's low. But it's not a very convincing long trade. So if you can avoid it, it's avoidable. I would have rather preferred the market rise from strong supports at 24,400. But from a longer time frame, the markets remains bullish and expecting fresh all-time high from a 6 to 12 months perspective. The resistance for the Nifty is about 25,660. And let's see, if we have one more day of follow through, then maybe we can consider today's low as a important bottom for the corrective decline that started from the recent high beyond 25,500.
All right, so today's low is an important one to watch out for, and you do see potential all the way up to 25,500. Let's go across to Sudeep Bandyopadhyay now. Sudeep, one of the stocks of the day today was Reliance. Yes, L&T did well ahead of numbers, got an order worth 15,000 crores as well. But if you had to, attribute one stock which was a key contributor on the way up for the Nifty, had to be Reliance. Do you think the worst is behind?
Definitely. I think, we've been seeing this post the results which Reliance came up with. I think, there is very clear indication that the newer generation businesses have really picked up momentum. Whether you look at the Jio, where the ARPUs, finally the ARPU increase benefit is flowing into the P&L, and there is probably one more ARPU increase in the offing in the near future. So definitely that business is set. And, of course, there is a value unlocking opportunity going forward. Retail, you look at how things are improving. They have done the whatever pruning they need to do. And per store, the revenue they're focusing on. And I think that is a good thing to have happened. Again, value unlocking story is there. The new energy business already has started, getting commercialized, and a lot of products have started coming to the market. And somewhere there is a possibility of investments coming into that business as well. They are also looking at creating a separate FMCG vertical out of Reliance Retail. And I think this FMCG company itself, as things stand today, will be bigger than a Marico and even closer to the size of Tata Consumer and Dabur. So already there, and I think it's growing rapidly. So multiple new businesses is gaining momentum. Of course, the O2C continues to do reasonably well. There are challenges in the pet side, but otherwise, that's based on global, whatever happens in the global markets. But otherwise, I think overall O2C also is started delivering. Their ability to refine multiple grades of crude gives them a leg up as far as GRM is concerned, vis-a-vis the Singapore standard GRM.
Okay, let's just quickly talk about Happiest Minds, because finally there is a good set of mid-cap earnings. In fact, actually mid-cap earnings haven't been so bad, whether it was Coforge or Persistent, which was steady. And now the latest is Happiest Minds, which is clocked in a 2.3% constant currency revenue growth quarter on quarter. Year on year, it's a 17.5%. Margins have expanded sharply. Margins have come in at 21.4%. And, bottom line has seen a bigger jump of 68%. But that's because the prior quarter had an exceptional loss. But, on the whole, adjusted numbers for the margins are actually very strong, expanding by 200 basis points, and the street likes this performance. Sudeep, Happiest Minds is much smaller in size. Their top line is, I think, just, let me just tell you what the top line is. But the top line is, I think, close to about $165 million on a quarterly basis. So we are talking about an annualized number of, $260 million. So it's much smaller. But in the mid-cap IT space, which stock do you like?
Well, I think, I do like Coforge, and I believe that the market was a little harsh on it post the numbers came out. I think that's one stock to watch out for. They've been consistently delivering numbers, and they seem to be pretty confident about numbers in future as well. They are in the businesses which are definitely not slowing down globally, which includes travel and tourism. So Coforge is one stock which I'm definitely positive on. You're absolutely right. Happiest Minds, while they delivered a good set of numbers, but it's too small to make a big difference on the overall IT scenario or take a view based on Happiest Minds results about Indian IT. Yes, they did well, but I think that's about that. And I think I will wait and watch to see what's happening on the AI front overall for next couple of quarters before I come back and certify or confirm that Happiest Minds is the stock to be in.
All right, Sudeep, that's about Happiest Minds, new technology, etc. Let's talk about the traditional paint business, and that has been going through a fair amount of disruption. But amidst all of that, Asian Paints came out of their first quarter numbers. It was actually not as bad, as the street feared. In fact, it was a shade better than street expectations on a lot of parameters. Let's start with the revenue. Yes, on a year-on-year basis, there was a decline of almost 0.3%. But if you compare to the street expectations, the street was working with a number of 8835 crores. The company reported 8938 crores on the revenue. So there was a near 100 crore beat that came in. And that flew through all the way down to the bottom line. If you look at the EBITDA as well, the company reported around 1625 crores in terms of an EBITDA. The street was working with a number of 1600 crores, holding the margins at around 18.2%, the lower end of the management guided band of 18 to 20%. And we had the net profit, which was largely in line. 1117 crores what the company reported. The street was working with a number of 1127 crores. So no problems out there. The big positive was volume growth. Domestic decorative volume growth came in at 3.9% against expectations of 2 to 3%, and this on a base of 7%, telling you that maybe things are improving. The management went ahead and confirmed that as well. The growth was led by not only domestic decorative, but overall improving demand scenario. Remember, June was marred by a lot of unseasonal rains, but even if you account for that, the overall urban scenario is looking a lot better. And at a time when the stock has already seen a correction of almost 30-35% from the top, maybe the street expects that, competition or the worst of competition is perhaps behind, or they've set out to the new normal for the paint industry from here on itself. Yes, the margins were lower year on year, but that is nothing new because the company did say that it's on account of higher cost of sales and marketing spends that the company has been doing. Industrial paints did well, automotive paints did well for them as well. The stock from its lows has recovered about 15%, still off 30% from its highs. Jay, do you have a chartical view on Asian Paints? Because fundamentally, the multiples have derated quite a bit and there is a fair amount of disruption, but maybe with things improving from here on, the street is willing to give it a slightly longer rope. Chartically, what does the Asian Paints stock show?
The decline from October highs to the March low for Asian Paints is still quite painful on the chart, but it does seem to be forming some sort of a base. The stock hasn't yet broken out or not yet shown signs that it's starting to reverse, but the base building is a process of bottoming. So, probably it's likely to consolidate between 2,500 to 2,290. So, once it breaks out of the range, probably you can consider this. But, Berger Paints has a much better charts and much better relative strength compared to Asian Paints. So, if somebody wants to be allocating towards the paint stocks, Berger Paints are definitely a better bet than Asian Paints as things stands now.
Jay, Asian Paints 30% off its recent highs, 52-week highs. Is there a trade? Stock did well today.
No, I think I would avoid, from a medium-term perspective. I pointed this out when I was bearish on the markets between September and March, that it's clocking a potential double top. So, I think it possibly has got some more, at least sideways work to do before it can be, fished for buying. So, right at the moment, avoid being bullish or bearish, stay neutral over there.
Got that. Let's now go across to Vamakshi, who's here with a wrap of all the stocks that were buzzing after reporting their Q1 numbers. Vamakshi.
Well, Rima, first up, Paradeep Phosphates, this company had a good run in today's trading session, and that is because the revenue surged by almost 58% on a year-on-year basis. The EBITDA margins improved significantly from 6.18 to 12.41%, and the net profit was up almost 47 times. Apart from that, Strides was another counter that did quite well in today's trading session. It was up almost 3.5%. The revenue growth was subdued. It was only up almost 6% quarter-on-quarter, but the margins saw an improvement. US saw a 8% quarter-on-quarter decline in revenue, but an uptick of almost 4% year-on-year. The Axis market sees a 70% year-on-year decline in revenue due to donor funding environment, but nevertheless a good set, and resultantly the stock was higher. On the flip side, what did not do well is Kolte Patil. Keep in mind that the operational update had already come in earlier, but this time around for the financials, they've reported a downtick of almost 76% year-on-year in their revenue. They've also reported a net loss of almost 17 crores as compared to net profit of around 6 crores in the same quarter last year. And lastly, take a look at Moscow Dock. This stock did not do well in today's trading session. They did see a revenue growth of almost 11%, but their margins contracted sharply from 27.4% to 11.4%, and the net profit saw a very sharp cut of almost 35%.
All right. Thanks a lot for that, Vamakshi. So those were a bunch of stock and result reactions that came by. Sudeep, from all the stocks that moved around on the back of results, Vamakshi spoke about Paradeep, Strides Pharma, Mazagon Dock, but there were some many others as well, the likes of Kolte Patil, etc. Anything that stood out for you from the results that recently came? Anything that warrants a fresh look as a trade?
Well, Asian Paints is one stock which definitely impressed me. I think nobody was expecting the kind of numbers they came up with, and it's definitely worth looking at. Of course, the competition intensity is significant in that industry, and one needs to be careful because apart from Birla Opus, now you have JSW post their acquisition, who will be fighting in the market, but definitely deserves attention once more. Asian Paints, we can't leave it out. The other company I'll just mention for a minute is Paradeep Phosphates. I think pretty good set of numbers. And I think it augurs well for the overall fertilizer industry going forward.
Mazgaon Docks, Sudeep?
Well, I'm a little disappointed, honestly. I think the potential is significant, but the way the numbers, particularly the margin, I'm not too worried about the top line, but the margin, impact was significant, and the kind of valuation at which it is quoting, we don't have this kind of margin of error. And definitely this deserves probably a bit of correction further from here. Potential is huge from a long-term perspective, but valuation and the results don't match.
In Q4, the margins had come down to 2.8%. So things have been very choppy on the EBITDA front for Mazgaon Dock. Jay, any defense stocks on your radar?
I'm looking at Hindustan Aeronautics and BHEL, but today's price action is saying on Hindustan Aeronautics that it can bottom from current levels, but it hasn't. So this is on a wait and watch. So a day or two of follow through might change things, but it's a good sign that it's come very close to 44.50, and then starting to hold. That's an important support for the stock. Let's wait. At the index level, there was a double top which I had warned a few weeks ago. So at the moment, it's still an avoid, but the early signs are slightly positive from Hindustan Aeronautics. Maybe things can pick up from here. That's the sign over here. Nothing to fish yet, but there is a possibility.
All right, take that point, Jay. Sudeep, thank you so much for joining in and giving us your view on a whole host of sectors and stocks. With that, we'll take a short break. On the other side, we get you all the top corporate voices along with the key market events to watch out for on the other side. Welcome back. You're watching us here on Markets Forward. Let's get you some of the key corporate voices that we had on the show today. A lot of the real estate stocks were in focus, and we did speak with Arvin Smart Spaces. The management is upbeat on the growth in the real estate industry, speaks about demand improving, and they said that they are on track to achieve 35 to 40% growth, also moving from the last year where some of the demand slipped into this year as well. The weekend home business in Mumbai on track, expecting momentum there, almost 1,000 crore revenue potential, also looking at some society redevelopment segments in Mumbai very seriously.
Okay, let's talk about Chennai Petro. It was a disappointing set of numbers. The company's gross refining margins came in at $3.2, impacted by inventory loss. That said, the company has a positive outlook on gross revenue, the GRMs going forward. They expect to perform well in the second quarter.
All right, let's wrap it up then with all the important events that you need to watch out for. We have Vamakshi on the wall. Amakshi.
Well, Mangalam, a couple of important economic cues to watch out for. The first one will be the US Fed's interest rate decision. Apart from that, we'll also be keeping an eye out on the GDP data that comes in from the US as well as the crude oil inventories. As far as some global numbers are concerned, we'll be keeping an eye out on Microsoft, Meta as well as Alibaba. All three companies report their numbers tomorrow. Now, coming to India then, we'll be keeping an eye out on Tata Steel, Power Grid, Interglobe Aviation, Hyundai, CAMS, Keynes as well as Hitachi Energy. So lots of earnings lined up tomorrow as well. There are two new listings that we will be keeping an eye out for. That includes GNG Electronics as well as IndiCube Spaces, and 3 new IPOs will be opening for subscription. This includes NSDL's 4,011 crore OFS, M&B Engineering, which is a 650 crore IPO, out of which 375 crores is the OFS, and Sri Lotus Developers, which is coming out with a 792 crore fresh issue.
All right, Vamakshi, thanks a lot for that. A bunch of events that will take place tomorrow, a lot from the primary market action, along with a lot of results too. Don't go anywhere. Stay tuned to CNBC TV18 as we wrap up on this edition of Markets Forward. We'll be back with more on the news and updates.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. The Wall Street snaps a three-day losing streak. Nifty reclaims 24,800 mark. Shares across Asia and Europe remain largely in the positive territory. President Trump hints at a blanket 15% or 20% tariff on countries yet to strike a deal with the US as the August deadline approaches. New Delhi is weighing all options. US trade rep says more negotiations are needed with India. United States and China continue negotiations to extend the truce and avoid escalating a trade war. Both nations likely to agree on extending the pause of higher tariffs by another 90 days. The talks could pave the way for a meeting between President Trump and President Xi later this year. IT industry body NASSCOM warns of more job losses in the near term after TCS announced 12,000 job cuts this fiscal. Says traditional skills are being reevaluated, which could lead to some workforce rationalization. 58-year-old Shailesh Jejurikar becomes the first Indian to head global consumer goods major Procter & Gamble. He is the younger brother of Rajesh Jejurikar, the Mahindra Group executive. Shailesh Jejurikar is also a classmate of Microsoft CEO Satya Nadella at the Hyderabad Public School. A Blackstone executive among 4 people killed after a gunman opened fire at an office building in Midtown Manhattan. The skyscraper houses several offices and Wall Street firms. This is the deadliest gun attack in New York City in the last 25 years. The death toll due to Israel's war on Gaza crosses 60,000. A United Nations-backed food security body says a famine is unfolding in Gaza as more people die of starvation. And Home Minister Amit Shah tells Parliament all 3 men involved in Pahalgam terror attack have been killed in an encounter. Opposition questions security lapses that led to the attack. Priyanka Gandhi Vadra asked why Home Minister Amit Shah did not take responsibility for the attack and resign. All right, let's start with today's market action. Sensex and Nifty snapped a 3-day losing streak thanks to a last-hour rally on the Wall Street. Sensex gained over 400 points and the Nifty moved back above the 24,800 mark. Midcaps outperformed the blue chips with the index gaining over 450 points. Bank stocks underperformed the benchmarks. All right, on to the big story that we are tracking. Now, this is moving the markets. US President Trump's August deadline to impose higher tariffs is fast approaching. Now, India is weighing its options as it's among the countries yet to strike a trade deal. Now, with the US, sources say New Delhi has all options on the table, including a possible imposition of retaliatory tariffs. President Trump has threatened India with additional tariffs of 26%. From the 1st of August. Along with India, Bangladesh, South Korea, Malaysia, Cambodia and Thailand have not agreed on a trade pact with the US so far. The US did manage to sign a flurry of trade deals in the last few days. These include the European Union, the United Kingdom, Japan, Indonesia, Vietnam and the Philippines. All of them are facing tariffs between 15 to 20%. Speaking to reporters in Scotland overnight, Trump hinted at a blanket tariff of 15 to 20% on countries who have not signed a trade deal yet. In India's case, this would be lower than the proposed 26% additional tariffs. Meanwhile, US Trade Representative Jamieson Greer hinted that more negotiations may be required to strike a deal with India. Take a look.
I think the thing to understand with India is their trade policy for a very long time has been premised on strongly protecting their domestic market. That's just how they do business over there. And the president is in a mode of wanting deals that substantially open other markets, that they open everything or near everything. So we continue to speak with our Indian counterparts. We've always had very constructive discussions with them. They have expressed strong interest in opening portions of their market. We of course are willing to continue talking to them, but I think that we need some more negotiations on that end with our Indian friends to see how ambitious they want to be.
Markets making a mountain out of a molehill.
exports to the US from India are 1% of India's GDP. If you include services, it's 5% of GDP. President Trump is unhappy with what's going on in Ukraine. He wants a ceasefire. It's not happening. Doesn't look like it's going to happen. And so he's going to indirectly ratchet up sanctions on Russia through its intermediaries, of which India is a big one. And that threat of a 100% tariff on countries which do business with Russia is, I think, a more material concern.
Right, top officials from the US and China are in a huddle in Sweden's capital, Stockholm, for a second day of trade negotiations. Both nations agreed to a trade truce in the month of May for a 90-day period that expires on the 12th of August. The talks lasted nearly 5 hours yesterday. However, no public comments were made on the decision. Both sides could agree to another 90-day tariff pause, and a one-on-one meeting between President Trump and President Xi Jinping has not been ruled out. Taiwanese president has called a planned trip to 3 allied nations in Central and South America. This after US President Trump reportedly opposed his stopover in New York. President Lai's office has not officially confirmed his trip. However, officials say that the president cancelled all overseas travel to focus on tariff negotiations with the US. And IT industry body NASSCOM has warned of more job losses in the near term. This comes a few days after IT major TCS announced 12,000 job cuts this fiscal. In a statement, NASSCOM has said that companies are pivoting towards product-aligned delivery models and that traditional skills are being reevaluated, which could lead to some workforce rationalization. NASSCOM also noted that the industry is at an inflection point with AI and automation becoming central to business operations. Just yesterday, we spoke to industry experts on what TCS's job cuts could mean for the industry, and here's their response.
The focus on the Sholay dialogue, kitne aadmi the, or headcount based judging the IT industry, I think thank God that period will be over.
So I tend to agree with the TCS narrative that this is a future-oriented restructuring, because I mean in the days of generative AI, when you're using ChatGPT a little bit and helping yourself, that was fine. But this is the day of autonomous agentic AI, which means that 80% of the work could potentially be performed autonomously. So in that context, when you look at your organization top to middle to bottom, then you do a fundamental rethink. And I think every industry, it does not just IT, but definitely including IT, will do this reorientation. There will be some shedding of jobs.
They got too many people at the middle and senior level, and they do not see them being useful, because people at the bottom too are coming up to those positions, and those people are stagnated, are possibly not in a billing role. It is a very small number. This is just right sizing.
All right, shifting focus to earnings now. Asian Paint's first quarter performance surpassed expectations on most parameters. The paint manufacturer's volume growth of nearly 4% was higher than estimates. Revenue was also above CNBC TV18's poll, despite declining 0.3% on a year-on-year basis. However, net profit was below expectations, falling 6% despite a 24% jump in the company's other income. Larsen & Toubro have said that its hydrocarbon offshore business vertical secured an ultra-mega order from a client in West Asia. L&T classifies orders above 15,000 crore rupees as ultra-mega contracts. The company said the contract encompasses multiple offshore packages and the scope of work includes construction and installation of offshore structures. Eyewear retailer Lenskart Solutions has filed draft papers with SEBI for its upcoming IPO. The public issue comprises a fresh equity issue worth 2,000 crore rupees and an offer for sale of 132 million shares. Founders Piyush Bansal, Neha Bansal, Amit Chaudhary and Sumit Kapahi will sell stake under the OFS. A portion of the net proceeds from the IPO will be used to set up new company-operated, company-owned stores. And moving on, FMCG giant Procter & Gamble has appointed Indian origin Shailesh Jejurikar as its global CEO. He will be replacing John Mueller, who has been at the helm of the company since 2021. Well, who is Shailesh Jejurikar? Parikshit Luthra tells us.
US-headquartered multinational consumer goods giant Procter & Gamble has appointed Shailesh Jejurikar as the next global president and CEO of the company. Shailesh will be taking over from P&G's current president and CEO John Mueller in January 2026. The 58-year-old joins a list of top Indian origin CEOs in the US like Sundar Pichai, Satya Nadella of Microsoft, Arvind Krishna of IBM, Shantanu Narayan of Adobe, Neil Mohan of YouTube and Leena Nair of Chanel. He also completed his schooling at Hyderabad Public School, which is truly a CEO factory with a strong alumni list that boasts of Satya Nadella, Shantanu Narayan, World Bank President Ajay Banga, and now Shailesh Jejurikar himself. So who is Shailesh Jejurikar? Shailesh Jejurikar got his bachelor's degree from Elphinstone College, Mumbai, and thereafter completed his master's in business administration from IIM Lucknow. He joined P&G in 1989, right after his MBA. What many may not know is that Shailesh Jejurikar and Microsoft CEO Satya Nadella were classmates at the Hyderabad Public School and also very good friends, and they share their love for cricket as well. Jejurikar was not only a cricket enthusiast in school but also represented Hyderabad in under-17 cricket tournaments. Shailesh's elder brother is none other than Rajesh Jejurikar, the executive director and CEO of Mahindra Group's auto and farm businesses. Someone who has worked across industries, including Voltas and Marico, over close to 4 decades. Both of them hail from a village called Jejuri near Pune. Speaking about his brother's elevation, Rajesh told CNBC TV18 that this was a proud moment for India and the family to see Shailesh being appointed as CEO of P&G, which is among the top 25 most valuable companies in the world. Jejurikar is someone who has worked across departments in P&G all his life, with stints in India, Kenya, Singapore and USA. And now he's risen through the ranks to become the CEO of the company.
Right. Thank you, Parikshit, for that. Shifting focus now. A gunman killed at least 4 people, including a police officer in Midtown Manhattan in New York, before shooting himself dead. The incident took place in a skyscraper that houses the headquarters of private equity firm Blackstone and Professional American Football League, NFL. CNN has reported that a suicide note in the shooter's pocket expressed grievances with the NFL. In the note, the shooter said he was battling a brain condition caused by playing American football in his youth. The 27-year-old gunman is believed to be from Las Vegas. CNBC's Contessa Brewer has more.
A lone gunman walked into the lobby where he sprayed bullets, shooting several people, got into an elevator to the 33rd floor where Rudin Management occupies offices, and then shot several more people before turning the gun on himself. Police officer Didarel Islam was killed, as well as 3 others. NYPD has not yet identified them, but the Wall Street Journal reports one of those is a Blackstone executive. We have not yet been able to confirm that. NFL Commissioner Roger Goodell sent an employee email out saying one of our employees was seriously injured in this attack. He's currently in the hospital and in stable condition. NFL staff are at the hospital, and we are supporting his family. Goodell adds that employees based in New York should work remotely tomorrow. The man, or today rather, the man identified by police as the shooter as 27-year-old Shane Tamura. He has a documented history of mental health problems. An NBC News investigative team reports that a note found at the scene, written by Tamura, questions whether his mental health issues were linked to CTE from playing high school football. Now, we're just 5 blocks from where United Health CEO Brian Thompson was gunned down last December. And of course, that sparked stringent reviews of corporate and executive security for many unrelated firms. This shooting is already doing the same. Roger Goodell told employees they should expect increased security when they do come back to this building.
In global earnings now, British private lender Barclays has reported stronger than expected earnings in the June quarter. The bank's pre-tax profit beat estimates, coming in at $3.34 billion, while revenue came in line with estimates at $9.6 billion. The firm also announced a share buyback of $1.3 billion. UK pharma major AstraZeneca surpassed revenue and profit expectations in the second quarter. This on the back of robust sales of newer medicines and strong demand in the USA. The company said sales in America were up by 14% in the quarter compared to last year. This helped overall revenues rise 11% year-on-year. The company also maintained its outlook for the full year, citing continued pricing pressure and global trade uncertainties. Tech giant Apple is set to close its first retail store in China, marking the company's first ever retail shutdown in the country. The company will shut its Parkland Mall store in Dalian City on the 9th of August. Apple has attributed the move to changes in the shopping mall's landscape. China remains a crucial market for Apple, hosting around 56 retail stores. This accounts for over 10% of its global footprint. The DPIIT has signed a pact with electric vehicle maker Ather Energy to strengthen the EV manufacturing ecosystem. The collaboration will include skill development drives and talent programs for startups. This pact also includes strategic mentorship for startups developing core EV and battery technologies. All right, time for a short break. Coming up next, Home Minister Amit Shah tells Parliament all 3 men involved in Pahalgam terror attack have been killed in an encounter. More details when we return. Welcome back. The big national story. It's day 2 of the Parliament debate on the Pahalgam terror attack and its aftermath. Union Home Minister Amit Shah told Parliament all 3 men involved in the Pahalgam terror attack have been killed in an encounter yesterday. Opposition parties questioned the security lapses that led to the attack. Priyanka Gandhi asked why Home Minister Amit Shah did not take responsibility for the attack and resign.
सुलेमान उर्फे फैजल जट, अफगान और जिब्रान 3 आतंकवादी सेना, सीआरपीएफ और जम्मू कश्मीर पुलिस के संयुक्त अभियान में ऑपरेशन महादेव में मारे गए। जिन्होंने बेसरन घाटी में हमारे प्रवासियों को, नागरिकों को मारा था, ये तीनों आतंकवादी ये थे और तीनों मारे गए।
पाकिस्तान को सबक सिखाना था तो शायद ये मकसद अभी अधूरा है, क्योंकि हमारी कूटनीति विफल रही है। इसका प्रमाण यही है कि ऑपरेशन सिंदूर के बाद एक पाकिस्तानी जनरल जिसके हाथ खून से रंगे थे, अमेरिका के राष्ट्रपति के साथ बैठकर लंच खा रहे थे। अगर ऑपरेशन सिंदूर का मकसद आतंकवाद को खत्म करने का था, तो पाकिस्तान को संयुक्त राष्ट्र के आतंकवाद विरोधी समिति का अध्यक्ष चुने जाने से इस मकसद को धक्का लगा है। इसकी जिम्मेदारी कौन लेगा? क्या हमारे प्रधानमंत्री लेंगे? क्या उनमें ये हिम्मत है? नहीं है।
The Supreme Court has not granted interim stay on the special intensive revision exercise in Bihar. This clears the way for the Election Commission to publish draft voter list in Bihar on the 1st of August. And the poll body will allow 30 days objections to be filed. Remember, the EC had refused to consider use of Aadhaar or Ration card in the exercise after the Supreme Court raised it. The top court will now hear the case on the 12th of August. In international news, Israeli forces have killed at least 92 Palestinians across Gaza, including 41 aid seekers. This despite pauses in fighting to deliver essential humanitarian aid. Israeli human rights groups have released reports saying Israel is committing genocide against Palestinians in Gaza. A global hunger monitoring system has warned that famine in Gaza has reached immeasurable heights. This as Israel continues to severely restrict aid entering the strip. The total death toll in Gaza has crossed the 60,000 mark. Russia launched an overnight assault on Ukraine, sending 324 drones, 4 cruise missiles and 3 ballistic missiles across the country. Ukraine's Air Force said it shot down 309 drones and 2 missiles. However, 15 drones and 2 missiles hit targets in 3 locations. A Russian drone also hit a 25-story residential building in Ukraine's capital, Kyiv, injured 8 people. Military commanders from Thailand and Cambodia held talks as calm returned to the disputed border. The commanders met at the border and agreed to maintain the ceasefire and stop any troop movement. This after Thailand accused Cambodia of violating the ceasefire early this morning. However, Cambodia has denied the charge, insisting that its troops have strictly abided by the ceasefire since midnight. The Asian Infrastructure Investment Bank is in talks with private sector to invest in green energy, electric mobility and data centers in India. Speaking with CNBC TV18's Timsy Jaipuria, Vice President of Investment Solutions at AIIB, Ajay Bhushan Pandey said that the bank's current exposure to India is at $12 billion. The former Finance Secretary added that the country's huge infra investment gap is a big opportunity for collaboration.
AIIB has a very large investments in India, and India is the largest borrower of AIIB. As you said, that our total approved project is about $61 billion US. Out of that $12 billion, almost 20% is in India. And we are funding not only the sovereign governments like state governments and then the central government, but also we do investments in the private sector. Our private sector involvement, the approval, is about $1.8 billion US in India.
which are the sectors which would be the focus areas for AIIB, where there are projects or talks in the pipeline which could soon be seen as the next projects where AIIB would be investing?
It's a very good question. In India, we have already invested in the, the green energy, that is solar power. The solar power and then the battery, along with the battery, the wind energy, and then transport. Many of these metro projects we have done. And India has so many cities there which are developing and growing. Many of them will require metros and they will require funding. So then also the electric mobility, the electric vehicle, and then many of these such innovative projects, even the data center, for example. So these are the areas where the AIIB has already invested, but AIIB is also looking into that, it can invest more into many of these projects. AIIB is also invested in health sector.
Sportswear maker Decathlon is targeting local sourcing from India to hit $3 billion by 2030. The company is making 25 years in India and is marking 25 years in India, and the CEO Shankar Chatterjee spoke with CNBC TV18's Abhimanyu Sharma.
We are really proud about 25 years in Decathlon. 2000 we started with the production and 16 years in retail now. We really expanded in our overall channels of physical retail. We have 132 stores now in 55 cities. Our digital footprint is increasing. We are able to deliver mostly all over India of 21,000 pin code. We are also exist in terms of wholesale business to really cater to the tier 3 and tier 4 and further areas. It's a very good question when you ask about the product typology and how exactly we are penetrating. If you see that we came a long way about different basic product to the real technical product in our range. Talking about cycle, what you see next to us, we're able to cater to the very top of the range by segment.
India, which are the new products you're looking at? Which are the new markets you're targeting within India, even as you are using more domestic products as part of your production chain, your value chain within India?
Yeah, so have a look on our wellness area, which is linked with fitness in India. We are also trying to produce in India, and also today we see that there's a huge need of fitness equipments. We are also trying in terms of sourcing in India that how we can have made in India fitness equipment and can make it available in a price which is suited to the Indian customer. One very important thing what I like to tell you that we'll be always conscious about the value proposition of our prices. It is very important to make the sports product accessible to the many in India. We stay frugal in our overall business model. Our product prices has to be really optimal for the benefit of our customer.
And with that, it's a wrap on this edition of Business 360. News and updates continue right here on CNBC TV18.
Hello and welcome to Commodity Champions. I'm Manisha Gupta. Well, the US-based fine jewelry brand Angara enters India earlier this year and is all set to make the most of the festive season. Angara was founded by husband and wife duo Ankur Daga and Aditi Daga based on their family's 300 years of gemstone expertise. Angara offers bespoke jewelry with natural and lab-grown diamonds and also colored gemstones. It is expected to hit a $1 billion revenue by 2030. I caught up with Ankur Daga and began by asking him about Angara's global footprint and India plans. Let's listen in.
So we're currently in the US, UK, Australia, and Canada. We just did our soft launch in India 10 months ago, did our hard launch in April, and we're super bullish about this market. I think it's going to be a very big one for us.
So what are the kind of investments that you're looking at, and what categories or geographies? And your strong line clearly has been online. Is that how you're looking at Indian markets also?
India is likely to be much more of an omni-channel play. So we don't have another store anywhere else in the world. This will be very different for us. And it's primarily because 80% of the people that call into our call center ask where our stores are. So clearly we need to serve that need, and we're driven by the customer. So that's going to be very different for us. In terms of our focus versus other D2C players in India, I think we're pretty fundamentally different in a few ways. One is we're very gemstone focused, so ruby, emerald, sapphire, tanzanite, and so forth. We're also very vertically integrated, one of the most in the world. So a lot of our gemstones will cut and polish in-house, so we'll buy rough all around the world. So for example, rubies from Mozambique, emeralds from Zambia or Colombia, cut and polish, design our own jewelry, manufacture our own jewelry, and then retail over the web. So it's a pretty unique model that way. We're also completely bespoke. So after a customer places an order, we typically produce that piece from scratch in the metal of choice, quality of gemstone of choice, size of gemstone of choice, all within 24 to 48 hours, and then ship to the customer.
Ankur, how would you look at the Indian markets differently? Because all the other countries that you have spoken about do tend to work on lower carriages in sense of gold and also in sense of MRPs, something that India seems to be opening up to, but not really there.
Yeah, so fundamentally it's quite different in that respect. So I'll compare the US and the India markets. So the worldwide jewelry industry is roughly $400 billion, out of which India and the US are both $85 billion, the largest two in the world. India is growing a lot faster at 10 to 15% a year. The US is growing at roughly 4% a year. But fundamental buying patterns are different. So in India, 88% of jewelry sold is gold jewelry. Diamond jewelry is 10%. Gemstones are under 2%. In the US, it's substantially different. Half of the market is diamond jewelry. And gemstone jewelry is roughly between 12 and 15%. So gemstones as a category are more established there than here. For us here, growing primary demand for gemstones is going to be very core to the business. And it's a very different approach because it's also a very investment-heavy market. People who buy jewelry think of it as an investment here, which is not as much the case in the rest of the world.
So when you talk about gemstones and India, and as you said, it's just about 2% of a market right now. What is it that you would need to work in to penetrate that kind of a market? With what kind of caratages, what kind of investments?
Yeah, so in terms of the awareness in the market here, it's very high. The customers that call in or look at our website already know exactly what they want. But there's this difference between awareness and consumption. And I think the fundamental reason is in India, everybody looks at jewelry as an investment. And historically, there hasn't been a good way to invest in gemstones. And if you buy it, it's hard to resell it. So for us, part of what we're doing here is we'll be the first ones to make a market per gemstones. For the 40 top gemstones, we will publish an annual appreciation or depreciation report per gemstone. If anybody wants to exchange or buy back, accordingly, we will price it accordingly and we'll pay the premium when we buy back to establish that market, which will be pretty unique.
Ankur, talk to us about certification as well. And recently we've heard about two different certificates, the way lab-growns and the naturals, diamonds that is, would be certified. When it comes to gemstones, how are you looking at what certifier and what kind of an awareness do you foresee in Indian markets?
So for every piece that we sell, we provide a certificate of authenticity. Also, for a lot of the higher-end gemstones, we'll provide a GIA certificate as well. And for lab-grown diamonds, for example, or natural diamonds, we'll provide an IGI or GIA certificate. So it depends on the category specifically as to what type of certificate we provide.
What is your sense on where India is headed from here? Because we've seen wealth creation, we've seen interest and love for jewelry only grow from here.
Yeah, so I think starting next year, India will be the largest jewelry market in the world, which is super exciting. I think that will certainly continue to grow. I think we're going to see an explosion on the lab-grown diamond front, and we'll see an explosion in growth also on the color gemstone market. And so that 88% that gold jewelry currently captures will start reducing a little bit, and everything else will start growing as awareness of other categories start increasing.
You've taken your own sweet time coming to India, haven't you?
Yeah, when we entered, we wanted to make sure we get it right. So this is our 20th year in the business. So it was a long time coming. And in a lot of ways, it feels like our homecoming. But this market is idiosyncratic in a few ways. So for example, we're providing gold weight, labor costs here, where we don't do that in the rest of the world.
Right.
We'll open physical locations, which we don't do anywhere else in the world. We'll also make the market for gemstones, which we don't do anywhere else in the world.
All right.
So it requires
so there are
a lot
of firsts happening here with you.
Precisely. Precisely.
So when it comes to manufacturing and procuring of diamonds and these gemstones as well, how is that supply chain working for you?
So the supply chain differs by gemstone. So for example, with emeralds, it would be Colombia or Zambia that we primarily source from. We'll source rough, cut and polish that, and then design jewelry to insert that into. For diamonds, we buy wholesale in Mumbai or Surat. For opals, we buy in the villages in Western Australia, then we'll cut and polish. For rubies, it's from Mozambique, or dealers in Thailand. So for each of the 40 gemstones, there's a completely different supply chain.
And for the Indian markets, as you said, you're going hybrid and offline as well in some of those areas. So what geographies are you really targeting? And when it comes to production within India, what place are you choosing?
So Jaipur would be where we start production, primarily because that's really the epicenter of gemstones in the world. And it's also our hometown and where our office in India is. In terms of, sorry, what was the...
your locations, offline locations in India.
Yeah, so Bombay, Delhi, and Bangalore are going to be the top 3. And the reason is that 20% of our sales are coming from Bangalore, 20% roughly from the NCR region, and 20% from Mumbai/Navi Mumbai. And so we're letting the customer dictate where we open stores. Those are the top 3. And then we're also opening an experience center in Jaipur because that's where we want to showcase what we're all about.
When you talk about Indian markets, and it's quite different, and as you said, slightly difficult as well to get a penetration in with so many brands already in India, what would you say is going to be your USP when you enter here?
So because we're so focused on color, we're approaching this kind of on our own. We actually need more competition. Creating primary demand is expensive and it's time consuming. We would love for 10 others to jump in and we create it together, and then it's about capturing secondary demand. A lot of the D2C startups that we're seeing are all focused on lab-grown diamonds, which is great for the consumer. For us, a lot of the onus is on creating the demand for color gemstone jewelry in general.
So as you're entering India, as I said in the initial comments itself, Ankur, it is a time when people start buying, and it is perhaps going to be designs. And as you were mentioning, as we were talking earlier before the interaction, 9 carat is also allowed in right now. Does that work in favor of the jewelry sellers?
Oh, I think it's going to be a game changer. So what had happened is when gold prices went the way they did, a lot of the capital in investing in a jewelry piece went to gold. Now, all of a sudden, a lot more of that capital can go into precious gemstones or it can go into diamonds. And that's going to result in much more elaborate pieces, much larger pieces in general. So I'm super excited about that.
All right. We've talked about gemstones and gold jewelry. I mean, that continues to be a bigger chunk for Indian markets, though. But when it comes to gemstones and natural diamonds and lab-grown diamonds, where do you see a more higher, better growth coming in for the Indian markets?
So I think if we talk about asset appreciation, because that's so fundamental to the Indian consumer, if I look at the last 10 years, what's happened is pretty interesting. So on the natural diamond side, prices have come down anywhere from 25 to 40% over the last 3 years. And if I look at a 10-year CAGR, it's like -2%. If I take gold, platinum, and silver, platinum has gone up by roughly 4% a year.
Right.
Silver, 9%. Gold 14%, which has beat the S&P and the Sensex.
Totally.
So it's been a fantastic investment. I think Uday Kotak put out a tweet saying that the Indian housewife is
the most intelligent,
the best fund manager, and that's absolutely true. That's exactly what's happened. What's interesting is that gemstones have outperformed all of these. They've gone up anywhere from 3.7 times to 6.8 times over the last 10 years. And if you look at Sotheby's, Christie's, Phillips, Bonham's auctions, a lot of the pieces that are trading at 2 to 3 times high estimates are color gemstones. So a lot of the capital that historically has gone into diamonds is now coming into color.
All right, that's Ankur Daga of Agara telling us that gemstones is a place to be, and they've given you the best returns perhaps in the last 1 year, outperforming not just the equity as an asset class, but various precious metals itself. But with that, moving from diamond and jewelry to food is what we will be talking about after this very short break. Don't go anywhere, because a conversation with Godrej Group's Nadir Godrej and ITC's S. Sivakumar is coming up on the other side. Welcome back. You're watching Commodity Champions. Let's shift focus now to agriculture. And I caught up with Nadir Godrej. He's chairperson of Godrej Industries Group on the sidelines of the Indian Vegetable Oil Producers Association conference in Delhi. I started by asking him about the penetration of tech and AI right from production to pricing in the edible oil sector. Let's listen in.
It's gradually happening. We do provide a lot of farmer services. And now it's currently mostly manual, but we are clear that over time it will be, the analysis will be done by AI, and it's likely to be much better and at a lower cost.
The other thing that we're looking at in edible oils is higher prices, lower yields, and a lot of import dependency. Would you say this is high time India needs to start looking into all of this very seriously?
Absolutely. And we had a spokesperson for the government today at our session, And he clearly said that the government is going to introduce new high-yielding varieties of oilseeds. And it used to take 6 or 7 years for new seeds to come through, but now it can happen in 3 years. So hopefully there'll be progress on the oilseed front. And the government's oil palm policy is already putting in a lot of progress in oil palm, and more farmers are getting interested in growing oil palm. The high global prices are helping that, and we think that many more states will take up oil palm. The Northeast is a huge possibility, and I'm looking forward to rapid expansion. We ourselves are giving our farmers much more planting material this year than in the past, and with the high-yielding palm material coming in, the sky's the limit.
All right. Well, I do understand that Godrej clearly is leading when it comes to palm in India.
Right.
How would you say the last couple of years have been? And if you were to look at 2026, then how would you look at that progress?
There was steady progress earlier, but now it's on a new trajectory, and we are pretty sure that this will continue. And if the high-yielding material really works well in India, then it will really take off.
Mr. Godrej, when you do something like that, and of course, I'm assuming there's a partnership happening with Indonesia, some companies outside of India as well when it comes to palm, how much of a government push and policies has made that happen?
The government's oil palm policy has been very helpful, though some of the states have not yet signed up for it. If they do sign up for it, it'll be helpful. But anyway, there is good progress with the oil palm policy. And I'm really optimistic that oil palm at least will grow. On oil seeds, there are many more issues. The only good sign is the new high-yielding varieties, but it could be a chicken and egg problem. The government's support prices are a bit unsustainable. How they will be able to actually pick up the soybeans, I'm not very sure. And if we don't have enough farmer incentives in place, will they even grow these new high-yielding varieties? If they grow the high-yielding varieties, the problem will be solved.
The kind of imports that we are looking at right now, and even as with palm growing in India, if you had to take a vision of next 5 years, let's say, would you say that the imports perhaps would continue at the same level or perhaps higher?
I don't think the percentage of imports is likely to rise beyond this point, because there's already traction in oil palm. And of course, it takes 4 or 5 years for the tree to grow. So it may take a little while, but our edible oil consumption is growing at about 2% a year. And the production so far is stagnant, but oil palm production is still growing, and it will continue to grow, and it maybe after 3 or 4 years, it will really accelerate.
Mr. Godrej, also, how are you looking at the demand for the Indian markets right now? We do understand that as standard of living goes higher, people eat out, and that is where the demand also surges from.
Right.
With the PM pushing for health and less consumption of edible oil, I mean, I understand that these are health choices, but do you see that actually putting any dent to demand at all?
It's very unlikely, because there are a lot of things we can do to eat better for our health, but a lot of people don't do it. It's a challenge. We can keep trying to educate them. And in India, we also have the other challenge that we either have people who are eating too much or people who are eating too little. Hardly anyone seems to be eating right.
Yes, I would agree that percentage is very, very small, perhaps. But going forward from here, as you said, we perhaps are on the higher range of import percentages there. But what about the prices? Because a lot of people from the industry tend to believe that the prices from here can be around these levels or higher, definitely not lower.
Because of biodiesel and things like that, it is likely that edible oil prices will stay high. But by the same token, I don't think they're going to go much higher. Because as we substitute petroleum products, petroleum prices have begun to fall. And if we get our Green Energy Act right, petroleum prices may collapse. And then what's going to push edible oil up?
Not so much a biofuel from that point of view.
especially if we keep growing more edible oils all over the world.
All right, that point is well taken. As Godrej, as a company, how are you looking at agriculture as per se, overall as a sector?
Godrej Agrovet is a very big business for us, and we are in many areas. We are in agri-chemicals, we are in animal feed, we are in food products like chicken and dairy, and we have a big oil palm business. And we had an oil palm business for many years, but only recently we put in our first refinery, and now we are putting a value-added refinery to make bakery fats, confectionery fats, and use both CPO and palm kernel oil. So that's a big opportunity for us, and we see a very bright future in Indian agriculture. Indian agriculture has been growing slowly, but the potential to grow is very high because yields are low, and unfortunately a lot of practices are unsustainable, stubble burning, very little regenerative agriculture. We are depleting our soil. But you could consider all of these as crises or as golden opportunities.
Yeah, well, absolutely. So when you are really spread out when it comes to agriculture or agriculture-related activities, where do you see more growth come in? Where is your focus more going forward from here?
I see a lot of growth in agri-chemicals, even on the export side, and a lot of growth in oil palm.
Okay.
Yeah. For us, I don't see that much growth in our food businesses. But of course, oil palm is also becoming a food business. So, but in dairy also, I see that if we get our act really well together, there will be a lot of growth potential there too.
And would you say that a lot would depend on tariffs that India really seems to be signing with various countries? Would that impact businesses?
That could impact Indian agriculture. It could impact farmers a little bit. In fact, agriculture could be the sticking point with the US deal. Japan gave unimaginable concessions on rice,
yes,
which is something very sacred to them. Probably they could afford it because I think their rice prices are maybe 5 times American prices. I'm not sure America provides enough of the varieties they are used to. So that could be a sticking block for American imports of rice. But Japan has very few rice farmers, so maybe their plan is just to subsidize all their rice farmers.
All right. Well, that's Nadir Godrej from Godrej from telling us that agriculture is a big business for them. And as he says, that edible oil prices can continue to stay firm from here as well. Well, that's about Godrej Industries. But I also caught up with S. Sivakumar, Group Head of the Agri and IT businesses at ITC. I also asked him about how his business strategy to deal with uncertain times like COVID, geopolitical tensions, tariffs and more. Let's listen in.
The most important thing is, of course, the portfolio that you create and how agile you are in responding to changing situations. That if I have 5 models of sourcing, since you brought up sourcing, which one will have a higher share and which one will have a lower share needs to be really agile. It's not as if I cannot say that, this is a large train or a ship going forward, I can't take a quick turnaround. The flexibility needs to be done in such a manner that I'm able to instantly change it, because obviously there are decisions that the governments have to take in terms of allowing exports, stopping exports, stock limits, all of this. That is, how do you really stay agile in making all of this happen? So it is the broader network of presence in every crop value chain that we are present in, and the multiple models of sourcing and multiple end users and customers besides our own consumption for our own branded foods inside. I think that flexibility, how do you manage on a real time and be agile, is at the core of doing this.
When you talk about food grains, and that is something the government seems to have gotten right. Pulses, we imported record numbers last year. Edible oil, our dependency is at 55 and 60%. The way we are looking at food per se in India, one, how do you see it as an economy, and how would you see it as a company?
No, one has to be more, as they say, Atmanirbhar or self-reliant, which is very different from self-sufficiency. If you really produce something much better, much more, you can export and create that self-reliance to be able to import where someone else is able to do a better job because of natural advantages, because of technology, productivity, many different ways. If you take a simple example of soybean, there is a huge consumption of soybean. India actually got in originally for soybean as a food.
Right.
50 years ago when India started producing soybean. It's a relatively new crop for India. But as the times passed, it became oil seed, and it was oil, much higher share of the soya complex, unlike globally where it is done more for the feed and coming out of meal. But now the way to morph it and create a tomorrow from an Indian context, how do you make use of the protein for human food in soybean? And therefore, not necessarily oil, of course, there is a value. Meal as feed, there is a value. But if you really look at the dynamic of getting soya as a human food, then that economy will transform much better. So each one of these crops, food grains, how do you add value? Not just more and more productivity, but within wheat, what are the various varieties of wheat which can help in delivering different consumer properties? Same thing goes for rice and same thing for pulses. Rather than looking at just crops and from a food perspective, food security, food self-sufficiency, I think there is a lot more value which is residing in each of these crops that we should really harness. I think we are blessed with wonderful agroclimatic diversity in India. We can produce different crops with different kinds of values, and that's what we should make use of to thrive as an economy of farmers and of the consumers, and of course taking care of the environment as well.
Since I have you with me, I do want to push this point of wheat product exports. What's your sense on that?
Yep, so I think there is, it's a big opportunity for India, continues to be. I think it's a matter of how do you create an equilibrium that if there is a price inflation within the country, that you say stop all exports. Okay, next step has happened to say that, okay, you can import and then value add and export so that your economy is balanced. One can certainly move to a next stage of how do you look at wheat products as a value added exports without necessarily relying on imports. But I think what is more fundamental, this is still a compartmentalized view of how do we maximize product export when there is opportunity from the world market, whether for diaspora or for the larger global market. But how do you deal with the problem at the very base of how do you make our crops more climate resilient? The whole anti-fragile that I was talking about.
Right.
Doesn't matter if it is heavy rain or heat wave, you still produce good quantum and quality of wheat, then will take away from this problem of changing policy on this. So efforts are also on that front, both from the government as well as from the industry who's engaged with the farmers like we do, to make the crop more resilient so that these kind of exigencies themselves don't arise.
I'll wind this down with one more question. And you talked about also bilaterals that we are doing with various countries. UK seems to be being done now. Other countries are in conversation. US, of course, is going to be one big deal there. How are you reading into each one of these? And does it open it up for India, or there is concern about Indian agriculture as we look into each one of these?
I think India is negotiating these deals from a position of strength because we are a large market. While, of course, the counterparts will push for access here and now, but when it is done in a calibrated fashion, because every other country which is negotiating is also looking at how do I protect my domestic jobs, how do I protect my vulnerable segments, and therefore agriculture is put square and center in these negotiations. So I think, I'm sure, when we negotiate in the position of strength of the consumption, while we need to protect it and how do you open it in a calibrated manner, I think this is much better to do it in multiple bilateral agreements because we kind of balance each other's strengths and weaknesses, as opposed to one global multilateral agreement, which was yesterday's era. I think this certainly is going to be helpful for India. I'm sure the government is doing all its bit to protect as we build our capacity of the farmers to compete in this market.
All right, golden words coming in there that India is dealing with various countries from the position of strength when it comes to agreements, and agriculture, as he said, is the center and square of all of these deals and wouldn't want that to be touched too much. But with that, that's all the time that we have on this edition of Commodity Champions. Thank you for watching.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. The Wall Street snaps a three-day losing streak. Nifty reclaims 24,800 mark. Shares across Asia and Europe remain largely in the positive territory. President Trump hints at a blanket 15% or 20% tariff on countries yet to strike a deal with the US as the August deadline approaches. New Delhi is weighing all options. US trade rep says more negotiations are needed with India. United States and China continue negotiations to extend the truce and avoid escalating a trade war. Both nations likely to agree on extending the pause of higher tariffs by another 90 days. The talks could pave the way for a meeting between President Trump and President Xi later this year. IT industry body NASSCOM warns of more job losses in the near term after TCS announced 12,000 job cuts this fiscal. Says traditional skills are being reevaluated, which could lead to some workforce rationalization. 58-year-old Shailesh Jejurikar becomes the first Indian to head global consumer goods major Procter & Gamble. He is the younger brother of Rajesh Jejurikar, the Mahindra Group executive. Shailesh Jejurikar is also a classmate of Microsoft CEO Satya Nadella at the Hyderabad Public School. A Blackstone executive among 4 people killed after a gunman opened fire at an office building in Midtown Manhattan. The skyscraper houses several offices and Wall Street firms. This is the deadliest gun attack in New York City in the last 25 years. The death toll due to Israel's war on Gaza crosses 60,000. A United Nations-backed food security body says a famine is unfolding in Gaza as more people die of starvation. And Home Minister Amit Shah tells Parliament all 3 men involved in Pahalgam terror attack have been killed in an encounter. Opposition questions security lapses that led to the attack. Priyanka Gandhi Vadra asked why Home Minister Amit Shah did not take responsibility for the attack and resign. All right, let's start with the day's market action. Sensex and Nifty snapped a 3-day losing streak thanks to a last-hour rally on the Wall Street. Sensex gained over 400 points and the Nifty moved back above the 24,800 mark. Midcaps outperformed the blue chips with the index gaining over 450 points. Bank stocks underperformed the benchmarks. All right, on to the big story that we are tracking. Now, this is moving the markets. US President Trump's August deadline to impose higher tariffs is fast approaching. Now, India is weighing its options as it's among the countries yet to strike a trade deal. Now, with the US, sources say New Delhi has all options on the table, including a possible imposition of retaliatory tariffs. President Trump has threatened India with additional tariffs of 26%. From the 1st of August. Along with India, Bangladesh, South Korea, Malaysia, Cambodia and Thailand have not agreed on a trade pact with the US so far. The US did manage to sign a flurry of trade deals in the last few days. These include the European Union, the United Kingdom, Japan, Indonesia, Vietnam and the Philippines. All of them are facing tariffs between 15 to 20%. Speaking to reporters in Scotland overnight, Trump hinted at a blanket tariff of 15 to 20% on countries who have not signed a trade deal yet. In India's case, this would be lower than the proposed 26% additional tariffs. Meanwhile, US Trade Representative Jamieson Greer hinted that more negotiations may be required to strike a deal with India. Take a look.
I think the thing to understand with India is their trade policy for a very long time has been premised on strongly protecting their domestic market. That's just how they do business over there. And the president is in a mode of wanting deals that substantially open other markets, that they open everything or near everything. So we continue to speak with our Indian counterparts. We've always had very constructive discussions with them. They have expressed strong interest in opening portions of their market. We of course are willing to continue talking to them, but I think that we need some more negotiations on that end with our Indian friends to see how ambitious they want to be.
Markets making a mountain out of a molehill. Exports to the US from India are 1% of India's GDP. If you include services, it's 5% of GDP. President Trump is unhappy with what's going on in Ukraine. He wants a ceasefire. It's not happening. Doesn't look like it's going to happen. And so he's going to indirectly ratchet up sanctions on Russia through its intermediaries, of which India is a big one. And that threat of a 100% tariff on countries which do business with Russia is, I think, a more material concern.
Right, top officials from the US and China are in a huddle in Sweden's capital, Stockholm, for a second day of trade negotiations. Both nations agreed to a trade truce in the month of May for a 90-day period that expires on the 12th of August. The talks lasted nearly 5 hours yesterday. However, no public comments were made on the decision. Both sides could agree to another 90-day tariff pause, and a one-on-one meeting between President Trump and President Xi Jinping has not been ruled out. Taiwanese president has called a planned trip to 3 allied nations in Central and South America. This after US President Trump reportedly opposed his stopover in New York. President Lai's office has not officially confirmed his trip. However, officials say that the president cancelled all overseas travel to focus on tariff negotiations with the US. And IT industry body NASSCOM has warned of more job losses in the near term. This comes a few days after IT major TCS announced 12,000 job cuts this fiscal. In a statement, NASSCOM has said that companies are pivoting towards product-aligned delivery models and that traditional skills are being reevaluated, which could lead to some workforce rationalization. NASSCOM also noted that the industry is at an inflection point with AI and automation becoming central to business operations. Just yesterday, we spoke to industry experts on what TCS's job cuts could mean for the industry, and here's their response.
The focus on the Sholay dialogue, kitne aadmi the, or headcount base judging the IT industry, I think thank God that period will be over.
So I tend to agree with the TCS narrative that this is a future-oriented restructuring because in the days of generative AI, when you're using ChatGPT a little bit and helping yourself, that was fine. But this is the day of autonomous agentic AI, which means that 80% of the work could potentially be performed autonomously. So in that context, when you look at your organization top to middle to bottom, then you do a fundamental rethink. And I think every industry, it does not just IT, but definitely including IT, will do this reorientation. There will be some shedding of jobs.
They got too many people at the middle and senior level, and they do not see them being useful because people at the bottom two are coming up to those positions, and those people are stagnated, are possibly not in a billing role. It is a very small number. There's just right sizing.
All right, shifting focus to earnings now. Asian Paint's first quarter performance surpassed expectations on most parameters. The paint manufacturer's volume growth of nearly 4% was higher than estimates. Revenue was also above CNBC TV18's poll, despite declining 0.3% on a year-on-year basis. However, net profit was below expectations, falling 6% despite a 24% jump in the company's other income. Larsen & Toubro have said that its hydrocarbon offshore business vertical secured an ultra-mega order from a client in West Asia. L&T classifies orders above 15,000 crore rupees as ultra-mega contracts. The company said the contract encompasses multiple offshore packages and the scope of work includes construction and installation of offshore structures. Eyewear retailer Lenskart Solutions has filed draft papers with SEBI for its upcoming IPO. The public issue comprises a fresh equity issue worth 2,000 crore rupees and an offer for sale of 132 million shares. Founders Piyush Bansal, Neha Bansal, Amit Chaudhary and Sumit Kapahi will sell stake under the OFS. A portion of the net proceeds from the IPO will be used to set up new company-operated, company-owned stores. And moving on, FMCG giant Procter & Gamble has appointed Indian origin Shailesh Jejurikar as its global CEO. He will be replacing John Mueller, who has been at the helm of the company since 2021. Well, who is Shailesh Jejurikar? Parikshit Luthra tells us.
US-headquartered multinational consumer goods giant Procter & Gamble has appointed Shailesh Jejurikar as the next global president and CEO of the company. Shailesh will be taking over from P&G's current president and CEO John Mueller in January 2026. The 58-year-old joins a list of top Indian origin CEOs in the US like Sundar Pichai, Satya Nadella of Microsoft, Arvind Krishna of IBM, Shantanu Narayan of Adobe, Neil Mohan of YouTube and Leena Nair of Chanel. He also completed his schooling at Hyderabad Public School, which is truly a CEO factory with a strong alumni list that boasts of Satya Nadella, Shantanu Narayan, World Bank President Ajay Banga, and now Shailesh Jejurikar himself. So who is Shailesh Jejurikar? Shailesh Jejurikar got his bachelor's degree from Elphinstone College, Mumbai, and thereafter completed his master's in business administration from IIM Lucknow. He joined P&G in 1989, right after his MBA. What many may not know is that Shailesh Jejurikar and Microsoft CEO Satya Nadella were classmates at the Hyderabad Public School and also very good friends, and they share their love for cricket as well. Jejurikar was not only a cricket enthusiast in school but also represented Hyderabad in under-17 cricket tournaments. Shailesh's elder brother is none other than Rajesh Jejurikar, the Executive Director and CEO of Mahindra Group's auto and farm businesses. Someone who has worked across industries, including Voltas and Marico, over close to 4 decades. Both of them hail from a village called Jejuri near Pune. Speaking about his brother's elevation, Rajesh told CNBC TV18 that this was a proud moment for India and the family to see Shailesh being appointed as CEO of P&G, which is among the top 25 most valuable companies in the world. Jejurikar is someone who has worked across departments in P&G all his life, with stints in India, Kenya, Singapore and USA. And now he's risen through the ranks to become the CEO of the company.
Right, thank you Parikshit for that. Shifting focus now, a gunman killed at least 4 people, including a police officer in Midtown Manhattan in New York, before shooting himself dead. The incident took place in a skyscraper that houses the headquarters of private equity firm Blackstone and Professional American Football League NFL. CNN has reported that a suicide note in the shooter's pocket expressed grievances with the NFL. In the note, the shooter said he was battling a brain condition caused by playing American football in his youth. The 27-year-old gunman is believed to be from Las Vegas. CNBC's Contessa Brewer has more.
A lone gunman walked into the lobby where he sprayed bullets, shooting several people, got into an elevator to the 33rd floor where Rudin Management occupies offices, and then shot several more people before turning the gun on himself. Police officer Didarel Islam was killed, as well as 3 others. NYPD has not yet identified them, but the Wall Street Journal reports one of those is a Blackstone executive. We have not yet been able to confirm that. NFL Commissioner Roger Goodell sent an employee email out saying one of our employees was seriously injured in this attack. He's currently in the hospital and in stable condition. NFL staff are at the hospital, and we are supporting his family. Goodell adds that employees based in New York should work remotely tomorrow. The man, or today rather, the man identified by police as the shooter as 27-year-old Shane Tamura. He has a documented history of mental health problems. An NBC News investigative team reports that a note found at the scene, written by Tamura, questions whether his mental health issues were linked to CTE from playing high school football. Now, we're just 5 blocks from where United Health CEO Brian Thompson was gunned down last December, and of course that sparked stringent reviews of corporate and executive security for many unrelated firms. This shooting is already doing the same. Roger Goodell told employees they should expect increased security when they do come back to this building.
In global earnings now, British private lender Barclays has reported stronger than expected earnings in the June quarter. The bank's pre-tax profit beat estimates, coming in at $3.34 billion, while revenue came in line with estimates at $9.6 billion. The firm also announced a share buyback of $1.3 billion. UK pharma major AstraZeneca surpassed revenue and profit expectations in the second quarter. This on the back of robust sales of newer medicines and strong demand in the USA. The company said sales in America were up by 14% in the quarter compared to last year. This helped overall revenues rise 11% year-on-year. The company also maintained its outlook for the full year, citing continued pricing pressure and global trade uncertainties. Tech giant Apple is set to close its first retail store in China, marking the company's first ever retail shutdown in the country. The company will shut its Parkland Mall store in Dalian City on the 9th of August. Apple has attributed the move to changes in the shopping mall's landscape. China remains a crucial market for Apple, hosting around 56 retail stores. This accounts for over 10% of its global footprint. The DPIIT has signed a pact with electric vehicle maker Ather Energy to strengthen the EV manufacturing ecosystem. The collaboration will include skill development drives and talent programs for startups. This pact also includes strategic mentorship for startups developing core EV and battery technologies. All right, time for a short break. Coming up next, Home Minister Amit Shah tells Parliament all 3 men involved in Pahalgam terror attack have been killed in an encounter. More details when we return.
यूपी में दूसरे परिवार से मिला, पति को बीबी के सामने वो काउंटर पे कुछ खरीद रहा था, बीबी के सामने गोली मारी। दर्द होता है, हर हिंदुस्तानी को दुख होता है, दर्द होता है। जो हुआ गलत हुआ, सबने कंडेम किया। स्पीकर सर, राजनीतिक काम करते हुए हम पूरे देश में जाते हैं, घूमते हैं, लोगों से मिलते हैं, दुख में सुख में। जब भी मैं फोर्सेस के किसी भी व्यक्ति से मिलता हूं, जैसे ही मैं हाथ मिलाता हूं, और ये आपको भी फील हुआ होगा, जैसे ही मैं हाथ मिलाता हूं मुझे पता लग जाता है कि ये हिंदुस्तान की फोर्सेस सेना का आदमी है। हाथ जैसे मिलाता है मुझे पता लग जाता है कि ये टाइगर है, इसको हिलाया नहीं जा सकता, ये देश के लिए मर जाएगा, सीधा खड़ा रहता है। इसको कहीं भी भेज दो, ये देश के लिए लड़ने के लिए, मरने के लिए तैयार रहता है। सर, टाइगर को पूरी फ्रीडम देनी पड़ती है। टाइगर को आप बांध नहीं सकते हो। अगर आपने टाइगर से सच्चा काम लेना है, पूरा काम लेना है, तो आपको टाइगर को पूरी छूट देनी पड़ेगी। सर, दो शब्द हैं, एक पॉलिटिकल विल और दूसरा फ्रीडम ऑफ ऑपरेशन। मतलब अगर आप हिंदुस्तान की सेना, एयरफोर्स, नेवी का प्रयोग करना चाहते हो, आपके पास सबसे पहले 100% पॉलिटिकल विल होनी चाहिए, और दूसरा, अगर आप सेना का प्रयोग करना चाहते हो तो आपको फुल फ्रीडम ऑफ ऑपरेशन देना पड़ेगा। राजनाथ सिंह जी ने अपने भाषण में कल 1971 और सिंदूर का कंपैरिजन किया, और मैं उनको याद दिलाना चाहता हूं, 1971 में पॉलिटिकल विल थी, इंडियन ओशन में 7th फ्लीट आ रही थी, हिंदुस्तान की ओर आ रही थी, और उस समय के प्रधानमंत्री ने कहा, हमें जो बांग्लादेश में करना है हम करेंगे, आप आ जाओ, जितना आना है आ जाओ, हम करेंगे। पॉलिटिकल विल, विदाउट एनी कंफ्यूजन। सुपर पावर ऑफ द वर्ल्ड इज कमिंग with its aircraft carriers, hundreds of aircraft, political will. The Prime Minister of India says, we don't care. Come. But हमारा जो काम है हम उसे पूरा करेंगे। जनरल मानेकशॉ ने इंदिरा गांधी जी से कहा कि मैं ऑपरेशन गर्मी में नहीं कर सकता हूं, नहीं करूंगा, मुझे 6 महीने चाहिए। इंदिरा गांधी जी ने उन्हें कहा, आपको 6 महीने चाहिए, 1 साल चाहिए, जितना भी आपको समय चाहिए आप लीजिए, क्योंकि आपको फ्रीडम होनी चाहिए, फ्रीडम ऑफ एक्शन आपको होना चाहिए, फ्रीडम ऑफ मैनूवर आपका होना चाहिए। 1 लाख पाकिस्तानी सोल्जर सरेंडर किए, एक नया देश बना। सर, लेट अस Now move to Operation Sindoor. Yesterday I watched Rajnath Singh ji ka bhashan mein sun raha tha. And I listened quite carefully when people speak. And Rajnath Singh ji said that Operation Sindoor began at 1:05 in the morning. और उसके बाद उन्होंने कहा, he said, Operation Sindoor lasted 22 minutes. And then he said the most shocking thing. He said at 1:35, we called Pakistan. We called Pakistan at 1:35 and we told them that we have hit non-military targets and we do not want escalation. These are the words of the Defense Minister of India. Now maybe he does not understand what he revealed. The DGMO of India was told by the government of India to ask for a ceasefire at 1:35 at night itself, on the night of Operation Sindoor. You told the Pakistanis exactly what you would do. You told them that we will not hit military targets. You told them we do not want escalation. Speaker sir, you imagine, दो लोगों के बीच में लड़ाई हो रही है. दो लोगों के बीच में लड़ाई हो रही है. एक आदमी जाके दूसरे को घूंसा मारता है और फिर कहता है, देखिए मैंने घूंसा मार दिया, अब एस्केलेशन नहीं कीजिए. मतलब आपने पाकिस्तान को डायरेक्टली अपनी पॉलिटिकल विल बता दी कि आपके पास लड़ने की पॉलिटिकल विल है ही नहीं, कि आप लड़ना ही नहीं चाहते हो. और ये डिफेंस मिनिस्टर ने कहा है कि हमने, डिफेंस मिनिस्टर यहां हाउस में कह रहे कि हमने पाकिस्तान से जाके कहा कि हमने आपको एक झापड़ मारा है, मगर हम आपको और झापड़ नहीं मारेंगे. हम एस्केलेशन नहीं चाहते हैं, आप रिस्पॉन्ड नहीं कीजिए और हम मिलिट्री टारगेट नहीं मारेंगे. मीनिंग द गवर्नमेंट ऑफ इंडिया informed the government of Pakistan that we have no political will. We don't want to fight. We have done this. We have just done this action. Surrender. Immediate surrender in 30 minutes. Yes. Now there is a second very important thing that Rajnath Singh ji said. Maybe he didn't mean to say this. He also said that he told the Pakistanis that we are not going to hit any of your military infrastructure. Now this is a very interesting fact, because, and I want you to listen carefully to this, I said freedom of maneuver, meaning freedom to the Air Force. Now listen to this quote very carefully. Captain Shiv Kumar, Defense Attaché, Indonesia, he says, I may not agree with him that India lost so many aircraft, but I do agree that we did lose some aircraft. And that happened only because, of the constraint given by the political leadership to not attack the military establishment and their air defense. Meaning you went into Pakistan, you attacked Pakistan, and you told our pilots, do not attack their air defense system. Meaning you told our pilots, go and attack and face the air defense system of Pakistan. Meaning you tied their hands behind their back. Right? And the defense minister has said this in Parliament House itself, that we told the Pakistanis that we are not going to attack their infrastructure. इन्होंने बोला पब्लिकली हाउस में कि भैया हम आपके जो मिलिट्री इंफ्रास्ट्रक्चर है, आपके एयर डिफेंस सिस्टम को हम नहीं अटैक करेंगे, और दूसरे साइड से आप हमारे पायलट भेज रहे हो, क्या होगा? हवाई जहाज गिरेंगे, राइट? सो द पॉइंट इज, aircraft were lost, as this gentleman Shiv Kumar says. They were lost because of the constraint given by the political leadership to not attack the military and air defense infrastructure of the Pakistan. मतलब आपने शुरू किया और शुरुआत में आपने उनको कह दिया कि भैया हमारे पास ना पॉलिटिकल विल है और ना हम आपके मिलिट्री इंफ्रास्ट्रक्चर पर अटैक करेंगे, और फिर आपने हमारे पायलट से कहा जाके लड़ाई करिए, और नतीजा सारों को मालूम है। आप जवाब नहीं देना चाहते हो, मगर नतीजा सारों को मालूम है। अनिल चौहान जी कहते हैं, what was important was not the jet being down, but why they were being down. मतलब वो कह रहे हैं कि जरूरी सवाल ये है कि जेट गिरे क्यों। वो कह रहे गिरे तो ठीक है, मगर जरूरी सवाल है गिरे क्यों। और फिर उसके बाद कहते हैं what mistakes were made. The good part is we were able to understand the tactical mistake which we made, remedy, rectify and implement after 2 days. And we flew all our jets again, targeting at long range. I want to tell CDS Anil Chauhan ji that you made no tactical mistake. The Indian Air Force made no mistake. The mistake was made by the political leadership that said you cannot attack the military infrastructure. And Anil Chauhan ji must have the guts to say this. That my hands were tied behind my back and I was sent into a war, and my enemy was told by my own government that we will not attack your air defense system. So the Air Force is not to blame at all. In the 21st century, you send aircraft into a zone protected by air defense, they will come down. Now why? Why was the Pakistani government told at 1:35 that हम ना आपके इंफ्रास्ट्रक्चर को अटैक करेंगे, ना आपके एयर डिफेंस को अटैक करेंगे, और हम एस्केलेशन नहीं चाहते? मतलब हमने आपको थप्पड़ मारा है मगर दूसरा थप्पड़ नहीं मारेंगे. That is what it means. When we say we don't want escalation, it means मैंने एक थप्पड़ मारा, दूसरा नहीं मारूंगा, तीसरा नहीं मारूंगा, चौथा नहीं मारूंगा. Why? Because the goal of this exercise was to protect the Prime Minister's image. The goal of the exercise, because he has the blood of the people of Pahalgam on his hands, the goal of the exercise was to make sure that he used the Air Force to protect his image. After that, Donald Trump has said 29 times. 29 times he said, 29 बार उन्होंने बोला कि भैया मैंने सीज फायर करवाया. अच्छा, अगर वो झूठ बोल रहे हैं तो अपने भाषण में यहां प्रधानमंत्री कह दें कि वो झूठ बोल रहे हैं. यहां पे अगर दम है तो यहां पे प्रधानमंत्री बोल दे कि ट्रंप झूठ बोल रहे हैं. If he has the courage, if he has the courage of Indira Gandhi, let him say here, that Donald Trump, you're a liar. That you did not make us cease fire, and that we did not lose any planes. Let him say it here. If he has the courage. 50% भी है इंदिरा गांधी का तो यहां बोल दे. 50% होगा तो बोल देंगे, सॉरी. सर एक साइड से 7th फ्लीट आ रही है, बोलने दीजिए सर, सर मजा आ रहा है।
ऐसा नहीं
सर अभी तो अभी तो मैंने ओपनिंग नहीं किया सर,
आपका समय
अभी तो मैं सेट हो रहा हूँ,
समय है आपका कम,
अभी सेट हो रहा हूँ सर, थोड़ी ढील दीजिए। अगर दम है, अगर सचमुच में दम है, तो आज शाम यहां प्रधानमंत्री को कह देना चाहिए डोनाल्ड ट्रंप इज अ लायर, झूठ बोल रहा है डोनाल्ड ट्रंप। सर एक नई चीज चली है, एक नया शब्द चला है, न्यू नॉर्मल। कि न्यू नॉर्मल है, एक्सटर्नल अफेयर्स मिनिस्टर नहीं है बट वो यूज करते हैं। भाषण में उन्होंने कहा कि सारे के सारे देशों ने टेररिज्म को कंडेम किया है। एब्सोल्युटली 100% करेक्ट। मगर उन्होंने यह नहीं बताया कि पहलगाम के बाद एक भी देश ने पाकिस्तान को नहीं कंडेम किया है। Not a single country has condemned Pakistan. Everybody has condemned terrorism. What does it mean? That the world is equating us with Pakistan. Earlier, when the UPA government was there, it was very clear Pakistan is promoting terrorism. And they used to condemn Pakistan for promoting terrorism. Now, not a single country has condemned. Achha, very interesting, another fact. I mean, sometimes this external affairs minister amazes me. Chok jata hu main. He says that now even defense minister, we have deterred Pakistan. Achha, you have deterred Pakistan? Fine. The man behind Pahalgam is a Pakistani general called General Munir, Chief of Army Staff. That man is having lunch with the President of the United States. He is sitting there. Our Prime Minister cannot go there. Mr. Trump is breaking all protocol, and he's inviting the man who has done terrorism in India to have lunch with him. Prime Minister hasn't said anything. Prime Minister has not said, how dare Mr. Trump invite Mr. Munir to his office?
माननीय सदस्य इसको माननीय सदस्य
Now let me say what Donald Trump has to say.
माननीय सदस्य ये सदन
let me say what Donald Trump has to say.
सदस्य ये सदन की संपत्ति है,
Sorry,
इसको
sir.
मत तोड़ो।
Sorry sir, गलती हो गई। Now we have, according to this government, they have deterred Pakistan, and the mastermind of the whole operation had lunch with the president. Mastermind. After that, the President of the United States says, reason I had him here was I wanted to thank him. I wanted to thank him for what? I wanted to thank him for not going into the war and ending it. Let me repeat it. The reason I had him here for lunch was I wanted to thank him, the man who carried out Pahalgam. I wanted to thank him for not going into the war and ending it.
Shame, very shame.
Now, currently, General Munir, US General Michael Kurilla, head of their command structure, and generals from 4 Central Asian countries right now are having a conference on how to prevent terrorism. Right now. So while these people are running around telling the world that Pakistan has done terrorism, the United States is having lunch with the man and organizing and trying to figure out how he can help them fight terrorism. I mean, which planet is the foreign minister sitting on? Like, please come down. I don't know where you are. Come down. You have flown off somewhere, right? The second thing, new normal. New normal is the chief architect of Pahalgam is having lunch with the President of the United States. New normal. Now there's another new normal. There's another new normal. Fantastic idea. I don't know whose it was. At the end of the operation, by the way, the operation is still going on. They have declared victory, but it's still going on. Right? At the end of the exercise, they say, the government of India says, any act of terror is an act of war. Now, do you understand what this statement is saying? What this statement is saying is that any terrorist now who wants to make India fight a war has just got to do one attack in India. मतलब आपने पूरी की पूरी पावर आतंकवादियों को उठा के दे दी कि भैया आपको युद्ध चाहिए ना, आप एक अटैक कर दो, युद्ध हो जाएगा. It's craziness. You have taken the entire idea of deterrence and turned it upside down. Right? So today, no, one second, you're laughing. Tell me something. The next terror attack that happens, what will you do? What will you do? You'll attack Pakistan again? So now, the moment they know that you're going to attack Pakistan, they just have to do a terror attack and they know you're going. So, this government is clueless even about what deterrence means. Right? This government is clueless about what political will means. This government is clueless about what it means to let the Army, Air Force, Navy fight. That's the reality of the situation. Now, I said in this house, standing right here, about 3-4 months back, and they laughed at me. They laughed at me. I said that please understand that India's biggest foreign policy challenge has been to keep Pakistan and China separate. And I said here that I am sad to say that you have destroyed the single biggest, most important goal of Indian foreign policy. China and Pakistan are fused like this. Okay? Now let me tell you what that means. Well, let me tell you what that means. It means, sir, अगर आप समझना चाहते हैं मैं समझा दूंगा थोड़ी देर बाद. Please. समझा दूंगा सर. Please आप समझा दूंगा तो बैठ जाएंगे सर. Don't worry, I'm ready to do it. What happened actually, the truth of what happened, because I have to say that. What happened is that the government of India thought they were fighting Pakistan. And when they arrived, they suddenly realized that they were not fighting Pakistan, they were fighting China and Pakistan. Yes. Meaning that the Pakistani army was attached. Pakistani Air Force was attached to the Chinese Air Force. And not only that, the doctrine of the Pakistani Air Force was completely changed. The information available to the Pakistani Air Force was completely changed. And the Chinese were feeding information, critical battlefield information, satellite information, targeting information to the Pakistanis. And if you don't believe me, one second. If you don't believe me, General Rahul Singh, during a FICCI event, May 11th, when the DGMO level talks were going on, Pakistan actually was mentioning, we know that you such and such important vector is primed and ready for action. I would request you to perhaps pull it back. And he says, So it is very clear they were getting live battlefield inputs from China. If you had listened to me here, you would not have lost those 5 planes. If you had listened to me and you had said that yes, the Chinese and the Pakistanis are fused, sir, EM, External Affairs Minister says yesterday in his speech, he says the two-front war concept is a very old concept. I don't know what he's talking about. The two-front war concept is gone. It doesn't exist anymore. There is now a unified front concept where there is only one unified single front, and war is going to be held on multiple domains: space, electromagnetic, cyber, undersea, air, space, air, land, sea. So he does not even understand the basics of warfare. He's talking about two-front. That ship has sailed long ago. Speaker, sir, how did this integration between Pakistan and China take place? I want to make it clear. There is a center called CENTIAC, Center for AI and Computing, that was built in Pakistan with Chinese help. That was built in Pakistan with Chinese help. And the aim of the center is to integrate the Pakistani Air Force with the Chinese Air Force and make and transform the Pakistani Air Force into a network-centric Air Force. Speaker, sir, as I speak, and since 2021, Pakistani officers, strategic officers, have been embedded in the PLA's Western and Northern Theatre Commands. They are sitting there, coordinating. So it is important to understand that you did not have political will, that you did not give freedom of maneuver. But there is another problem. And the problem is that we are now facing not just China, not just Pakistan, but China and Pakistan fused as one militarily. Speaker, sir, it is dangerous in this time for the Prime Minister to use the forces to protect his image. It is dangerous for the country. The forces should only be used in national interest. The forces should be used with freedom. If you want them to be used, you want to unleash a tiger, free him. Do not tie his hands behind his back. Do not go to the Pakistanis and say, listen, don't escalate. Then go all the way. Then fight properly and defeat them once and for all. Don't have President Trump tell you that I have stopped the war 29 times. Have the courage to tell him, no, to hell with you. You can't stop any war. We're going to fight. Speaker, sir, there is also I don't mean to keep mentioning External Affairs Minister, but it comes up because he's central to this discussion. I want to finish by telling you about something he said that shows the complete bankruptcy of the foreign policy of this government. Please remember that not a single neighboring country, not a single country condemned Pakistan. Not one. They condemned terrorism, they didn't condemn Pakistan. This is something that he didn't say. Now listen to what he has to say. And this shows you the mindset of these people. This explains why in his entire discussion yesterday of 1 hour, the defense minister did not say the word China. This explains it. And let me read the quote from the External Affairs Minister. Look, they, China, are the bigger economy. What am I going to do? As a smaller economy, am I going to pick a fight with the bigger economy? It is not a question of being reactionary. It is a question of common sense. Meaning he is scared. Meaning he is scared. And this is the point. The point is that we are now facing in front of us Chinese and Pakistani fusion. And it is a very dangerous time. As you can see, it is a very dangerous time. And we cannot afford a prime minister who does not have the courage to use the army the way it has to be used. We cannot afford a prime minister who does not have the guts to say from here that Donald Trump is a liar. He didn't stop India from fighting. He's lying about the planes.
Okay.
We need a prime minister who completely frees the army, frees the air force, frees the navy and says, go, khatam karo kaam ko, like Indira Gandhi did. Thank you, Speaker Sir. I'd like to end by saying this entire discussion is about the people who died in Pahalgam. It is a tragedy, and it was very disturbing to me, again yesterday, where they were talking about everything. They were talking about Pakistan, they were talking about everything, but they did not mention the people who died in Pahalgam. So let me finish.
Finishing. Otherwise, you are not allowing, sir, LOP. Only this time, only allowing. Other time, mic is not allowed.
Sir, do not allow India to be reduced to a battlefield where large powers are fighting. We have to navigate. We have to protect our interest. Second, to the Prime Minister, the nation is above your image, above your politics, and above your PR. The forces are above your PR, your image, and your politics. Have the humility to understand that. Have the dignity to understand that. And do not sacrifice the armed forces and national interest for your own petty political gains. Thank you, sir.
सभा की कार्रवाई इस विषय की समाप्ति तक बढ़ा दी जाए। डॉक्टर संबित पात्रा।
leadership begins. Future Female Forward was created to hold this data in view. We began by spotlighting ambition in season 1, and in Mumbai, we opened the 3rd season with a clear focus, building durable systems for gender equity. Tonight in Bengaluru, we continue that work, and in a place where systems move fast, we're here to ask, are they moving fair? And with that, to take us deeper into this evening, please welcome CNBC TV18's Managing Editor, Shireen Bhan, for the opening address. Good evening, ladies and gentlemen, and welcome to the Bengaluru edition of Future Female Forward. It's absolutely fabulous to see a room full of women. This is the 3rd edition, as I pointed out, and Bengaluru's entrepreneurial energy is matched by the ambition of the women in this room, and I can safely say the energy is truly electrifying. I don't even think we need the lights. I think we can light up this room. So give yourselves a big round of applause, and thank you so much for being here this evening. You know, as Shruti was pointing out, this is a city that doesn't wait for change to happen. It builds it. It makes it happen. And driving change has been at the heart of why we do Future Female Forward. I was having a conversation with an old friend of mine. We've known each other since we were 15, and we were having this conversation last night. And while we were lamenting about our need for glasses and our slowing metabolism, we realized that growing up, no one prepared us for the world that we would encounter. There was no conversation about navigating the challenges of a workplace designed for and by men. There were no conversations about coping with the self-doubt and guilt that so many of us carry, sometimes even unknowingly. And our conversation was the perfect reminder for why we started Future Female Forward 3 years ago. We wanted to create a community of diverse women. You see that in full flow in this room today. We wanted to create a platform that encourages conversation, that acknowledges the challenges and constraints we face, and attempt to find real solutions to drive change. Unfortunately, when it comes to gender equity, the default systems continue to hold strong even today. Future Female Forward is our attempt at interrogating the architecture that clips ambition. We didn't ask how many women were in the room. We asked, were they being heard? Who was getting funded? Who was being trusted with succession? In Mumbai, that's where we took Future Female Forward earlier this year, we codified that lens with the Close the Gap Gender Parity Index that's been developed in partnership with Udayti Foundation. Tonight, we bring both to Bengaluru, a city where entrepreneurs are designing solutions at population scale. But even here, where India's growth is engineered and accelerated, we are forced to ask the question, growth for whom? Leadership by whom? And design in whose image? As Martha Nussbaum said, I'm not interested in passive equality. I'm interested in the design of institutions, who they reward, who they exclude, and who they prepare to lead. Her words feel essential tonight because we need to reimagine our idea of inclusion and design for it. From AI to aerospace, from quantum technologies to public digital infrastructure, this city operates on the edge of innovation. It accounts for nearly 40% of India's startup capital and powers some of the most advanced public-private corridors in the world. Yet beneath that momentum lies a complex reality. In India, women-founded startups receive just 2.3% of total venture capital funding. That's a stark gap documented by a 2023 Bain and Google report. But by the way, the picture isn't very different globally either, and that figure remains under 3%. Now, the typical response is to assume that women lack the chops to create scalable businesses. Nothing is further from the truth, and you'll hear from many women who've done exactly that later this evening. One of the challenges that Shruti also talked about today is the fact that while we onboard women into the workforce, we don't get them to stay on. Mid-career women exit because they lack, not because they lack skills, but because the system does not have an adequate return path for them. And the numbers speak for themselves. Only 4.7% of NSE-listed Indian companies have women CEOs. Tech sector onboards 33% at the entry level, but that number drops to 17% at the mid-senior levels. Of the 1.2 billion in private equity raised in 2025, in the first half itself, under 6% has gone to women-founded firms. In India's EV and electronic clusters, the sunrise sector, so to speak, largely headquartered here in Karnataka, women comprise only 11 to 15%, suggesting significant underrepresentation across different parts of the organization. These are pipelines that are choked by structural bias, and they're not anomalies. They reflect a pattern where systems continue to function as they were originally designed, for men. And that is why Future Female Forward was built as an editorial scan, a checkpoint for sharper questions. Are institutions preparing women to lead? Are systems being scaled with equity built into the framework? And when excellence emerges, are we replicating that or are we exceptionalizing it? The answers are written in the lives and leadership of the women that we will honor here tonight. From research labs to the military service, to caregiving networks and vineyards, from rescue coalitions to entrepreneurship, the stories we spotlight today don't just reflect resilience, they reflect redesign, often unspoken, but always structurally significant. Tonight, you will see diversity in action, from skaters who move with surgical precision to biochemists reprogramming design and disease detection. From AI builders to mine rescuers, the spectrum of leadership on this stage is matched only by the sophistication of the systems that they're shaping. The ambition of the platform is to bring structural clarity, to recognize that equity must be written into the earliest draft of every system that seeks to scale. So we begin tonight's proceedings with focusing on exactly that. What does leadership truly need to do today? What is the demand? What is the ask of leadership today? It requires redesign, it requires reimagination, and that is what we're hoping to do and consistently continue to invest behind it. The stories we honor tonight are blueprints for what becomes possible when ambition is truly supported early and trusted structurally. So if you're still wondering what this moment truly asks of us, I leave you with the words of Simone Weil. We're not here to share power. We are here to rewrite what power truly means. So here's to all the women who are living life with curiosity, enthusiasm, and ambition. May the force be with us. Thank you very, very much, ladies and gentlemen. It's been an absolute pleasure to share this evening with you, and we look forward to an absolutely brilliant evening ahead. Thanks very much once again.
Thank you, Shireen, for laying down the questions that matter, and request you to kindly remain on stage with us. Now, to pick up that thread of what it takes to move from vision to institutional change, we are joined now by someone who's been a steady partner to this platform and the idea of equity as infrastructure. On this note, let's welcome on stage Mr. Hitendra Dave, the CEO of HSBC India, and let's understand from him what it takes to build frameworks that include women and also trust them to lead. Over to you, Shireen.
Thank you. Well, ladies and gentlemen, as is very clear, we also didn't want this community to be women talking to other women. We wanted to engage with the men because at this point in time, they are the ones across different organizations in the decision-making roles. And so we're very lucky to have an ally in Hitendra Dave and HSBC, and they've been our partners, steadfast partners over the last 3 years. Dave, it's great to have you back with us here in Bengaluru. A lot of momentum over the last 3 years. You know, as you look back at the journey that we've made, but more importantly, look forward, you know, where do you believe we are and what do you believe we need to accomplish?
Well, thank you. It's great to be back here, and good evening to everyone. I wish I could say we have changed the world in the last 3 years, and that inclusion is there in reality, in letter and spirit. But I think every time we've got together on this subject, in front of the cameras and outside the cameras, I think we all recognize that this is a multi-year, if not a multi-decadal journey. I just want to be realistic about this. But hopefully with each season, each year, each conversation, you know, every time you hear these wonderful stories, I remember, I think it was in Bangalore only when Mrs. Borwankar, shared her wonderful story and the kind of courage she spoke about, right, as a police officer, as a woman police officer, and where she actually said that looking away is as much as a crime. And so, that story just comes to my mind. So I think in the last 3 years, hopefully, we've started the conversation. Hopefully, many companies go back, many employers go back, many leaders go back thinking, yes, I need to do this. Let me figure out the how. And each year, as we make incremental percentage-wise progress, I think HSBC will feel good about the fact that we played our small role in having these conversations.
Well, it's not a small role at all. It's a pretty big role because, as I keep saying, the tragedy is that very often these conversations tend to happen on one day, on the 8th of March, when everybody crawls out of the woodwork to talk about why women matter and why women should matter. So what we've tried to do is to mainstream this conversation, and it is our third year, and we intend to continue to do that. So it's not, as you pointed out, it's not something that can happen overnight. It needs to continue to be hammered away, and we need to keep chipping at the messaging. But, as you look at what's happening around the world today, Dave, and there is a retreat from the ideas of inclusion, from the idea of equity. Does that concern you? Does that worry you?
I think every decision, every action will have some background to it, right? So I think as we all, and 100% of this hall, I'm sure, and hopefully hundreds and thousands of people on the television who are watching the television, I think almost nobody in their right mind can dispute this. Yeah. Okay? But how to go about it is a topic of debate, and we shouldn't run away from that as well. So I think there was a period of time where if everybody agreed with me and you, then that person was we wouldn't need to do this. Yeah. Yeah, but what I'm trying to say is that if they agreed with it, then they were a good person. And if they said we agree, but we don't agree with the speed or the manner in which you're going about it, then they were called a bad person. So, and I think when we, as people who are like-minded, people who want to...
संसद का ये सत्र भारत के गौरवगान का सत्र है। आदरणीय अध्यक्ष जी, जब मैं विजयोत्सव की बात कर रहा हूं, तब मैं कहना चाहूंगा कि ये विजयोत्सव आतंकी हेडक्वार्टर्स को मिट्टी में मिलाने का है। जब मैं विजयोत्सव कहता हूं, तो ये विजयोत्सव सिंदूर की सौगंध पूरा करने का है। मैं जब ये विजयोत्सव कहता हूं, तो ये भारत की सेना के शौर्य और सामर्थ्य का विजय गाथा कह रहा है। जब मैं विजयोत्सव कह रहा हूं, तो 140 करोड़ भारतीयों की एकता, इच्छा शक्ति, उसके एक अप्रतिम जीत का विजयोत्सव की बात करता हूं। आदरणीय अध्यक्ष जी, मैं इसी विजय भाव से इस सदन में भारत का पक्ष रखने के लिए खड़ा हुआ। और जिन्हें भारत का पक्ष नहीं दिखता है, उन्हें मैं आईना दिखाने के लिए खड़ा हुआ। आदरणीय अध्यक्ष जी, मैं 140 करोड़ देशवासियों की भावनाओं में अपना स्वर मिलाने के लिए उपस्थित हुआ हूं। ये 140 करोड़ देशवासियों की भावना के जो गुंज है, जिस सदन में सुनाई दी है, मैं उसे अपना एक स्वर मिलाने खड़ा हुआ। आदरणीय अध्यक्ष जी, ऑपरेशन सिंदूर के दरमियान जिस प्रकार से देश के लोगों ने मेरा साथ दिया, मुझे आशीर्वाद दिए, देश की जनता मुझ पर कर्ज है। मैं देशवासियों का आभार व्यक्त करता हूं। मैं देशवासियों का अभिनंदन करता हूं। आदरणीय अध्यक्ष जी, 22 अप्रैल को पहलगाम में जिस प्रकार की क्रूर घटना घटी, जिस प्रकार आतंकवादियों ने निर्दोष लोगों को उनका धर्म पूछ करके गोलियां मारी, ये क्रूरता की पराकाष्ठा थी। भारत को हिंसा की आग में झोंकने का ये सुविचारित प्रयास था। भारत में दंगे फैलाने की ये साजिश थी। मैं आज देशवासियों का धन्यवाद करता हूं कि देश ने एकता के साथ उस साजिश को नाकाम कर दिया। आदरणीय अध्यक्ष जी, 22 अप्रैल के बाद मैंने एक सार्वजनिक रूप से और विश्व को समझ में आए इसलिए कुछ अंग्रेजी में भी वाक्यों का प्रयोग किया था और मैंने कहा था ये हमारा संकल्प है, हम आतंकियों को मिट्टी में मिला देंगे। और मैंने सार्वजनिक रूप से कहा था सजा उनके आकाओं को भी होगी और कल्पना से भी बड़ी सजा मिलेगी। 22 अप्रैल को मैं विदेश था, मैं तुरंत लौट के आया और आने के तुरंत बाद मैंने एक बैठक बुलाई और उस बैठक में हमने साफ साफ निर्देश दिए कि आतंकवाद को करारा जवाब देना होगा और ये हमारा राष्ट्रीय संकल्प है। आदरणीय अध्यक्ष जी, हमें हमारे सैन्य बलों की क्षमता पर पूरा विश्वास है, पूरा भरोसा है उनकी क्षमता पर, उनके सामर्थ्य पर, उनके साहस पर। सेना को कार्रवाई की खुली छूट दे दी गई और यह भी कहा गया कि सेना तय करें कब, कहां, कैसे, किस प्रकार से। ये सारी बातें उस मीटिंग में साफ साफ कह दी गई और कुछ बातें उसमें से मीडिया में शायद रिपोर्ट भी हुई है। हमें गर्व है आतंकियों को वो सजा दी और सजा ऐसी है कि आज भी आतंक के उन आकाओं की नींद उड़ी हुई है। आदरणीय अध्यक्ष जी, मैं हमारी सेना की सफलता के उससे जुड़े भारत के उस पक्ष को सदन के माध्यम से देशवासियों के सामने रखना चाहता हूं। पहला पक्ष, पहलगाम हमले के बाद से ही पाकिस्तानी सेना को अंदाजा लग चुका था कि भारत कोई बड़ी कार्रवाई करेगा। उनके तरफ से न्यूक्लियर की धमकियों के भी बयान आना शुरू हो चुके थे। भारत ने 6 मई रात और 7 मई सुबह जैसा तय किया था वैसी कार्रवाई की और पाकिस्तान कुछ नहीं कर पाया। 22 मिनट में 22 अप्रैल का बदला निर्धारित लक्ष्य के साथ हमारी सेना ने ले लिया। दूसरा पक्ष, आदरणीय अध्यक्ष जी, पाकिस्तान के साथ हमारी लड़ाई की तो कई बार हुई है, लेकिन ये पहली ऐसी भारत की रणनीति बनी कि जिसमें पहले जहां कभी नहीं गए थे वहां हम पहुंचे। पाकिस्तान के कोने कोने में आतंकी अड्डों को धुआं धुआं कर दिया गया। आतंक के गढ़ कोई सोच नहीं सकता कि वहां तक कोई जा सकता है। बहावलपुर और मुर्ग के उसको भी जमीन दोस्त कर दिया गया। आदरणीय अध्यक्ष जी, हमारे सेनाओं ने आतंकी अड्डों को तबाह कर दिया। तीसरा पक्ष, पाकिस्तान की न्यूक्लियर धमकी को हमने झूठा साबित कर दिया। भारत ने सिद्ध कर दिया कि न्यूक्लियर ब्लैकमेलिंग अब नहीं चलेगा और न ही ये न्यूक्लियर ब्लैकमेलिंग के सामने भारत झुकेगा। आदरणीय अध्यक्ष जी, चौथा पक्ष, भारत ने दिखाई अपनी तकनीकी क्षमता। पाकिस्तान के सीने पर सटीक प्रहार किया। पाकिस्तान के एयरबेस एसेट्स को भारी नुकसान हुआ और आज तक उनके कई एयरबेस आईसीयू में पड़े हैं। आज टेक्नोलॉजी आधारित युद्ध का युग है। ऑपरेशन सिंदूर इस महारत में भी सफल सिद्ध हुआ है। अगर पिछले 10 साल में जो हमने तैयारियां की हैं वो न की होती तो इस तकनीक के युग में हमारा कितना नुकसान हो सकता था, इसका हम अंदाज लगा सकते हैं। पांचवा पक्ष, ऑपरेशन सिंदूर के दरमियान पहली बार हुआ जब आत्मनिर्भर भारत की ताकत को दुनिया ने पहचाना है। मेड इन इंडिया ड्रोन, मेड इन इंडिया मिसाइल ने पाकिस्तान के हथियारों की पोल खोल करके रख दी। आदरणीय अध्यक्ष जी, और भी एक महत्वपूर्ण काम जो हुआ है, वैसे जब राजीव गांधी जी थे उस समय उनके जो एक डिफेंस का काम देखने वाले अमोस थे, उन्होंने जब मैंने सीडीएस की घोषणा की तो वो बहुत प्रसन्न होकर के मुझे मिलने आए थे और बहुत बहुत प्रसन्न थे वो। इस समय ऑपरेशन में नेवी, आर्मी, एयरफोर्स, तीनों सेनाओं का जॉइंट एक्शन, इसके बीच की सिनर्जी, इसने पाकिस्तान के छक्के छुड़ा दिए। आदरणीय अध्यक्ष जी, आतंक की घटनाएं पहले भी देश में होती थी, लेकिन पहले आतंकवादियों के मास्टरमाइंड निश्चिंत होते थे और वो आगे की तैयारी में लगे रहते थे, उनको पता था कुछ नहीं होगा। लेकिन अब स्थिति बदल गई है। अब हमले के बाद मास्टरमाइंड को नींद नहीं आती। उनको पता है कि भारत आएगा और मार के जाएगा। ये न्यू नॉर्मल भारत ने सेट कर दिया है। आदरणीय अध्यक्ष जी, दुनिया ने देख लिया कि हमारी कार्यवाही का दायरा कितना बड़ा, स्केल कितना बड़ा। सिंदूर से लेकर के सिंधु तक पाकिस्तान पर कार्रवाई की है। ऑपरेशन सिंदूर ने तय कर दिया कि भारत में आतंकी हमले की, उसके आकाओं को और पाकिस्तान को भारी कीमत चुकानी पड़ेगी। अब ऐसे ही नहीं जा सकते। आदरणीय अध्यक्ष जी, ऑपरेशन सिंदूर से स्पष्ट होता है कि भारत ने 3 सूत्र तय किए हैं। अगर भारत पर आतंकी हमला हुआ तो हम अपने तरीके से, अपनी शर्तों पर, अपने समय पर जवाब दे करके रहेंगे। दूसरा, कोई भी न्यूक्लियर ब्लैकमेल अब नहीं चलेगा। और तीसरा, हम आतंक की सरपरस्त सरकार और आतंक के आकाओं, उनको अलग अलग नहीं देखेंगे। आदरणीय अध्यक्ष जी, यहां पर विदेश नीति को लेकर के भी काफी बातें कही गई हैं। दुनिया के समर्थन को लेकर के भी काफी बातें कही गई हैं। मैं आज सदन में कुछ बातें पूरी स्पष्टता से कह रहा हूं। दुनिया में किसी भी देश ने भारत को अपनी सुरक्षा में कार्रवाई करने से रोका नहीं है। संयुक्त राष्ट्र 193 कंट्रीज सिर्फ 3 देश 193 कंट्री में सिर्फ 3 देश ऑपरेशन सिंदूर के दौरान पाकिस्तान के समर्थन में बयान दिया था। ओनली 3 कंट्रीज। क्वाड हो, ब्रिक्स हो, फ्रांस, रूस, जर्मनी, कोई भी देश का नाम ले लीजिए, तमाम देश दुनिया भर से भारत को समर्थन मिला है। आदरणीय अध्यक्ष जी, दुनिया का समर्थन तो मिला, दुनिया के देशों का समर्थन मिला,
माननीय है,
लेकिन ये दुर्भाग्य है कि मेरे देश के वीरों के पराक्रम को कांग्रेस का समर्थन नहीं। 22 अप्रैल के आतंकी हमले के बाद 3-4 दिन में ही ये उछल रहे थे और कहना शुरू कर दिया, कहां गई 56 इंच की छाती, कहां खो गया मोदी, मोदी तो फेल हो गया। क्या मजा ले रहे थे, उनको लगता है वाह बाजी मार ली। उनको पहलगाम के निर्दोष लोगों की हत्या में भी वो अपनी राजनीति तराशते थे। अपनी स्वार्थी राजनीति के लिए मुझ पर निशाना साध रहे थे, लेकिन उनकी ये बयानबाजी, इनका छिछोरापन देश के सुरक्षा बलों का मनोबल गिरा रहा था।
माननीय प्रतिपक्ष के नेता, एक मिनट, प्रतिपक्ष के नेता आपकी बात सबने ध्यान से सुनी। आप बेटे
कांग्रेस
कर रहे हैं और
कुछ नेताओं को
से ये उचित नहीं है आपके लिए।
न भारत के सामर्थ्य पर भरोसा है और न ही भारत की सेनाओं पर, इसलिए वो लगातार ऑपरेशन सिंदूर पर सवाल उठा रहे हैं। ऐसा करके आप लोग मीडिया में हेडलाइंस तो ले सकते हैं, लेकिन देशवासियों के दिलों में जगह नहीं बना सकते। आदरणीय सभापति जी, आदरणीय अध्यक्ष जी, 10 मई को भारत ने ऑपरेशन सिंदूर के तहत हो रहे एक्शन को रोकने की घोषणा की। इसको लेकर यहां भांति भांति की बातें कही गई। ये वही प्रोपेगेंडा है जो सीमा पार से फैलाया गया है। कुछ लोग सेना द्वारा दिए गए तथ्यों की जगह पाकिस्तान के झूठ प्रचार को आगे बढ़ाने में जुटे हुए हैं, जबकि भारत का रुख हमेशा स्पष्ट रहा है। आदरणीय अध्यक्ष जी, कुछ चीजें मैं जरा स्मरण भी कराना चाहता हूं। जब सर्जिकल स्ट्राइक हुआ उस समय हमने लक्ष्य तय किया था, हमारे जवानों को तैयार करके, कि हम उनके इलाके में जाकर के आतंकियों के जो लॉन्चिंग पैड है उनको नष्ट करेंगे। और सर्जिकल स्ट्राइक, एक रात के उस ऑपरेशन में हमारे लोग सूर्योदय होते होते काम पूरा करके वापस आए। लक्ष्य निर्धारित था कि ये करना है। जब बालाकोट एयर स्ट्राइक किया तो हमारा लक्ष्य तय था कि आतंकियों के जो ट्रेनिंग सेंटर्स है इस बार हम उसको तबाह करेंगे, और हमने वो भी करके दिखाया। ऑपरेशन सिंदूर के समय हमारा लक्ष्य तय था, और हमारा लक्ष्य था कि आतंक के जो एपी सेंटर है और पहलगाम के आतंकियों को जहां से पुरजोश योजना बनी, ट्रेनिंग मिली, व्यवस्था मिली, उस पर हमला करेंगे। हमने उनके नाभि पर हमला कर दिया। जहां पहलगाम के आतंकियों का रिक्रूटमेंट हुआ, ट्रेनिंग होती थी, फंडिंग होता था, उन्हें टेक्निकल सपोर्ट मिलता था, शस्त्र सरंजाम मिलता था, उस जगह को आइडेंटिफाई किया और हमने सटीक तरीके से ऑपरेशन सिंदूर के तहत आतंकियों की नाभि पे प्रहार कर दिया। और आदरणीय अध्यक्ष जी, इस बार भी हमारी सेना ने 100% लक्ष्यों को हासिल करके देश के सामर्थ्य का परिचय दिया। कुछ लोग जानबूझ करके कुछ चीजें भूलने में इंटरेस्टेड होते हैं। देश भूलता नहीं है, देश को याद है। 6 रात और 7 मई सुबह ऑपरेशन हुआ था, और 7 मई को सुबह भारत ने प्रेस कॉन्फ्रेंस हमारी सेना ने की, और इस प्रेस कॉन्फ्रेंस में भारत ने स्पष्ट कर दिया था, और पहले दिन से क्लियर था कि हमारा लक्ष्य है आतंकियों के आका, आतंकियों की जो व्यवस्थाएं जहां से होती है वो, और उनके अड्डे, उनको हम ध्वस्त करना चाहते थे। और हमने प्रेस कॉन्फ्रेंस में कह दिया था, हमने हमारा काम कर दिया है, हमने जो तय किया था पूरा कर दिया है। और इसलिए 6-7 मई को ऑपरेशन हमारे यहां संतोषजनक होने के तुरंत बाद, कल जो राजनाथ जी ने कहा था, मैं डंके की चोट पर दोबारा दोहराता हूं, भारत की सेना ने पाकिस्तान की सेना को चंद मिनटों में बता दिया कि हमारा ये लक्ष्य था, हमने ये लक्ष्य पूरा कर दिया है, ताकि उनको पता चले और हमें भी पता चले कि उनके दिल दिमाग में क्या चलता है। लक्ष्य 100% हासिल कर लिया था और पाकिस्तान में समझदारी होती तो आतंकियों के साथ खुलेआम खड़े रहने की गलती न करता। उसने निर्लज्ज होकर के आतंकवादियों के साथ खड़े रहने का फैसला किया। हम पूरी तरह तैयार थे, हम भी मौके की तलाश में थे, लेकिन हमने दुनिया को बताया था कि हमारा लक्ष्य आतंकवाद है, आतंकवादी आका है, आतंकवादी ठिकाने हैं। वो हमने पूरा कर दिया। लेकिन जब पाकिस्तान ने आतंकियों की मदद में आने का फैसला किया और मैदान में उतरने की हरकत की, तो भारत की सेना ने सालों तक याद रह जाए ऐसा करारा जवाब दे करके 9 मई की मध्य रात्रि और 10 मई की एक प्रकार से सुबह हमारी मिसाइलें उन्होंने पाकिस्तान के हर कोने में प्रचंड प्रहार किया, जिसकी पाकिस्तान ने कभी कल्पना नहीं की थी और पाकिस्तान को घुटनों पर आने के लिए मजबूर कर दिया। और आपने टीवी में भी देखा है, वहां से क्या बयान आते थे। पाकिस्तान के लोग, अरे मैं तो स्विमिंग पूल में नहा रहा था, कोई कह रहा था मैं तो दफ्तर जाने की तैयारी कर रहा था। हम कुछ सोचे पहले तो भारत ने तो हमला कर दिया। ये पाकिस्तान के लोगों के बयान है और देश ने देखे हैं। स्विमिंग पूल में नहा रहा था। और जब इतना कड़ा प्रहार हुआ, पाकिस्तान ने कभी सोचा तक नहीं था, तब जाकर के पाकिस्तान ने फोन करके डीजीएमओ के सामने फोन करके गुहार लगाई, बस करो, बहुत मारा, अब ज्यादा मार झेलने की ताकत नहीं है, प्लीज हमला रोक दो। ये पाकिस्तान के डीजीएमओ का फोन था। और भारत ने तो पहले दिन ही कह दिया था, 7 तारीख सुबह की प्रेस देख लीजिए, कि हमने हमारा लक्ष्य पूरा कर दिया है, अगर आप कुछ करोगे तो महंगा पड़ेगा। और आप धीरे
ऐसे कैसे चलता है?
प्लीज मैं आज दोबारा कह रहा हूं, ये भारत की स्पष्ट नीति थी, सुविचारित नीति थी, सेना के साथ मिलकर के तय की हुई नीति थी, और वे ये थी कि हम आतंक, उनके आका, उनके ठिकाने, ये हमारा लक्ष्य है। और हमने कहा, पहले दिन प्रेस कॉन्फ्रेंस में कहा है कि हमारा एक्शन नॉन एक्सीलरेटरी है, ये हमने कह करके किया है। और इसके लिए साथियों हमने हमला रोका। अध्यक्ष जी, दुनिया के किसी भी नेता ने भारत के ऑपरेशन रोकने के लिए नहीं कहा। को अमेरिका के उपराष्ट्रपति जी ने मुझसे बात करने का प्रयास किया। वो घंटे भर कोशिश कर रहे थे, लेकिन मेरी सेना के साथ मीटिंग चल रही थी, तो मैंने उनका फोन उठा नहीं पाया। बाद में मैंने उनको कॉल बैक किया। मैंने कहा कि आपका फोन था, 3-4 बार आपका फोन आ गया, क्या है? तो अमेरिका के उपराष्ट्रपति जी ने मुझे फोन पे बताया कि पाकिस्तान बहुत बड़ा हमला करने वाला है, ये उन्होंने मुझे बताया। मेरा जो जवाब था, जिनको समझ नहीं आता है उनको तो नहीं आएगा, मेरा जवाब था अगर पाकिस्तान का ये इरादा है तो उसे बहुत महंगा पड़ेगा। ये मैंने अमेरिका के उपराष्ट्रपति को कहा। अगर पाकिस्तान हमला करेगा तो हम बड़ा हमला कर करके जवाब देंगे, ये मेरा जवाब था। और आगे मेरा एक वाक्य था, मैंने कहा था हम गोली का जवाब गोले से देंगे। ये 9 तारीख रात की बात है, और 9 रात में और 10 सुबह हमने पाकिस्तान को सैन्य शक्ति को तहस नहस कर दिया था। और यही हमारा जवाब था, यही हमारा जज्बा था। और आज पाकिस्तान भी भली भांति जान गया है कि भारत का हर जवाब पहले से ज्यादा तगड़ा होता है। उसे यह भी पता है कि अगर भविष्य में नौबत आई तो भारत आगे कुछ भी कर सकता है। और इसलिए मैं फिर से लोकतंत्र के इस मंदिर में दोहराना चाहता हूं, ऑपरेशन सिंदूर जारी है। पाकिस्तान ने दुस्साहस की अगर कल्पना की तो उसे करारा जवाब दिया जाएगा। आदरणीय अध्यक्ष जी, आज का भारत आत्मविश्वास से भरा हुआ है। आज का भारत आत्मनिर्भरता के मंत्र को लेकर के पूरी शक्ति के साथ तेज गति से आगे बढ़ रहा है। देश देख रहा है भारत आत्मनिर्भर बनता जा रहा है। लेकिन देश ये भी देख रहा है कि एक तरफ तो भारत आत्मनिर्भरता की ओर तेज गति से आगे बढ़ रहा है, लेकिन कांग्रेस मुद्दों के लिए पाकिस्तान पर निर्भर होती जा रही है। मैं आज पूरा दिन देख रहा था, जो 16 घंटे से जो चर्चा चल रही है, दुर्भाग्य से
प्लीज बैठिए, सब जवाब दे दिया आपका, आप सुनते नहीं, सबका जवाब दे दिया, प्लीज।
दुर्भाग्य से
सुनिए जवाब।
कांग्रेस को पाकिस्तान के मुद्दे इंपोर्ट करने पड़ रहे हैं। वॉरफेयर में इंफॉर्मेशन और नैरेटिव्स की बहुत बड़ी भूमिका है। नैरेटिव घड़ करके एआई का भी भरपूर उपयोग करके सेनाओं के मनोबल को कमजोर करने के खेल भी खेले जाते हैं। जनता के अंदर अविश्वास पैदा करने के भी भरपूर प्रयास होते हैं। दुर्भाग्य से कांग्रेस और उसके सहयोगी पाकिस्तान के ऐसे ही प्रपंच के प्रवक्ता बन चुके हैं। आदरणीय अध्यक्ष जी, देश की सेना ने आदरणीय अध्यक्ष जी,
ये तरीका है
देश की सेना ने
बैठिए
देश की सेना ने सर्जिकल स्ट्राइक की।
बैठिए
आदरणीय अध्यक्ष जी, देश की सेना ने सफलतापूर्वक सर्जिकल स्ट्राइक की तो तुरंत कांग्रेस वालों ने सेना से सबूत मांगे थे, लेकिन जब उन्होंने देश का मूड देखा, देश का मिजाज देखा, तो सुर उनके बदलने लगे और बदल करके क्या कहने लगे? कांग्रेस के लोगों ने कहा, ये सर्जिकल स्ट्राइक क्या बड़ी बात है, ये तो हमने भी की थी। एक ने कहा 3 सर्जिकल स्ट्राइक की थी, दूसरे ने कहा 6 सर्जिकल स्ट्राइक की थी, तीसरे ने कहा 15 सर्जिकल स्ट्राइक की थी। जितना बड़ा नेता उतना बड़ा आंकड़ा चल रहा था। आदरणीय अध्यक्ष जी, इसके बाद बालाकोट में सेना ने एयर स्ट्राइक की। अब एयर स्ट्राइक तो ऐसी थी कि वो कुछ कह नहीं सकते थे, इसलिए ये तो नहीं कहा कि भाई हमने भी की थी। उसमें तो उन्होंने समझदारी दिखाई, लेकिन फोटो मांगने लगे। एयर स्ट्राइक हुई तो फोटो दिखाओ, क्या कहां गिरा, क्या तोड़ा, कितना तोड़ा, कितने मरे, बस यही पूछते रहे। पाकिस्तान भी यही पूछता था, ये भी यही पूछते थे। इतना ही नहीं, आदरणीय अध्यक्ष जी, जब पायलट अभिनंदन पकड़े गए तो पाकिस्तान में तो खुशी का माहौल होना स्वाभाविक था कि उनके हाथ में भारत की सेना का एक पायलट उनके हाथ लगा था। लेकिन यहां पर भी कुछ लोग थे जो कानों कानों में कह रहे थे, अब मोदी फंसा, अब अभिनंदन माए, मोदी ला करके दिखा दे, अब देखते हैं मोदी क्या करता है। आज डंके की चोट पर अभिनंदन वापिस आए। तो इनकी बोलती बंद हो गई। इनको लगा यार कि नसीब वाला आदमी है, हमारा हथियार हाथ से निकल गया। आदरणीय अध्यक्ष जी, पहलगाम हमले के बाद हमारा बीएसएफ का एक जवान पाकिस्तान के कब्जे में गया तो फिर इनको लगा वाह बड़ा मुद्दा हाथ में आ गया है, अब मोदी फंस जाएगा। अब तो मोदी की फजीयत जरूर होगी और उनकी इकोसिस्टम ने सोशल मीडिया में बहुत सारी कथाएं वायरल की कि ये बीएसएफ के जवान का क्या होगा, उसके परिवार का क्या होगा, ये वापस आएगा, कब आएगा, कैसे आएगा, न जाने क्या क्या चला दिया। आदरणीय अध्यक्ष जी, बीएसएफ का वो जवान भी आन बान शान के साथ वापस आया। आतंकवादी रो रहे हैं, आतंकवादियों के आका रो रहे हैं और उनको रोते देखकर यहां भी कुछ लोग रो रहे हैं। अब देखिए सर्जिकल स्ट्राइक में सर्जिकल स्ट्राइक चल रही थी, उसके बाद उन्होंने एक खेल खेलने की कोशिश की, बात जमी नहीं। एयर स्ट्राइक हुई तो दूसरा खेल खेलने की कोशिश की, वो भी जमी नहीं। जब ये ऑपरेशन सिंदूर हुआ तो उन्होंने नया पैतरा शुरू किया और क्या शुरू किया, रोक क्यों दिया। पहले तो मानने को तैयार नहीं थे कि मुक्त करते, अब कहते रोक क्यों दिया। बाहरे बयान बहादुरों, आपको विरोध का कोई न कोई बहाना चाहिए और इसलिए सिर्फ मैं नहीं, पूरा देश आप पर हंस रहा है। आदरणीय अध्यक्ष जी, सेना का विरोध, सेना के प्रति एक पता नहीं नेगेटिविटी, ये कांग्रेस का पुराना रवैया रहा। देश ने अभी अभी करगिल विजय दिवस मनाया, लेकिन देश पूरी तरह जानता है कि उनके कार्यकाल में और आज तक करगिल के विजय को कांग्रेस ने अपनाया नहीं। न करगिल विजय दिवस मनाया है, न करगिल विजय का गौरव किया। इतिहास साक्षी है अध्यक्ष जी। जब डोकलाम में सैन्य हमारा शौर्य दिखा रहा था, तब कांग्रेस के नेता चुपके चुपके किससे ब्रीफिंग लेते थे वो सारी दुनिया अब जान गई। आप निकाल दीजिए पाकिस्तान के सारे बयान और यहां हमारा विरोध करने वाले लोगों के बयान, फुल स्टॉप कॉमा के साथ एक है। क्या कहेंगे इसको? और बुरा लगता है सच बोलते हैं तो। पाकिस्तान के साथ सुर में सुर मिला दिया जाता है। आदरणीय अध्यक्ष जी, देश हैरान है, कांग्रेस ने पाकिस्तान को क्लीन चिट दे दी है। उनकी ये हिम्मत, और इनकी आदत जाती नहीं है, ये हिम्मत कि पहलगाम के आतंकी पाकिस्तानी थे, इसका सबूत दो। क्या कह रहे हो तुम लोग? तो कौन सा तरीका है? और यही मांग पाकिस्तान कर रहा है जो कांग्रेस कर रही है। और आदरणीय अध्यक्ष जी, आज जब सबूतों की कोई कमी नहीं है, सब कुछ आंखों के सामने दिखता है, तब ये हालत है। अगर ये सबूत ना होते तो क्या करती है लोग, आप बताइए। आदरणीय अध्यक्ष जी, ऑपरेशन सिंदूर के एक पार्ट की तरफ तो चर्चा भी बहुत होती है, ध्यान भी जाता है, लेकिन देश के लिए कुछ गौरव की क्षणें होती हैं, ताकत के परिचय होता है, उसकी तरफ भी ध्यान जाना बहुत आकर्षित है। हमारे एयर डिफेंस सिस्टम दुनिया में इसकी चर्चा है। हमारे एयर डिफेंस सिस्टम ने पाकिस्तान की मिसाइल और ड्रोन्स उसको तिनके की तरफ बिखेर दिया था। आदरणीय अध्यक्ष जी, मैं एक आंकड़ा आज बताना चाहता हूं, पूरा देश गर्व से भर जाएगा। कुछ लोगों का क्या होगा मैं नहीं जानता, पूरा देश गर्व से भर जाएगा। 9 मई को पाकिस्तान ने करीब 1000 मिसाइलों और आर्म ड्रोन्स के भारत पर बहुत बड़ा हमला करने की कोशिश की। 1000 ये मिसाइलें भारत के किसी भी हिस्से पर गिरती तो वहां भयंकर तबाही मचती, लेकिन 1000 मिसाइल्स और ड्रोन्स को भारत ने आसमान में ही चूर चूर कर दिया। हर देशवासी को इससे गर्व हो रहा, लेकिन जैसे कांग्रेस के लोग इंतजार कर रहे थे, कुछ तो गड़बड़ होगी यार, मोदी मरेगा, कहीं तो फंसेगा। पाकिस्तान ने आदमपुर एयरबेस पर हमले का झूठ फैलाया, उस झूठ को बेचने की भरपूर कोशिश की, पूरी ताकत दी लगा दी। मैं अगले ही दिन आदमपुर पहुंचा और खुद जाकर के उनके झूठ को मैंने बेनकाब कर दिया। तब जाकर के उनको अकल ठिकाने लगी कि अब ये झूठ चलने वाला नहीं है। आदरणीय अध्यक्ष जी, जो हमारे छोटे दलों के साथी हैं, जो राजनीति में नए हैं, उनको कभी शासन में रहने का अवसर नहीं मिला, उनसे कुछ बातें निकलती मैं समझ सकता हूं, लेकिन कांग्रेस पार्टी ने इस देश में लंबे समय तक राज किया है, उसको शासन की व्यवस्थाओं का पूरा पता है, उन चीजों से वो निकले हुए लोग हैं, उनके लिए शासन व्यवस्था क्या होती इसकी समझ पूरी है, अनुभव है उनके पास। उसके बाद भी विदेश मंत्रालय तुरंत जवाब दे, उसको स्वीकारना नहीं, विदेश मंत्री जवाब दे, इंटरव्यू दे, बार बार बोले, उसको स्वीकारना नहीं, गृह मंत्री बोले, रक्षा मंत्री बोले, किसी पर भरोसा नहीं। जिसने इतने सालों तक राज किया, उनको देश की व्यवस्थाओं पर अगर भरोसा नहीं है, तब शक उठता है कि क्या हालत हो गई है इनकी। आदरणीय अध्यक्ष जी, अब कांग्रेस का भरोसा पाकिस्तान के रिमोट कंट्रोल से बनता है और बदलता है। आदरणीय अध्यक्ष जी, एक बिल्कुल कांग्रेस के नए सदस्य, यानी उनको तो क्षमा करनी चाहिए, नए सदस्य को क्या कहेंगे, लेकिन कांग्रेस के आका जो उनको लिख करके देते हैं और उनसे बुलवाते, खुद में हिम्मत नहीं है, उनसे बुलवाते हैं कि ऑपरेशन सिंदूर, ये तो तमाशा था, ये आतंकवादियों ने जिन 26 लोगों को मौत के घाट उतारा था ना, उस भयंकर क्रूर घटना पर ये तेजाब छिड़कने वाला पाप है। तमाशा कहते हो? आपकी असहमति हो सकती है, और ये कांग्रेस के नेता बुलवाते हैं। आदरणीय अध्यक्ष जी, पहलगाम के हमलावरों को कल हमारे सुरक्षा बलों ने ऑपरेशन महादेव करके अपने अंजाम तक पहुंचाया। लेकिन मैं हैरान हूं, यहां ठहाके लगा के पूछा गया कि आखिर ये कल ही क्यों हुआ। अब ये क्या हो गया है, मुझे समझ नहीं आ रहा है। क्या ये ऑपरेशन के लिए कोई सावन महीने का सोमवार ढूंढा गया था क्या? क्या हो गया है लोगों को? हताशा, निराशा इस हद तक। और देखिए मजा, पिछले कई सप्ताह से हाँ ऑपरेशन सिंदूर हो गया तो ठीक है, पहलगाम के आतंकियों का क्या हुआ, पहलगाम के आतंकियों का अब हुआ तो कल क्यों हुआ? और कल ही क्यों हुआ? क्या हाल है अध्यक्ष जी का। आदरणीय अध्यक्ष जी, आदरणीय अध्यक्ष जी, शास्त्रों में कहा गया है, हमारे शास्त्रों में कहा गया है, शस्त्रेण रक्षिते राष्ट्रे, शस्त्रेण रक्षिते राष्ट्रे शास्त्र चर्चा प्रवर्तते। अर्थात जब राष्ट्र शस्त्र से सुरक्षित होते हैं तभी वहां शास्त्र की, ज्ञान की चर्चाएं जन्म ले पाती है। जब सीमा पर सेनाएं मजबूत होती हैं तभी लोकतंत्र प्रखर होता है। आदरणीय अध्यक्ष जी, ऑपरेशन सिंदूर बीते दशक में भारत की सेना के सशक्तिकरण का एक साक्षात प्रमाण है। ऐसे ही नहीं हुआ है। कांग्रेस के शासन के दौरान सेनाओं को आत्मनिर्भर बनाने के संबंध में सोचा तक नहीं जाता था। आज भी आत्मनिर्भर शब्द की मजाक उड़ाई जाती है। वैसे वो महात्मा गांधी से आया हुआ है, लेकिन आज भी मजाक उड़ाई जाती है। हर रक्षा सौदे में कांग्रेस अपने मौके खोजती रहती थी। छोटे छोटे हथियारों को लिए विदेशों पर निर्भरता, ये इनका कार्यकाल रहा है। बुलेट प्रूफ जैकेट, नाइट विजन कैमरा तक नहीं होते थे और लंबा लिस्ट है। जीप से शुरू होता है, बफो, हेलीकॉप्टर, हर चीज के साथ घोटाला जुड़ा हुआ है। आदरणीय अध्यक्ष जी, हमारी सेनाओं को आधुनिक हथियारों के लिए दशकों तक इंतजार करना पड़ा। आजादी के पहले और इतिहास गवाह एक जमाना था जब डिफेंस मैन्युफैक्चरिंग में भारत का आवाज सुनाई देती थी। जिस समय तलवारों से लड़ा जाता था ना, तब भी तलवारें भारत की श्रेष्ठ मानी जाती थी। हम डिफेंस के इक्विपमेंट में आगे थे, लेकिन आजादी के बाद जो एक मजबूत डिफेंस इक्विपमेंट मैन्युफैक्चरिंग का हमारा दायरा था, जो हमारा पूरा इकोसिस्टम था, उसको सोच समझ करके तबाह कर दिया गया, उसको दुर्बल किया गया। रिसर्च और मैन्युफैक्चरिंग के लिए रास्ते बंद कर दिए गए। अगर इसी नीति पर हम चलते तो भारत इस 21वीं सदी में ऑपरेशन सिंदूर के संबंध में सोच भी नहीं सकता। यह हालत करके रखा हुआ था उन्होंने। भारत को सोचना पड़ता कि अगर कोई एक्शन लेना है तो शस्त्र कहां से मिलेंगे, साधन कहां से मिलेगा, बारूद कहां से मिलेगा, समय पर मिलेगा या नहीं मिलेगा, बीच बचाव में रुक तो नहीं जाएगा, ये टेंशन पालना पड़ता है। आदरणीय अध्यक्ष जी, बीते एक दशक में मेक इन इंडिया हथियार सेना को मिले, उन्होंने इस ऑपरेशन में बहुत निर्णायक भूमिका निभाई। आदरणीय अध्यक्ष जी, एक दशक पहले भारत के लोगों ने संकल्प लिया, हमारा देश सशक्त, आत्मनिर्भर और आधुनिक राष्ट्र बने। रक्षा, सुरक्षा, हर क्षेत्र में बदलाव के लिए एक के बाद एक ठोस कदम उठाए गए, सीरीज ऑफ रिफॉर्म्स किए गए और देश में सेना में जो रिफॉर्म्स हुए हैं, जो आजादी के बाद पहली बार हुए। चीफ ऑफ डिफेंस स्टाफ की नियुक्ति, ये विचार कोई नया नहीं था, दुनिया में प्रयोग भी चलते हैं, भारत में निर्णय नहीं होते थे। हमने, ये बहुत बड़ा रिफॉर्म था, हमने किया और बहुत ही, मैं हमारी तीनों सेनाओं का अभिनंदन करता हूं कि इस व्यवस्था को उन्होंने दिल से सहयोग किया है, दिल से स्वीकार किया है। सबसे बड़ी ताकत जॉइंटनेस और इंटीग्रेशन की। इस समय नेवी हो, एयरफोर्स हो, आर्मी हो, ये इंटीग्रेशन और जॉइंटनेस ने हमारी ताकत को अनेक गुना बढ़ा दिया और उसका परिणाम भी हमें नजर में आया है, ये हमने करके देखा है। सरकार की जो डिफेंस प्रोडक्शन की कंपनियां थी, उसमें हमने रिफॉर्म किए। शुरुआत में वहां पर आग लगाना, आंदोलन करवाना, हड़तालें करवाने के खेल चल रहे थे, अभी भी बंद नहीं हुए हैं, लेकिन देश हित को सर्वोपरि मान करके उन डिफेंस इंडस्ट्री के हमारे जो लोग थे सरकारी व्यवस्था में, उन्होंने इसको मन से लिया, रिफॉर्म को स्वीकार किया और वो भी आज बहुत प्रोडक्टिव बन गए। इतना ही नहीं, हमने प्राइवेट सेक्टर के लिए भी डिफेंस के दरवाजे खोल दिए हैं और आज भारत का प्राइवेट सेक्टर आगे आ रहा है। आज स्टार्टअप्स डिफेंस के क्षेत्र में हमारे 27-30 साल के नौजवान, टियर 2, टियर 3 सिटी के नौजवान, कई कुछ जगह तो बेटियां स्टार्टअप का नेतृत्व कर रही है। डिफेंस के सेक्टर में सैकड़ों की तादाद में आज स्टार्टअप काम कर रहे हैं। ड्रोन्स, एक प्रकार से मैं कह सकता हूं, ड्रोन्स की जितनी भी एक्टिविटी हमारे देश में हो रही है, शायद एवरेज 30-35 की उम्र होगी जो लोग कर रहे हैं, वो सारे लोग, और सैकड़ों की तादाद में कर रहे हैं। और उसका ताकत, क्योंकि इनका भी योगदान था इसमें, जिन्होंने इस प्रकार के प्रोडक्शन किए हैं, और वो हमें ऑपरेशन सिंदूर में बहुत काम आए। मैं उन सबके प्रयासों को बहुत साधुवाद करता हूं और मैं उनको विश्वास दिलाता हूं, आगे बढ़िए, अब देश रुकने वाला नहीं है। आदरणीय अध्यक्ष जी, डिफेंस सेक्टर में मेक इन इंडिया ये नारा नहीं था। हमने इसके लिए बजट पॉलिसी में जो परिवर्तन करना था, जो नए इनिशिएटिव ले रहे थे, वो नए इनिशिएटिव लिए। और सबसे बड़ी बात, क्लियर कट विजन के साथ हमने देश में मेक इन इंडिया डिफेंस सेक्टर के अंदर तेज गति से हम आगे बढ़ रहे हैं। आदरणीय अध्यक्ष जी, एक दशक में डिफेंस का बजट लगभग पहले से 3 गुना हुआ है। डिफेंस प्रोडक्शन में करीब 250% वृद्धि हुई है, 250% वृद्धि हुई है। 11 वर्षों में डिफेंस एक्सपोर्ट 30 गुना से भी ज्यादा बढ़ा है, 30 गुना से ज्यादा। डिफेंस एक्सपोर्ट आज दुनिया के करीब 100 देशों तक हम पहुंचे। और आदरणीय अध्यक्ष जी, कुछ चीजें ऐसी होती हैं जो इतिहास में बहुत बड़ा प्रभाव छोड़ती हैं। ऑपरेशन सिंदूर ने डिफेंस का जो मार्केट है उसमें भारत का झंडा गाड़ दिया है। भारत के हथियारों की डिमांड आज बढ़ती चली जा रही है, मांग बढ़ रही है। ये भारत में उद्योगों को भी बल देगी, एमएसएमईज को बल देगी, हमारे नौजवानों को रोजगार देगी, और हमारे नौजवान अपनी बनाई चीजों से दुनिया में अपनी ताकत का प्रदर्शन कर पाएंगे। ये आज दिख रहा है, मैं देख रहा हूं। डिफेंस के क्षेत्र में जो आत्मनिर्भर भारत की दिशा में हम जो कदम उठा रहे हैं, मैं हैरान हूं। कुछ लोगों को आज भी तकलीफ हो रही है, जैसे उनका खजाना लूट गया। ये कौन सी मानसिकता है? देश को ऐसे लोगों को पहचानना होगा। आदरणीय अध्यक्ष जी, मैं स्पष्ट करना चाहता हूं, डिफेंस में भारत का आत्मनिर्भर होना ये आज की शस्त्रों की स्पर्धा में के काल में विश्व शांति के लिए भी जरूरी है। मैं पहले भी कह चुका हूं, भारत युद्ध का नहीं, बुद्ध का देश है। हम समृद्धि, शांति चाहते हैं, लेकिन हम ये कभी न भूले कि समृद्धि का और शांति का रास्ता शक्ति से ही गुजरता है। आदरणीय अध्यक्ष जी, हमारा भारत छत्रपति शिवाजी महाराज, महाराजा रणजीत सिंह, राजेंद्र चोला, महाराणा प्रताप, लसित बोरफुकन और महाराजा सुहेलदेव का देश है। आदरणीय अध्यक्ष जी, हम विकास और शांति के लिए सामरिक सामर्थ्य पर भी फोकस करते हैं। आदरणीय अध्यक्ष जी, कांग्रेस के पास नेशनल सिक्योरिटी का विजन पहले था और आज तो सवाल ही नहीं उठता है। कांग्रेस ने हमेशा नेशनल सिक्योरिटी पर समझौता किया। आज जो लोग पूछ रहे हैं पीओके को वापस क्यों नहीं लिया, वैसे ये सवाल मुझे ही पूछ सकते हैं और किसको पूछ सकते हैं। लेकिन इसके पहले जवाब देना होगा पूछने वालों को। किसकी सरकार ने पीओके पर पाकिस्तान को कब्जा करने का अवसर दिया था? जवाब साफ है, जवाब साफ है। जब भी मैं नेहरू जी की चर्चा करता हूं तो कांग्रेस और उसका पूरा इकोसिस्टम बिलबिला जाता है, पता नहीं क्या है। आदरणीय अध्यक्ष जी, हम एक शेर सुना करते थे, मुझे ज्यादा इसका ज्ञान तो नहीं है लेकिन सुनते थे। लम्हों ने खता की और सदियों ने सजा पाई। आजादी के बाद से ही जो फैसले लिए गए उनकी सजा आज तक देश भुगत रहा है। यहां बार बार एक बात का जिक्र हुआ और मैं फिर से करना चाहूंगा। अक्साई चीन की उस पूरे क्षेत्र को बंजर जमीन करार दिया गया। ये कह करके तो बंजर है। देश की 38,000 वर्ग किलोमीटर जमीन हमें खोनी पड़ी। आदरणीय अध्यक्ष जी,